Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Christmas week Monday. Can you believe it? Christmas is here. It's upon us. The week is here.
Came quick. It doesn't feel as festive in this room, though, without Vanetta.
The package herself. Vanetta,
yeah,
Vanetta
without her
sweaters on.
We should have put the...
You forgot? It's always tomorrow.
All right, we'll do the sweaters
There's always tomorrow. There's always Christmas sweaters tomorrow. Don't worry. You'll be okay. You'll be okay. Yes, Vanetta's already enjoying her Christmas holiday. She's all packed up, ready to go. Like, she's got all her presents and everybody's good.
Yeah.
What about you?
None. Do we know where she is?
If I knew, I wouldn't tell.
Yeah.
You want to get in trouble like that?
No.
I mean, you know.
No, is she like riding or is she with family?
No, I think I'm not. You trying to trick me? Are you baiting me now? Are you trying to get me?
Well, if you find Vanetta, if you see Vanetta, if you happen to run into her, you send the picture to us. You get
I would send you some swag, but I'm not going to ask for it.
Yeah, but it's like a treasure hunt.
It's like a treasure hunt that nobody wants to do.
Yeah,
that is correct. That is correct. Yeah,
win that. Oh my God.
So you're not ready for Christmas?
Not really. I mean, I need to get a couple more gifts, unfortunately. But I am excited.
In this age of the internet and Amazon,
but it's like, what do I get you?
I don't want anything. You don't have to worry about me.
Of course. This is where, I don't get him anything. I show up. He says, "Where's my gift? Where's my gift? You didn't get me anything?"
It's not entirely false, but I mean, I guess I don't want anything. You know me. I have everything. Anything I want, I get anyway. So I'm perfect. I really am. I don't need a darn thing. I need you to be good and everybody else to do good and peace and love in the world. Hey, I had the wildest dream last night. I think Vanetta asked us.
Omaha. Thank you, John. Thank you. I didn't know if we were going there. I had to get ready for that. I was like, okay, we're 3 minutes in. We're going to do that.
John, I must finish those in my dreams because I don't remember them. There's no cliffhanger in them or anything like that because this one has a cliffhanger to it. I think Vanetta asked us last week if we ever have, like, dreams. Do we remember dreams and stuff like that?
Oh, no, Vanetta was in it?
No. But I had a dream. Maybe somebody who's out there that,
can dissect this for you, tell you how damaged you are?
Yes. In touch with the spirit world or something like that. Can tell me what, decipher what my dream was. I had a dream. I was back in Brooklyn, and I had to take a shower. And so I got the fire department.
Okay.
And a fire truck to hook up to the streets. And I could take a shower under the fire truck. Hot water would come from the engine of the fire truck. And it was $60 to take a shower.
Ooh, so
do you have any idea what this means? Because I woke up, like when you wake up in a dream, and like sometimes if you're having a dream, you don't want the dream to end, so you go back to sleep thinking about the dream. I went back to sleep thinking, please, dear Lord, make this dream end, because this is the weirdest thing.
Do you need a loan or something?
So that's like $60 loan? Maybe, maybe it's $6 million or something?
No, that's like a inflation type thing. Like, I came in, it's so expensive. It's the shower.
No, I had the money for the shower.
Oh, you did?
And they started in one place, and then we had to drive to 35th Street to get it. And one of the guys at the truck was, not 35th Street, it'd be too busy. But we did anyway. You go underneath the truck. Any idea?
Me, I don't know, maybe you did something dirty.
I don't think so. I think I've been a good boy. Of all things being equal, I think I've been a pretty good boy. No idea what it means?
Mikos asks a very good question.
Sure.
So, Tony, you're dreaming of showering with firemen. That's what it is.
Yeah, okay. All right. I could do worse. I mean, man.
I never remember any of my dreams.
Yeah, me either.
I just wake up, I'm like, oh, shoot, I made it.
Yeah, I know. Another day. It's true. Well, last night, I don't know if you watched Last Call. I was watching Last Call a little bit last night. One of the biggest movers of the night was really gold, if you can believe it or not. I mean, gold opened pretty much unchanged, down about $10 from what I can see. It's up $63, up 1.5%. And silver is up 2.5% to 163. So if you're doing that pairs trade, let's kind of get back into trading here for a quick second.
No. I got a couple things that need to be asked. So you had we all saw the picture of you and Tom and Scott.
Oh yeah,
Slappy.
Yeah.
We got a couple people asking about who Slappy is. Slappy's on the trade desk, but he's
he's been on the show a couple of times. He comes in on the trade desk. He is actually Tom's. Was Tom's, I guess I should put it that way. I'll put it up there for you. Hold on one second. There you go. He was, that's Slappy.
We had some comments on the chicken legs as well.
Oh,
I'm a little worried about Tom. Tom looks a little frail there.
Yeah.
We got to give him like a leg press or something.
The pins are better than they've been. Let's get back to Slappy. Slappy was Tom's oldest employee. Slappy was the guy who stood in front of Tom. He was working for somebody else at the time, and Tom couldn't see over him because he's a tall guy. He's about 6'3" or something like that, maybe 6'4". And Tom couldn't see over him, so he said, "What's the guy paying you?" He gave him the number. He goes, "Okay, I'll pay you double." Like really classic. "I'll pay you double. Now go trade in Amazon." So they made a move or Priceline or whatever it was at that time, and he made a move so that Tom could see the screens and stuff like that. So that's Slappy, but he's been with them ever since, like early 80s. And then you got, obviously, you got Mr. Sheridan and Mr. The guy formerly known as...
What was this occasion, though?
It was his grandson's first birthday. So
I was wondering if that's where
yeah, so we really kind of reminisced a little bit because I was at Case's first birthday and he was at yours and Gina's first birthday.
We had that video here when we did the Each One Teach One.
Yeah, I remember.
We had those. They made them digital for me, and you could see like Case like stealing the ball from people. It was pretty reminiscent.
Mine.
Yeah,
my squirrel, Daddy. I want that squirrel. Yeah, she's been like that since the beginning of time. Yes, you're right. But that was his grandson's first birthday, so we were all together for that. It was very good. Very cute. Perfect time for a party. 11:30 to 1:30. Everybody get in, everybody get out. Very, very good. So we did that. But let's get back. One more.
Sure. Because we're going a little off topic. Because
sure,
if you got it, obviously we have the full hour. So if you got questions, throw them in the YouTube chat. You can tweet us out as well. General questions, trade questions. You want to know about the OEX, like Baba is asking here. Anything you got, just throw it in the chat. We'll tee it up, and then we'll get into some trading as well. And I'll give a little recap of what we're going to do for the rest of the day today. We have a bunch of really good content coming your way. But Baba asking how you became a clerk in the OEX pit, and was there a test you did? And if there was like something that you needed to do to get in, other than just show up.
Believe it or not, it wasn't. Remember, it was $600 a month. I guess the
was the seat.
This has become a clerk. He asked for a clerk, right?
Yeah.
This is a clerk. $600 a month is what you got paid.
Okay.
That was your pay.
Okay.
So it wasn't the most glorious job for the best pay. I mean, it was probably at the lower end of an average pay for 1980 or so. And you worked, it was a lot of hours. I mean, the markets opened early and stayed until mid-afternoon, which wasn't bad. But then you had work to do afterwards for about an hour and a half after. So it was a long day for $600 an hour, $600 a month. And then they take out taxes and everything else like that. There wasn't too much you had to do. I mean, it wasn't wheelchair accessible, I could tell you that. So you had to be able-bodied at some point to be able to walk from, because you weren't allowed to run. It's a misnomer. It wasn't really a runner. You walked.
Yeah.
And a matter of fact, if you ran, you got a fine. So you would walk kind of fastly.
Speed walk, yeah.
Yeah, they do like a speed walk kind of thing. Most of the time, it was a friend of a friend, not unlike the businesses that we built here that got the job because they could see the upside of it. So yeah, it wasn't not too much you needed. Test. There was an aptitude test that you would.
Is that the hazing? That's the follow-up question. Was there any hazing on the floor? Was there like newbie hazing?
Yes, it was. I don't know. JJ used to say the traders were like being in college with money. So you can imagine, the type of shenanigans you do in college with your friends and everything else like that. Now imagine you had, basically unlimited funds to do it with.
Yeah.
It trickled down to the clerks. So usually the clerks were the ones that got, if two traders didn't want to make fun of each other, they made fun of the clerk. So they would make you run out, false things or, like you would have to call out the broker's name or something like that. And they would give you, Harry Bear bag of testes kind of name. You know what I mean? Like, something that would make you feel stupid.
What about the gallon of milk challenge?
A lot of the runners would, try to make their bones. Matter of fact, if they didn't have if they didn't know a lot of people there, they would do challenges. We had these, there's this big heavyset guy who would bring in jerky, which was definitely roadkill from wherever he lived out, in the suburbs somewhere. But the traders loved it. And they had this very spicy one. And, how many bags of jerky can you eat? How many? And
you make lines on it.
Yeah, of course. And then, there were windows around the CBOE floor. And, if you could throw an apple and hit the window, and then there would be somebody, there was police or like the narcs. I think actually Frankie in the trade, in the YouTube chat was a floor official. So floor official would come over and say, hey, who threw that? I got to fine you kind of thing. You know what I mean? So he made a lot of friends being that kind of guy. But yeah, I mean, it was a fun time. It was a lot of fun time.
Frankie's saying that's where the pie in the face started too.
That is where pie in the face for your birthday. Yeah. All good old time, clean fun.
We gotta bring back the My OEX
videos and stuff.
We play those every once in a while.
We do. We make them the best of. We got to bring back the ones that we got rid of, like the peeing on the cigar one. It was.
I don't know about that one.
Right, that's what I mean.
Yeah.
So we had.
We have those, John?
No, I'm sure they got rid of them.
We can probably find them.
Yeah, we can play that as a special here.
John, you got nothing to lose, man.
We got time. We got 45 minutes to kill. We can play a special of that.
You got nothing to lose, John. Do it, man.
Yeah,
do it.
Come on.
Yeah. Anyway, it was fun. It was a different time. Let's get to your YouTube shenanigans. Go ahead.
Yeah. Do you want to do the gold silver ratio?
I do.
I was also going to get into the active trader tab.
Okay.
Show that off a little bit, but
I do because I got emails about it over the weekend. Like, how do you figure out what the gold silver ratio is? So it's really quite simple. All you need is a calculator, and you take the gold price. So it's 4459.30, and you divide that by the silver price, which is 69.15. And that equals 64.48. So that 64 and a half. Yeah. So the ratio is now 64 and a half. That's 64 silver into gold, correct?
Yes.
Okay, 64 and a half. So we've talked about this number being 70, 71, down to 69. So we put on at 68. If you put this on at 68 and it's trading 64 and a half, well, you're down 3.5 points on that spread, which is really $3,500, correct?
Yes.
I mean, it's a big number.
It's a big number.
It's a big number. But this is about as low as it's been. And I know we've got reminded that the 100-year average is 45. I don't know how far out you want to go to figure out what the average for this is, but this is about as low as I've seen it for the last decade or more.
Yeah, so they I'm trying to get the.
Yes.
I think you can do it with just.
What are you trying to do? Talk out loud?
I was going to say there's all sorts of, like, if you want to look up the chart of the gold silver ratio, you can get this on ChatGPT or on many different website. It's all over the place. I have been told the 40-year or the 100-year average is around 40, which goes back quite some time. But
40, I thought it was 45, but go ahead, yeah. Mm-hmm.
In modern history, this is certainly the lower end of where it's been trading.
Yeah, I mean, listen, Tom and I were trading this. It was 105, 4, 3, 2, 1. You know, it worked its way up, and we said, you know, we've never seen it. The disparity so great. Now, is that a great trade? Yeah, if you were writing a book about it, it was a great trade to say that it was a good time to sell it. Now would be a good time. Right, you have to hold it.
And not add to it and not trade it. Those are the hard things to quantify in real time.
Right.
When you look at a chart and you look back and you say, oh yeah, when it got to 110 or 100 or whatever, you know, that was a great trade.
Yes.
And then you got to hold it through the pain, not add, not take stuff off, not try and scalp it.
Yeah.
It's tough.
Very tough. Getting back, switching a lot of gears this morning, getting back to my dream, it means you believe in your own resourcefulness and you're ready to tackle all the challenges that pop out of nowhere.
Who told you?
The year. It's about anxiety during the busy holiday season and putting yourself at ease that you can figure out anything because you always have.
I don't
love, Mom.
Oh, that's good.
You don't think that's what it means?
Oh no, I mean, sure. It's your dream. You can make it mean anything you want.
I mean, just like it's my body. I can wash it as fast as I want. It's my dream. I can make it happen as good as I want, right?
Yeah, I don't.
You all right?
I'm good. All
right, so that's how you do the gold silver.
Yes.
Is there any other pairs trade that you've been looking at?
Yeah, so I wanted to actually get into, because we got long so oil. I don't know. You want to give a quick little market update just right now? And then
Sure. So even the S&Ps are up 28. They opened up around 5 to 10 handles last night, and then slowly upticked all night long. Nasdaq up 167. You can see that the Santa Claus rally is here and in full force over the last couple of days. Russell up 15 and change. Dow up 23. Volatility in 30 cents. Look at this chart on volatility. I don't know how. It is unbelievable.
Unbelievable. And I mean, assuming we're going to chop around here, it's probably going lower.
Assuming we chop around here,
we might start the year with like a 15 handle vol.
Oh, I hope not. 17. I mean, I hope. I mean,
you got a bunch of holidays. You got a bunch of days off. A bunch of low volume days.
Yeah.
Assuming there's no like big news event or something that happens, I don't know why vol would stay here.
I tend to agree with you, but I think the 16 handle on the VIX futures.
That's been the spot.
And I don't think they'll go much lower than 16 and a half or something like that. Even if the market rallies going into holiday weekend with the market closed, usually volatility stays bid and you don't get paid.
I don't think you want to see it rally all that much. I think you want to stay like right here, very choppy.
Yeah.
That would keep a floor on vol. If we continue higher, that would smash it.
Yeah, you would. Yes, definitely would think so. I mean, you know, we've been looking at like what's the expected move for the day in volatility. If you look at the ES, it's 22. If you remember last week, it was in the 30s.
Yeah.
So it's 22. It'll probably expand a little bit before the opening here, but 22. Bonds down 7. They've been probably the most sideways chop action of any market right now, trading 115.03. I think every opening that we've had, they've been trading just a little bit over 115 and then rallied from there up to around 115.20 and then sold back off to right where they are now. Bitcoin caught itself a little bit, son, over 91,000, up 21.50. I don't remember seeing them over 91,000 for, well, it seems like about 6 or 8 days, but it seems a lot longer than that. Trading 90,600 and change. We'll see if they'll be able to keep this price action to the upside strong enough here, because usually we've been selling off every time we've gotten here. Up 2.5%. Ethereum up $26, which is just about 1%. Oil, you've got some oil long delta. Oil up almost 2%, 57.72. That's about as high as it's been, I don't know, in the last week plus. Even you, who usually early with your directional biases, probably has some profits in there.
It's the 3-day rule. You know this. The 3-day rule. But this one was on time. If you remember, I had the...
This one was on time? On time 3 days or on time after you put the trade on?
No, it was it lined up perfectly with the expiration of my previous contract because I was long oil going into the weekend. The previous contract expired, and so I got back into it early last week. So that was my 3-day window.
Okay, that's it.
So it ended up working out.
Good.
But yeah, so I'll jump over to my platform if you want to take yours off.
Yeah, sure, go ahead.
I wanted to show and this was something that Quentin mentioned to me the other day, was like, yeah, we should do like something on the active trader. And I was like, that's a great idea. We don't use it all that often. They have a new version out on the platform.
Yeah.
So when we jump over to the platform, when you go to the trade page, and my view, I kind of condensed it a little bit for you. So my watch lists are on the left side over here, but just to give you an idea, like over here. But I
just so you can make the screen bigger, everybody can see it.
So on the trade page, which is on the left side menu here, if you toggle down to the active V2, there is another active platform, but that is the old one. This is V2, weaning everybody off of that. It's much more intuitive here. So from here, you can actually trade directly on the ladder. And so I'm long, or I'm trading MCL. I have it here. If you type in, whatever contract you want to trade, NASDAQ or MNQ. You can type it in here, and it'll change it for both of them. So you'll have the ladder and the chart there. It'll give you your position. If you have a position on it, it'll tell you your P&L and the spots where your average is at. But so with MCL, when we type it in here, from here, it's really, really easy to trade around this. So you can you can do the one-click trading, which I tend to use. Obviously, you got to go through this little quick disclaimer here. And it allows you to put in orders just with one click. So each one of these orders are sell limits that are above the market. You can flatten out your position. You can cancel all of them here. So all these are like one-click trading. It's really, really awesome. Now, at the bottom here, you can see I have penny-wide markets here. You can zoom out a little bit and make these wider. So if you're trading something like the NASDAQ or the micro E-minis and you want to have a little bit more room to move your stuff along, you can do it that way. But they all reflect on the chart here. So you have your position here. You can put in orders above or below the market, which is awesome. You can flatten them out with one click. You can close them with one click. You can clear all with one click. It's really, really cool. So really nice feature there. You can change your order quantity from here. So if you're a non-Johnny like me, go to 10, 25, 50, even 100 contracts here and do all that. So I wanted to get out of at least one, so we can just click the sell market, and that'll just do me one contract. So you can do whatever and that was the fill. I'm out of one contract.
Sure.
So
sure.
And that's a market order. Obviously, with futures, it's pretty much penny wide. So
yeah, it's one tick. Unless you're going to put something in on the offer or in on the bid, if you're trying to buy. I mean, market orders are okay in a steady market like we have right now. I wouldn't want to use a market order when even the S&Ps or oil or anything else like that is moving, 10, 20 cents at a click.
No.
You'll get lucky sometimes, and sometimes you won't be as lucky with your fill, but I would rather put it in as price. Even if you put it in lower, like if you're trying to sell and you put in 2-3 ticks lower than it's trading, or if you're trying to buy, you put in 2-3 ticks higher than where it's trading. I just wouldn't want to use a market order.
Agreed. Here, for the purpose of my little demonstration.
Yes.
And
it was very, it's a very orderly market right now, too.
Yes.
So
Yes.
very easy to put in a market.
Do we put another one in like above the market? We could say it like
Sure, do whatever you want. Yeah, I mean, you're closing, right?
Yeah.
Yeah, I
So
mean,
we
this
could
is a high class problem. You're taking profits. It's easy.
Yeah. I'm just trying to show the functionality here, so you can like dynamically change all these on the chart here. So it's very, very easy to drag and drop all these.
Yeah, it's very cool for those who like to actively trade futures.
Yes.
And the close all button is pretty cool. I mean, I know people have asked for a close all button on option strategies too. Everything would have to be put in at the market on options, and you wouldn't want those. You'd be very you'd be unhappy.
Yeah,
with your
big red button.
Yeah, but in futures, like you said, it's basically one tick. It's pretty easy to do.
Yes.
All right. Good job out of you. Hey, listen, let's take a quick break and we'll go to confirm and send right after this. But before we do, I'll talk about it afterwards, but we have that.
Very nice.
We have an OEX video for you.
And can we just say that this is us do not tell mommy and daddy video, okay? This one has...
I'm not sure if this is as bad as I remember, but we'll see.
This is not that bad.
This was not that bad. This is a good one. They didn't find the one with the cigar and stuff like that.
There's other ones that we're not going to show.
Are you sure, John? It's the holiday season. We can do whatever we want here.
We don't want to scare new mommy and daddy if new mommy and daddy are watching every once in a while. But we'll put this one up, and I can explain to you the story about it. The thing about it is you'll see a young bat here. John, what's the year on this one? Does they have it on there?
Not too sure. At least almost 10.
Probably 10 years, yeah. Well, go ahead. Check it out. Let's see this one. My OEX. Is that this one?
This is Tony Batista for tastytrade, and you're listening to Trader Confessions.
That's the old CBOE. That is not Slappy.
Yeah, I don't know how you feel about vanity plates. Personally, I don't really care, unless they hit home. You see, I went into the parking lot and I see somebody's car, really nice car too, like pristine. So I see that the license plate says My OEX. What do you mean, My OEX? I traded in the OEX. I mean, there's 400 or 500 guys and gals standing in that pit, and it's his? I gotta find out who this tool is. So I go into the pit, I ask around a little bit, I find out it's this guy, Lerner. My God, what an anal kind of guy. I go, Lerner, that's his car? I go, I know what I do.
I didn't mean that,
Tomorrow
Lerner.
morning,
It was
if his
just for
car's
the
parked
video.
there, I'm gonna steal his license plate. Sure enough, I drive down that morning, and there's his car. So I go to Walgreens, I get a plier, I get a screwdriver, I take his license plates off, I bring him into the pit, I climb the scaffolding, and I put his license plates right up on a screen where everybody can see him. Lerner comes into the pit, and everybody's starting to yell out, My OEX, My OEX. As soon as he makes a trade, he looks up at the screen, and there he sees his license plate. Now, he wasn't so annoyed about the license plate, but he thought somebody had messed with his car. Man, was he annoyed. I don't think I saw him for a couple of hours after that. I don't even know if he came back for the rest of the week. My OEX. My OEX.
Now, after that played originally, he would write me. He'd actually write Tom more than he would write me. And he would say, Bat's a real asshole. Okay? Because it's a true story. I mean,
how high was the scaffolding?
15 feet. Okay. It was the screens. If you go to the old OEX pit, it was the screens. I put it at the bottom of the screens. It didn't have to climb up that much. Really, I only had to stand on top of somebody's desk, like one of the quote reporter's desk in the back there, and then like attach it with some wire and stuff like that. But he is a nice guy. I hope he's still alive. I mean, he's a nice guy. I would say he was a nice guy. Very nice guy. Good trader. Just so happened that he was the victim of one of the stupid jokes that we would do as traders. So
that's good.
So I apologize, and I apologize for having that out there, Lerner. You were a good man. Never did anything to harm me, and I apologize. I would buy you dinner if I saw you again. All right, let's take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P's at new highs, up 31. Confirm and send next.
This is Tony Batista for tastytrade, and you're listening to Trader Confessions. I don't know how you feel about vanity plates. Personally, I don't really care, unless they hit home. You see, I went into the parking lot and I see somebody's car, really nice car too, like pristine. So I see that the license plate says My OEX. What do you mean, My OEX? I traded in the OEX. I mean, there's 400 or 500 guys and gals standing in that pit, and it's his? I gotta find out who this tool is. So I go into the pit, I ask around a little bit, I find out it's this guy, Lerner. My God, what an anal kind of guy. I go, Lerner, that's his car? I go, I know what I'm gonna do. Tomorrow morning, if his car's parked there, I'm gonna steal his license plate. Sure enough, I drive down that morning, and there's his car. So I go to Walgreens, I get a plier, I get a screwdriver, I take his license plates off, I bring him into the pit, I climb the scaffolding, and I put his license plates right up on a screen where everybody can see him. Lerner comes into the pit, and everybody's starting to yell out, My OEX, My OEX. As soon as he makes a trade, he looks up at the screen, and there he sees his license plate. Now, he wasn't so annoyed about the license plate, but he thought somebody had messed with his car. Man, was he annoyed. I don't think I saw him for a couple of hours after that. I don't even know if he came back for the rest of the week. My OEX. My OEX.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Nicky, we are back, son. You know what that means. Time for a little more Tasty Live with Confirm and Send. And before we do, let's take a quick look at the market.
This is Tony Batista from Tasty Trade, and you're listening to Trader Confessions.
Is this a joke now, John? I mean...
One more.
John? You gonna play it again?
No, it's a different one. One more.
I'm
okay,
trading
good.
in the pit, and I have been sick for like 3 days, and I'm farting, I'm killing people behind me. I mean, it's like death. Finally, Boo Boo, he like gives me a little tap and says, "Hey, Bat, do me a favor. Next time you fart, go down in the pit and crop dust. What that means is walk down in another area.
Which is where Lerner used to
so they
stand, by
smell
the
it.
way.
So I go, hey, boo-boo, I got one brewing. He goes, go down there and crop dust. So I walk down the steps, I crop dust, I start farting. Guys are going nuts. Flip is saying, oh my God, I can taste it. It's disgusting. It's the worst thing I've ever tasted in my entire life. I'm laughing my ass off. I walk up the stairs, and as I walk up the stairs, I pick up my leg. I hadn't farted. I pooed on my ankle. I kept walking right out the pit to the gym, took a shower, stole somebody's sweatpants, went back into the pit and started trading. That's my pooing on my ankle story.
Those are the videos we used to make. That's pretty early on.
Yeah.
When Tasty Trade was.
Oh my God. That's so good.
Yeah. Yeah.
That's a real classic.
Crop dusting was a thing that we would do in the pit all the time.
Yeah. I imagine. Just a bunch of dudes just
98% dudes. Yeah. Interesting part about that video was that was filmed on the roof of our old place.
Yes.
The original studios that we had, which was right next door to a modeling agency.
People like the I got one brewing.
Yeah, well, that's true. It was right next door to a modeling agency, and they would use their rooftop because it would be very sunny and stuff like that to take pictures up there. So It was a very popular.
And that's why my parents got divorced.
Contributed. Definitely contributed.
Part of it.
Contributed to a lot of that. Yes. Anyway, yeah, that's a good one. That's a. Well, we had this young lady, Sarah, who was out there with her ideas. Loved them, but she was out there with ideas, and she was the one we should tell these stories, and she really framed them pretty good. Anyway, yes.
So good.
Yeah. People writing it. Anyway.
That's a good one.
Yeah.
That's a good one.
Been doing this for a long time. I haven't changed too much, I don't think, with my attitudes or anything else. So what you see is what you get. Let's talk about the market before we get to confirm and send. Nothing's changed too much since that short break. Even the S&Ps are up 28, NASDAQ's up 159. More importantly than that, what do you think about the market today? Well, we've been saying chop around. I guess that's pretty good. I mean, I
don't think we'll go much further from here. I think we'll be wrapped around 6,900. I think you probably have the ceiling at 7,000. Maybe you get that at some point in the next couple of weeks going into the new year, just so you can get your 7,000.
I said 7,000 was out of the question for 2025.
I know, but now it's like low volume and vol is so low, and there's like nothing on the docket. I could see us being up 20 to 30 handles for 3 or 4 days, and you're there. Like you get today, tomorrow, and then is Wednesday a half day or is it a full day for Christmas Eve?
I would say I don't know.
I will look.
I'm going to guess. I think it's a half day. No, full day, and then Friday's a half day. I
know that we're
closed.
We're closed.
We're shut down.
Let me see. Yeah, it's an early close.
On
so
Wednesday.
It closes noon our time.
On Wednesday?
On Wednesday.
And Friday's a full day?
Friday's a full day because you can't have the 48 hours.
Right.
So,
can't be closed more than 2 days in a row.
Yeah. So Friday will be full day. So we have 3.5 days this week. You get 25 points on each of them.
Yeah, in one direction, but that's what's been happening the last couple of days.
So, I mean, I could see that being the case going into year end. You get up to 7,000, maybe you sell off a little bit from there, and you somewhere in this 6,900 to 7,000 range.
I like your 6,850. That's what I'm going with.
I like that.
And that's what you said, not me. We didn't even talk about Anthony Joshua, Jake Paul, or anything like that.
Did you watch that?
I did. Did you?
I did.
What'd you think?
I actually...
I have my thoughts. What do you think?
I still think it was kind of rigged.
Oh, I think definitely.
Yeah.
Go ahead.
But he got whacked.
He got whacked. He got
whacked. I mean, that was real. That was he got whacked.
Oh, it was a real punch.
Yeah,
I mean, it was real. He could have had 50 of those punches.
Oh, yeah.
And I could not stand that jab. He was throwing that jab, and if you watch the videos, it's about 3 feet. I mean, legit, like 3 feet From his face, it looked so bad.
Yeah, it was very clearly. It was very clearly.
He could have done that in the first round.
Yeah.
And probably finished him in the first round. Yeah. Same way.
I should have sent you my bet, which was over 2.5 rounds.
We did 3.5. But Lucas and I sat there over 3.5. Yeah, because 3.5 was 105 or something.
I did 2.5 and then Joshua by KO.
Oh, we didn't do the Joshua KO.
Do the little parlay.
Yeah. Oh, nice. Yeah.
Should have sent you that.
Very good.
But you had to think it was going to go a couple.
It had to go a couple. That's exactly what I said. They're going to want this to go at least 3, 4, 5 rounds.
It can't be 30 seconds in and
it can't be a real fight like when Tyson would come on and finish somebody in 45 seconds. Yeah, no.
They couldn't do that, but I now that it's free, it's a little
and now it's free, I don't care either. It's entertaining, almost like WWE kind of stuff. Yeah.
I won't pay for.
No, I won't either.
Any of those.
I agree. I'm with you there.
Yeah.
All right, good job. All right, let's get to confirm and send. I'm so sorry, John. Appreciate it. Monday, December.
I got a couple extra ones from the
YouTube chat.
Yeah, from the YouTube chat that we can go over too.
Okay. Do you want to get to those first, or you want to get to those after?
Sure. Let's do those first.
Okay, go ahead.
So we had a question from Dexter asking about natty gas futures and saying, we often say that the product that it's difficult to trade, but they're seeing juicy premiums and like a relatively low buying power. What am I missing here?
You're missing how big the moves can be in nat gas, and you're missing the buying power is relatively low today now, but can grow as you get closer to expiration, which is within, if you're doing the 36-day options, within 36 days. And if it gets in the money or near the money, your buying power is going to grow also. Mm-hmm. You look here on the volume of the options, and not a ton. You're looking at single digits here. Let's go to open interest. You'll see open interest is huge, especially on the put side. I just think it's a big product for most retail investors.
And the dynamics of it are a little bit different than a lot of other products when you trade across the curve. And so you kind of get, when you're looking to manage a position or roll or adjust or do any of that stuff, natty gas is one where the curve and how it trades into the future can be vastly different. And so, if you're trading E-minis or even if you're trading oil, the contango or backwardation that you typically see in oil, you typically see it's more flat, right? Natty gas, you have these big, one contract's trading at 3.8, the other's at 4.2. And so it kind of screws people up with the rolling and the adjusting, and the seasonality of it is another product. I mean, there's just a lot that go. Natty gas is a very unique product, and that's why I think that's the reason we say that it's difficult to trade. Is because it's so unique.
And it's 10 times larger. It's like trading SPX. If you're not trading SPX, you probably shouldn't be trading nat gas, meaning all your trades are in SPX. I don't just mean the 0 day that you're doing. Like, if you're a 10-lot trader or more, then maybe nat gas is something you should trade. I mean, if you sell something at 0.10, that's $1,000, not $100 or 10 cents.
Yeah.
It's $1,000. And if it goes to 0.099, then that's $10. It goes a full point lower, that's $1,000. It's a big product. You certainly can do spreads in there if you want to. They trade, relatively cheap. They're $half wide strikes in there, and
you can do spreads.
You could do spreads.
For most people, I think that's good enough.
And nat gas on its butt down another 0.03, which is almost 1%. Near lows. So you certainly, I would be spread in there. That's all.
Yeah. That's all. And to that point too, there was another question about just futures. and which expiration to choose. And so when you're looking at futures, the current active contract is always going to be in this like dark blue, right? So you'll see the last price here. That's the contract price that it's trading at right now. When you go further out on the curve, you'll see these kind of grayed out or dulled out expirations. And these are further out contracts, right? So these contracts can be traded now, but they are not the active contract.
Right.
So these will come in the next, be the next contract up. You'll see it trades at 69.68. It's not that this is more valuable of a contract. It's just that there is a dividend coming, and so you have to
dividend and cost to carry.
Cost to carry, and so that's all adjusted into the price of the futures. So when you're trading futures, the expiration choice is to be in the active contract. I mean, that's where you want to be. In terms of these expirations, they all settle to the same contract. So you're trading the same contract at all of these expirations. They're all just different expirations. I mean, typically looking at like the AM settled options, those are the standard, expiration options, but these are all relatively liquid. I mean, you'll have more liquidity on.
Ooh, that's your oil at 58.
Oh yeah, we put that.
You put that in when you had on the active trader.
Yeah, on the active trader
before the other break.
So we got oil rallying a little bit. Wow.
Yeah.
So all
now
these
you
are
closed 100%, right?
Yeah, I'm out. I actually have a put spread in CL too. I was debating if I was going to close that too.
You could wait till the opening if you want to.
Yeah, we'll wait. We don't have a rush. But so with futures, those, all the contracts that are Friday expirations are going to typically be a little bit more liquid, end of month type contracts,
more than
quarterlies,
more than typically. I mean, active. Here, I put up the ESM6. Anybody can do this. You can see the code for each month. This is M6/ESM6. The computer is going to default to the front month, which is trading at the H6. That's the month H. But you look here, you've got 132 futures trading, and the markets are almost $1 wide. Why would you want to trade anything? We have almost 100,000. Even the S&Ps have traded, and the markets are one tick wide. So that's the reason why you trade the front month. Good to go?
Good to go.
All right, let's go.
Yes.
First
and
question.
If you got any other questions, you can throw them in the YouTube chat. I'll try and monitor those.
Let's go to the first question, please, John. Monday, December 22nd. Why does gamma risk become more dangerous near expiration, and how can active delta hedging both help and hurt performance in this scenario?
So gamma risk is the rate of change of an options delta, and it gets more volatile as you get closer to expiration for near at the money options. So you're far out of the money options, assuming, obviously have a high gamma number. And if you get a big move, those can be, a big deal. But really, it's for at the money options. And the risk is really the, with expiration coming up, the option is going to be either 0 delta or 100 delta. And as you get closer to expiration, that swing becomes tighter. There's not much middle ground. And so if you're at the money and you have an option that it's going to be the difference between 0 and 100 shares of stock is why this whole thing is something that we avoid. And especially into expiration, where you have expiration risk, the stock can move after the option market closes, which exposes you to that risk. And if you have an option that, expires out of the money and is 0 delta, and then the stock has an earnings announcement or there's a binary event or whatever, and the market moves in the after-hour session, that option can go from 0 delta to being, 100 shares of stock in either direction, short stock or long stock. And so that's really your risk, is the gamma risk is that concept.
But you know what? We've gotten more questions about gamma risk because volatility is low and everybody, all the pundits or somebody's going to talk about, you're trading options, you have all this gamma risk by selling options, blah, 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 all this stuff. If you stay mechanical, if you follow our mechanics, we have mitigated most of this risk for you.
Yeah.
You stay small on your size. You roll at 21 days. You don't have any gamma risk. Yeah, volatility can expand. Yeah, volatility can contract, but you don't have that gamma risk at the end when it moves so big into your positions. You're worrying about something that doesn't need to be worried about if you follow the mechanics that we've laid out for most people. Now, you can skew it and change it for yourself for your own risk parameters, and then you can worry about gamma risk or use gamma risk to your advantage. It doesn't matter to me or anybody else except your own P&L. So tread lightly, go at your own risk, and if you're mechanical, you don't have to worry about any of this. Anything that anybody comes up with, you really don't have to worry about because you've mitigated that risk to the best of your ability. Remember, we're taking on risk so that we can get a higher rate of return. Always talked about, if you don't want a higher rate of return, just buy SPY or just buy bonds and you'll have whatever the market does.
And as for the delta hedging, I mean, in practice, you probably need to be, you can't be trading one contract options to be considering delta hedging. Like delta hedging is something you would do if you are trading.
Delta hedging if you do an earnings play and earnings go well outside the expected move if you're selling premium, or you go well outside the expected move and you're long premium, then you can delta hedge because you're basically taking profits if you had it one way, or you're looking to mitigate losses if you have it another way. Other
you
than
can't
that,
delta hedge on a 0-day SPY option. It's just not like, I think that, again, it's a very buzzy question.
Yes.
Like I think, and we do get this, quite frequently.
Yes.
You're trying to do too much with this.
Yeah. Yeah.
If you're really worried about all this, just like trade SPX because it's cash settled. And even though you still have gamma risk in concept, there's no share risk. Like everything settles to cash.
Right.
So if that's your worry, then trade SPX.
Very good.
Next one, please.
Next one, please.
How do liquidity constraints affect strategy selection, position sizing, and exit planning? And when might an options trade be inferior to trading the underlying directly?
How do liquidity constraints affect strategy selection, position sizing, and exit plan? Well, my position side, let me try to break it up here. So what they're talking about is, I'm going to say that they're kind of going on the fringe of the rules and trading something that's not that liquid. Now, how do I know something's not that liquid? It's really just the width of the bid ask of that option. Now, let's be honest. If there's no trade in something that's 20, 30 cents wide, and there's very little open interest, there's no harm in trading that option or that option spread, but you're not going to get as liquid a fill, meaning we only have 1 or 2 or 3 liquidity providers looking at that. You don't have 10, 15 liquidity providers looking at that. It's not that active. There's not that much opportunity for them. The stock is probably wider, so there's not that much opportunity for them to hedge the position. So they're going to want more of a theoretical hedge on the trade they make. Now, nobody has any advantage, but just theoretical edge at that moment. So for me, when I'm looking at this, I realize that, if we're around a 30 delta and you're doing 1/3 the width of the strikes, you're going to get around $3, $10 wide, you put in a 305, you'll eventually get filled. You might get filled when the spread is actually worth, 310 or 311 or 307, but you won't get filled when it's worth 305 because there's nobody else competing for that order. Position sizing, I usually stay the same. Now, if you're more than a one contract trader or less, if you're only a one contract trader, that doesn't mean anything. You're always going to do one contract. But if you're a 10 contract trader, I usually break it down into thirds. So if I'm a 10 contract trader, I would do 3 contracts and something like that. And then at 3 contracts, it doesn't excite me as much as having 10 contracts on. And then I usually default to not making the trade. Like, it's my own little way of saying, like, why do I want to have this stupid little position on? It's not going to, even if I'm right, I don't benefit from it. If I'm wrong, it just becomes like a nuisance to me. So that usually makes me not make the trade. And the exit planning is exactly the same on anything else. So for me, I usually default, and I'm pretty good about this, from abstaining from those kind of trades.
Well said.
Let's go. All right.
Yeah.
Next one, please. What is pin risk? It's an easy one.
That's an easy one. So it just refers to like pinning a strike at expiration. So I don't think about this all that much. I mean, you can use round numbers as kind of like your spots, but really it's in reference to an option being pinned right at the close at that specific number. And so if you're long or short that, you have pin risk. And you know, it's most applicable for short options, but even if you have a long option and it expires in the money by a nickel or 2 cents or something like that, most people don't really trade with the idea to take the shares at that price. Yep. And so your pin risk is really in reference to being right at the money at expiration, holding that option, and then having that option, you know, turn into long or short shares via the exercise or assignment because you're right at the strike.
Very good. Next question, please.
Why does increasing vol, so we're talking VVIX, matter for option pricing and risk management, and which strategies are most sensitive to it?
So I'm going to throw this. I'm going to ask. I hate when people ask a question to answer a question, but I'm going to do that here.
Sure.
Why are you worried about something that you can't trade and is just indicating something that you can already see when you're placing your trades? Let me explain what I mean. VVIX, there's no bid, there's no ask. It's just a number to tell you what vol is doing on other volatility products. But you see that in the IV rank that you have in anything that you're trading. If it has a high IV rank, then if you were to look at the volatility on those options, you would see that it was great, high. And if IV rank is low, then it's going to be low. So right now you have the CBOE VIX of volatility, VVIX, trading at under 84. I'm looking here. Now, if you look at SPY options, you've got an IV rank of 12. You knew it was low already.
Yeah.
So what are you looking at? Maybe you look at it in a different way.
Yeah, I mean, so if you've never looked at VVIX, so VVIX, it's a non-tradable index. It's the volatility of volatility. So it looks at the volatility in the VIX options. So it gives you, it's a derivative of a derivative. So it is not directly tradable. What it can kind of indicate, or at least when I'm looking at VVIX, which I do add to my volatility watch list, which I make my own. I put all the volatility futures in there so you could see the curve along the way as well. In short, it tells you if fear is high or low. And so, you know, when you typically now you are going to see volatility get smashed as well. I mean, they move in the same direction, right? But it kind of gives you an idea of if the volatility that you're seeing is projected out into the future. A lot of times you'll see, you know, the VIX go up a point or 2 points or whatever, and volatility really won't move. Kind of an indicator that nobody's really that fearful of this movement. And so it's another product that gives you a little bit of context to what's happening in the market. Like you said, like when you look at the IV rank of SPY, you know that, you know, the VIX is low. Like that's there's an easy correlation there.
Very good. Even the S&P's up 31 change, staying bid. Next question, please. Why do correlations often spike during market pullbacks, and how does that change the effective risk of an options portfolio?
So we did a study on correlations. What was that? Was that last week?
I believe
that's
so.
in my option jive for today. But typically when you have volatility, it's everybody's selling, everybody's buying. That's the sort of thing that you have when you have a high volatility event. And so, you know, when you typically have bigger moves to the downside. And so it's kind of everything all at once. Whereas to the upside, you can kind of play the correlation game. You know, you have stuff that you know isn't as correlated to the upside as it is to the downside. It's kind of, you know, just the expression that, you know, everything goes to one when you have like a downside move is because, they're selling everything. They're not just selling equities. They're selling gold and silver and everything. It's a liquidity crunch.
Very good. I don't have anything to add. I think that looks good. I mean, I think the only thing you can add is that, usually volatility is going to spike in those ETF type products that mirror the market, SPY, IWMQ, SPX, NDX, those kind of things. If you look at volatility spiking on the way down in NVIDIA or IBM or Palantir, you're going to see the opposite. So it really is where the perceived risk of a position is. So that's why volatility in indexes usually spikes when markets go lower, because everybody's looking to protect the downside on other positions that they have. They go to the major indices to get it there. Why does Theta accelerate? Is it my turn? Your turn to read?
I think it was my turn.
Go ahead.
The non-linearly.
You have to do that one. Yeah, go ahead.
Near expiration, and how should that influence the decision about holding, rolling, or closing positions? So talking about Theta, not being linear across the durations, and should you do anything about it, and does it play into your thinking?
Well, I mean, this is probably a lot of the reason, even if you don't mention it, why you do a lot of diagonal spreads when volatility is low and you want to get directional. You usually don't stay in 1 month. You go multi-month. And what you're trying to do is take advantage of the low implied volatility, the low Theta acceleration in the back month that might be relatively low. Take advantage of the high rate of Theta change in the front month. That's exactly what you're doing. You're trying to sell time in the front month that's going to expire faster, and you're trying to buy volatility in the back month that is going to hold premium. Again, it doesn't. How or what happens is irrelevant to me. It's what strategy are you going to use to benefit from that thesis. That's what I've always said on this show for the last 15 years. I love the high-level discussion about options and volatility and Theta on it. But at the end of the day, what are we going to do? What strategy are you going to do to capture that discussion? And one of the ways is by using a diagonal spread. There are many ways, though. But ratio spreads, another way. Anyway.
Yeah. I mean, Theta is obviously something that we trade around, and that we understand what side of the decay curve we are on. But I think, hyper focusing on Theta is kind of missing. Like, I think you should understand your delta exposure and the strategies that you're using, more so than just the hyper fixation on this Theta decay number, which, it's so dynamic. It changes with volatility. It changes with time. It changes with, depending on what your delta exposure is and what your strategies are. Are you more static delta versus, dynamic delta positions? Like, all those things are going to factor into your Theta number. What expirations are you trading? Are you trading 0-day stuff? The idea of Theta, you should understand the concept and why we are on the decaying side of that. But hyper fixating on that number is gonna keep you flustered, because it's gonna change so much. Like, and especially if you're doing like 0-day stuff.
Yep.
It's gonna change your whole number.
Let's take a quick 90-second break and come back, as even the S&Ps make new highs, and we've got an option job. I've got 11 slides for you here. It's almost like a best of kind of thing.
But there's a couple title slides. So it's not as...
Oh, not as deep as...
Yeah, it's not a deep 11.
As 11.
It's like a 7 or 8.
Got it. Got it. Okay.
A normal one with a little extra.
Well, if you were 8.5, we'd probably be married by now. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with an option jive. Oof, getting tough in here.
Jesus.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It's options. Jive.
Niggy, we are back, son, and you know what that means. Time for a little more Tasty Live with an option jive. Best of 2025, part one. Oh no, there's more than one.
Well, we do one of these every single day for 250 some odd days. 252 trading sessions. Oh, you didn't like that one, John? Come on. So we could get at least 10, right?
At least.
So let's do it. All right, so the best of part one.
Beautiful.
Cool.
Let's do it.
So the first one we put on here is navigating capital allocation and buying power reduction. This was in February of this year. And so, what we talked about was obviously buying power. Some traders are curious why buying power in their naked positions, such as short puts, short calls, strangles, can suddenly change in buying power, often increasing, even when the underlying price stays the same. And so there's a lot of factors that go into buying power, from volatility to time to what product you're trading. Futures have a whole different set of rules that go towards their margining requirements. But aside from stock movements, the next big reason for the buying power fluctuation is the increase in implied volatility. A quick spike in IV can boost the option premium, which in turn raises the buying power. And we give you an example here on this next slide. So we looked at NVIDIA, and the NVIDIA example demonstrates how stock movement and changes in implied volatility affect daily buying power fluctuations. And this was just a one standard deviation strangle in February on NVIDIA. And so we looked at the stock price, and obviously there was a big move in the stock, which contributed to, is part of the reason why volatility expands. IV doesn't just expand out of nowhere. It usually happens on some sort of event or a big move in the stock. But you can see the margin requirement, the buying power requirement, increased into this move, and that's a function of volatility and price as well. As typically when you have a stock that goes up, margin requirements will also expand because all the numbers in the calculation get bigger, right? The stock price is a piece of the margin requirement calculation, and when that piece goes up, it's going to increase the buying power. In this case, NVIDIA went down, but the implied volatility went up by so much more than that function that the buying power increased along the way. So you should certainly keep in mind that buying power can and will change. You can't really play for this big of a change. It's not like you put on a trade and you say, oh, well, it only uses 2,000 right now. I expect it to go to 5,000 at some point, but you should expect it to go to 2,500 or 3,000. I mean, this is an example of why we keep capital on the sidelines, just in case for these events, right? And this is, NVIDIA during this period of time was probably not the only stock you had that it was experiencing higher volatility. I mean, this was right in like the kind of middle of our down move in the start of the year. Like this was just before the kind of big move in April. And so, this is an example of why we keep capital on the sidelines and not being over leveraged on positions.
Very good.
And then, so some of the underlyings that we highlighted here, we just gave you like a batch of stocks that were really set. I think these are kind of groupings that you can see a correlation to in terms of the account size, right? So your smaller size accounts, you're looking at lower price stocks. You have like a Snapchat in there. SoFi was in like teens. Silver, which I don't think applies anymore because silver is quite the volatile asset here, but SLV is small enough to trade. You have like lower volatility stuff like EEM and TLT in there, Bank of America. And then you have like, some of the higher end, the higher towards $100 price range stocks like an Uber that's in the tech space. These are like your smaller sized account trades where you can do naked positions. In our Johnny Trader account, we sold puts in Intel. That was kind of our naked position. We used ETH. We did like a wide put spread in ETH. The rest of our trades are more risk-defined trades, and that's because there's only a small number of stocks that you could really be naked in a smaller size account. When you get into the medium account, you can get into your targets, your SMH, gold, IBM. You can get a little bit more diversified there. And then when you get in the larger sized account, you could look at SPX and some of the bigger stocks as well.
Right. I have a reverse Jade Lizard on in silver, SLV, that I put on when silver it's trading 69 now. Let's just say it closed at 68 or 67 and a half because it's probably down another $1 on this spread or maybe even a little bit more. I put it on when silver was trading around 60, 61. So if I was trading a silver contract, I'd be down around $8,000 or so. If I was doing a strategy similar to this one, like a reverse Jade Lizard in a silver product like /SIL or something like that, I'd be down around $6,000 to $9,000. In SLV, I'm down $300.
Yes.
I mean,
manageable.
Yeah, I mean,
for any sized account.
Stinks, but yeah, right. That's how you get small.
Yeah. You didn't expect it to be $300.
No, and I'll probably roll up the put spread in SLV today.
And that'll be the top 10.
That'll be the top because I just can't take it anymore. Yeah.
I know we're getting bailed out on the gold move here because we're still long that gold silver ratio. So we're long 2 gold, which are, let's just call it like 3.25%.
Yep.
Together because you get about 1.7 on each. We'll say 3.4%. So the spread has moved about a full percentage point, which is about $1,000.
Yep.
$1,000 per percentage move between the 2 gold versus the 1 silver. So the big contract.
Yes.
And it's been moving.
Yes. Yep.
Next slide here. So it's critical to allocate capital wisely into options positions. Typically, we should keep our total committed trading capital around 30 to 50% when IV is low. You can skew this to your liking, right? And to your account size. In a Johnny-sized account, it's really, really hard, if not impossible, to stick to that metric of 30 to 50% because you just don't have the capital, and everything that you're trading is risk defined, right? So, or for the most part, risk defined. You might have those one-off naked puts in Intel, but you're not really playing for Intel to go to zero. That's not like in your realm of possibilities here. Your spread trades, your short call spread in the diamonds or your iron condor in the Qs, those can certainly go to, full loss because they're relatively tight spreads. So you have to keep in mind that, your risk tolerance is going to play into this metric. Your account size is going to play into this metric. If you're on the medium to large size account, this is probably a good place to be. We're in this range, if not more than that. We're probably about 30%-ish right now. Allocated,
yeah, pretty much.
Around.
Yeah.
It's a good spot to be when volatility is low, in that realm. Then you can ramp up when volatility gets high. When IV is elevated, traders have the opportunity to take larger positions to capture higher premium. However, any capital allocation exceeding 70% should be carefully monitored as the number can quickly expand if the market moves against the portfolio. When you get it, this kind of answers the question that we always get of like, what do you do with your extra cash? It's just being wasted on the sideline. It's not being wasted when you experience an April type move where, your positions expand, they double basically. And if you're 30 or 40% allocated, you go to 80%. And that's, that can happen. And so, and you'll see it here in these metrics of like when IV is high, using 50 to 70% of your capital, a lot of that is going to come dynamically because stuff's going to go against you. And your 30 to 40% allocation might go to like 60.
That's not good.
That's not good.
Get overweighted.
Keep your size in check. Couple takeaways there, and then we'll get to the next one here. We're basically doing like 2 option jobs today. So we have like 4 research segments today because we're doing 2 recaps.
Very nice.
Have 2 in each.
Very nice.
Got to get your thinking cap on a Monday. And we have Jim. Oh my God.
I don't think it says Monday like Dr. Jim.
I don't know if I'm going to be able to make it. Buying power can fluctuate significantly in undefined risk strategies due to the stock price and implied volatility changes. Unlike defined risk strategies where buying power is more stable, it is stable. It's defined risk. If you're trading options on equities, futures will have a dynamic span margin that can change. Buying power is mainly determined by the underlying price, out-of-the-money strikes distance, and the option premium, with strangle buying power based on the higher buying power of the naked put or call. So, with strangles, you typically see a little bit lesser buying power requirement because you're collecting more premium. You're usually further out of the money. You can only lose on one side of the trade versus just being on one side of the trade. Allocate capital wisely, maintain around 25% in low IV, and then, when you get into the higher IV regimes, you can get up to the 50-60 range.
Beautiful. Good job out of you. Good job out of the team. Good job out of them.
We got one more.
Okay.
We got a whole nother. We spent a lot of time on that.
Go ahead.
We'll go through this quick. Okay. Leverage liquidity for lasting growth. This was in March. Next slide here. So we talk about tight bid-ask spreads. I told you we got to have our thinking caps on today.
You're right. On
a Monday. The team really, with no Vanetta.
It's amazing.
They've lit the fire underneath us.
Okay.
So one of the core aspects of liquid markets is a tight bid-ask spread. It is the price discrepancy between the highest willing buyer, which is the bid price, and the lowest willing seller, the ask. It effectively represents a slippage between where we buy or sell positions. By focusing on the most liquid, actively traded stocks, we are able to minimize the cost significantly. We talk about tight bid-ask spreads, liquidity all the time, and really, it's just if you think about the amount of time that you plan on trading and being in markets, which is for most people is forever in some way or another, and should be forever. when when your spreads are 5 or 10 or 20 cents wide on everything you do for the rest of eternity, it's a lot of value that you're just like kind of pissing away. Tighter bid-ask spreads allow you to just tighten that up.
Sure.
Like you want to be in stuff that you can buy and sell at basically the same price. It allows for a lot more transparency of where your positions are at, understanding of profits and losses on your positions. If something's marked at 0 cents and $1, you're going to see prices move around. Mm-hmm. You might get filled at something less advantageous. You might be buying something at a worse price. Bid-ask spreads are the one passive thing that, just trading tight markets is going to save you a couple dollars on every single one of the trades that you do in that.
Perfect. Agreed. And those add up. We've done segments where we show how much that costs you per year. It almost makes it impossible to be profitable, even if you're directionally right.
Yeah. Sports betting is a 10% slippage.
There you go. Good example.
A lot. Mm-hmm. Next slide here. So just a quick little thing on just, activity and you have tighter spreads, you can be more active in that underlying. And you'll get better fills near mid-price. Next slide here. So analyzing 5 known highly liquid underlyings, we can conclude that the underlying is liquid if the spread is around 1 to 2% of the options mid-price. And so if you're looking at a percentage, typically we say 1/10 of 1% of the stock's price. So if it's a $100 stock and the bid-ask spread is 10 cents wide, you're in a pretty decent spot there. Obviously, you want it to be penny wide, and a lot of these stocks listed here are all going to be penny wide, especially penny wide on the shares themselves. But the options are going to be, 1, 2, 3 pennies wide here. So, individual stocks though tend to have wider spreads, and that's a function of higher volatility, generally less liquidity. I mean, something like SPY is one of the most actively traded underlyings in the market. So you're going to have more liquidity there than, Coinbase. Yeah, right. It's not a shock there.
Right.
Next slide here. So again, this is just looking at volume and open interest. You typically want to see a couple thousand contracts minimum across the order chain. It doesn't have to, or the option chain. It doesn't have to be on every single strike, but if you're seeing that most strikes, especially those at the money strikes, have 100 contracts or 150 contracts traded, they're probably not that liquid. I mean, just think of that from like, a counterparty standpoint. If there's only a handful of people trading, you're going to have wider bid-ask spreads because that price discovery is going to be much wider. There's only a handful of people trading it. When you have thousands of contracts trading in volume and open interest, that's a relatively liquid underlying. And you should look at the at-the-money strikes and kind of look at those metrics. That'll tell you, where you should be trading. And if you look at something like a Tesla or an Apple or SPY or Qs, you're going to see 1,000 contracts on every single strike. I mean, all of them. You'll see this across the board. Next slide here. We also have a bunch of built-in watch lists. If you go to the liquidity section in the platform, we have a bunch of names in there that are relatively liquid there. Couple takeaways, and then we'll get to the opening bell here. So the bid-ask spread is the difference between the sell and the buying prices of stocks and options, ideally as narrow as a penny. Can't get any less than that. A narrow bid-ask spread suggests fair pricing and easier trade navigation, while wide spreads indicate an illiquid market with unclear pricing. So wider spreads, it's just harder to trade that option or at least find the fair value of that option. Option volume reflects the total transactions at a specific strike, while stock volume shows the amount of shares that are trading. Volume in the options is per day. Open interest adjusts at the end of the day, and it's just open contracts, whether they're long or short. It's just open contracts. Open interest is only in options. It's the number of open contracts per strike. High volume and high open interest generally indicate higher liquidity and a narrow bid-ask spread, as do underlyings with many expirations. When you see an underlying that has weekly expirations, it generally means it's probably more liquid than something that only has monthly expirations.
Great point. Great point. And a lot of times if they have those weekly options, you might notice that the monthly options are a little less liquid, especially when you go to some of those stocks that we'll go through the chain and see. You'll see that the at the monies or the earlier ones have more liquidity than the monthlies, where if you look at like an SPY, it'll be pretty even, or maybe even skewed to the front part, the daily options, because those are going to expire. But the monthlies will have a lot more than the weekly options. Good job out of you. Good job out of the team. And you are right. They did do 2 option jives in one there.
I think we have 2 market measures too.
Beautiful. Let's take a quick 90-second break and come back. We got the opening bell, which we've been waiting for, right after this.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the opening bell imminent in a minute here. E-mini S&Ps are up 34 and change, big 0.5% move on the E-mini S&Ps when the expected move is closer to 20 some odd handles here right at the opening. NASDAQ up 207, and again, I say the expected move is 21-ish handles. It doesn't have a lot of context to it if we don't mention that Wednesday, Thursday, Friday was over 30. So just to give you an idea, it's down by about 30%, the expected move today. Yeah. So we'll see how that goes. That might make it very hard for selling these zero-day options. RTY, or maybe take your profits quicker if you can't abstain from doing that. RTY up $16. They're all up around 0.5% here, with the Dow being the lagger of the group, up 60. Volatility down 25 cents to 17.15, and bonds are down 4 ticks. Oil, you sold it right about here on an average. I think you sold it at 77, sold it at 58, We're trading 57.85, guys. High is 58.13 and under 57. Bitcoin keeping its head up, hasn't moved 90,600. I think we just had the opening bell. You got low ding over.
Yeah, it was low ding.
Low ding again. There you go.
Very sad.
There you go. Thank you, everybody. Make the kid feel bad. He's got low ding. Gold up 1.5%. $73. That's a big move in gold, making new all-time highs. Only surpassed by silver, making new bigger highs. Silver up 2.25%. Corn, wheat, and soybeans. Wheat catching a little bit of a bid off of its lows. That's all I've got there. What'd you just do? What did you eat?
I bought back a put we sold in wheat. I think this was last week for what's your assumption? Fast market?
I think it was something.
It's been about a week that we've had that on.
It wasn't from us. I believe it was from one of our viewers that talked about it. So
yeah,
good close.
One of my Reddit peeps.
Probably one of my Reddit
that.
peeps. Yes, most definitely could have been. Let's take a look at what's moving the market early here. Let's go to those buckers, those who are not cooperating. UNH down around $2. Costco really can't seem to get its wings underneath it, trading 8.54 or so. It has a correlation with the market of only 0.35 right now. Apple. I was in the Apple store yesterday. Your brother broke his screen, and the wife has Apple Care. Don't ask me why. Do you know how much they wanted to charge if we didn't have Apple Care to get your screen fixed at Apple?
$299.
$365.
Oh, that's pretty great.
I mean, you can get it fixed for what, like $100 at one of the off stores if you don't go to Apple.
But then the Apple Care expires. You can't do it.
It's null and void.
Monopoly.
But if you don't have it, Apple Care, what difference does it make if it's null and void?
Yeah.
Right?
Yeah, they got you by the
jam-packed.
They're all jammed. Every time you
packed.
go in there, they're always jammed.
Great service though.
Yeah.
Got in and out in a relatively quick time. Took my phone, Kate brought it back. I took his phone, brought it back. But Apple not up today, down 22 cents right now. Let's see what's moving us to the upside. Tesla up 14. That's flirting with 500. It traded up to 496. It's right there right now, up 14 and change. AppLovin up $12. Carvana on the rumor that Vinny's going to have to buy a car, trading 456 or so, trading up to 458. It's up $5 and change. Goldman Sachs. MSTR up 4 and change. MSTR up around 2 in the order percent. Bitcoin up around 2.5%. So that relationship is staying steady right now. What do you think here, son? We'll just do
I closed out of the Coinbase put spread. I think that was fast market last week.
Man, can you make any money on your own? I'm just kidding. Come on.
So I closed that. We sold some extra ETH puts as well.
Very nice. How about your IBIT position? What's going on there?
Well, today's got to help.
Yeah. Well, you've been selling calls into that position. I was wondering.
Yeah, those calls. So I've been scalping out of them. I have them on. I mean, I'm short the 55 calls. So they're at like 90 cents ish. I sold them
in Jan, I'm assuming.
Yeah. So ultimately, there's nothing to do with that position at this point. It's a wait. You
got it.
Sit on your hands a little bit.
Got it. Sit you will.
What's here?
Volatility down 20 cents. Actually, the mid-range, maybe a little bit higher than mid-range for the day. We'll see what goes on with the overall market.
Shark put us in that HUT. Remember HUT?
Yes, I didn't like the markets in there, right? It's HUT.
Yeah, so we're
long. $2 and change.
We're long 100 shares of stock at 42-ish. So the stock's up like $400, $4.
Yep.
Per lot. We sold 2 of the 50 strike calls. Those 50 strike calls.
In January?
Yes, in January. We sold at about $3-ish is our average, and they're marked at like $3.70-ish.
Yeah, $3.80, $3.85.
So those have only moved 75 cents on a $4 move in the stock.
Right, but we sold 2 of them because we're geniuses.
Yeah, but we have like
I know.
But I'm saying the upside volatility is just so high there.
You're up 250 on that on a $4 move. That's that's pretty good. It's about 50 to 75 cents more than you would expect on a 1-to-1.
Yes.
So
the question is, do you close them? That was where I was.
You're going to have to close it 1-to-1 if you did anything with it. I mean, I don't hate it. I don't hate trying to close it. I would probably look to buy the option, the one straggler option.
Mm-hmm.
And then you'd be 1-to-1 on the covered call, and then you could sell the covered call. That's the way I would get out of the position since you're 1-by-2. So I'd probably put in a bid for the one lot, the extra 1 unit. That's the way I would do it.
Mm-hmm. You don't sit.
Oh, you could sit.
I was gonna say you sit because the options haven't really moved.
Sit.
You've made the $4 on the stock.
I mean, all things being equal, if you're looking at this 50 call right now and the stock's trading at 48, now it's catching a little bit of a bid as the stock goes higher, right? You get another $1 on the stock and your options have moved about 40, 50 cents. I guess that's about right. But if you look at what they should be trading, if the stock is $3 higher, $3 higher, they'd be trading around $6.35. I don't hate it.
Mm-hmm.
IV rank of 61. Hasn't moved too much. I would sit. That's fine by me.
Yeah, maybe this Tesla move is on the Rocket Labs $1 billion or 800 million something. It's funny, we have Rocket Labs, we sold puts on what's your assumption? And I have a butterfly, the 65, 75, 85 butterfly, RKLB.
Yeah, up $4.80 was awarded an $816 million prime contract to build missiles, defense satellite constellations, whatever that means. But it means about $5 for the stock, almost a 7% move in Rocket Labs, and you've got some long delta in there. So good on you, good on the team, good on the viewers. We got some smart viewers.
Yeah, we do.
Anything else to add here? You sold you're actually covering trades here. You haven't done anything.
Is anything sticking out to you as a?
No, your gold silver ratio spread has worked out for you. Worked back for you. It was if you take a look at that, let's look at it right now. Gold is.
I'm buying back some SoFi puts.
4455 divided by 68
It's moved like to 64.30 or something. 64.
It's moved a 0.25%. 64.75 was 64.50 earlier, so it's come back a little bit for you. Had you put it on when I asked you to put it on, you'd be up. I'm just teasing. I'm just having fun with you. I'm just having fun. Don't get all sensitive on me.
Uber
up $2.50. That's the first uptick there. They're coming for every pig right now.
I had the 82.5 puts that I sold at $4.40. I just closed them at 283 into this move, but vol is just so implied volatility in Uber. Don't look. Have you looked?
I did. I looked at the IV rank. I did not look at the implied volatility. So you want me to know what the monthly?
Monthly, January, 25 days to go till expiration. The stock has gone from, in the last 2 months, has gone from 100 to 80. What do you think the implied volatility is? 25 days out.
It should be 55. It's probably 45.
16.
Oh. 16?
Yeah.
60. At least it's 60. I was going to be like, wow. 16, 1-6.
That looks like it. I think it might be something.
That can't be right.
That can't be right. But when I looked at that, I was like, that can't be right.
There's something here. So let's take. You're right. It says 16, but look, I thought it was going to be 40. It's probably closer to 30, with February being closer to 40. It's picking something up out here. There's something that's weird in the markets here. I can't see it off the top of my mind.
But still, even at like mid 30s.
Yeah, that's 16 is not. I don't think it's accurate.
Yeah.
Especially when you look at the rest of the months, 30, 31, 33, 31, 33, 40. 16 doesn't seem right.
No.
What else you got? A lot of closing trades, no opening trades so far today, correct?
Yes, nothing opening. Do you see anything?
No. So far, it seems
like I gotta close this put.
Volatility was trying to catch itself a little bit of a bid. It's promptly sold off 17.15. Even the S&Ps are up 28. I mean, I hate to say something like the highs are in for the day, but it kind of feels like we might meander around in that whole chop fest that we've been talking about for the last week or so.
I closed the oil put spread too.
Good job out of you.
And it's a nice little move today. 2.5%.
Yeah, for sure. Back to almost 58 after trading down under 55 or so, under 56 and change. That's $1,000 per point in oil too. Net gas trading near its lows. If you really want to do a net gas spread, we can do that just to support.
I have the 3.534.
Oh, so then you're sitting. You got the at the money spread right now, right?
Yeah.
Very good. You ready to take a quick 90-second break?
Yeah, sure. It's funny. I'm looking at
$162 to replace a screen at a mall kiosk. Still felt like it was a lot for 15 minutes work. Merry Christmas, Bat. Thank you for all your help and advice. All right, $162. I thought it was closer to $100. That tells you how long it's been since I broke my screen. I have not broke my screen. I protect the things that I
things have gotten more expensive. Your fire truck showers are $60 now. I mean, that's a lot.
We're going to take a quick 90-second break and come back. I've paid more. We're going to take a quick 90-second break and come back. We've got more Tasty Live after this. What do we got coming up next?
Got Dr. J.
That's right. Nothing says Monday like this, man. Dr. Jim. We'll be back in 90 seconds of Tasty Live.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love.
Liz and I always say to get a trading buddy, and we are each other's trading buddies, and I wouldn't know what I would do without her.
People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors. What is wonderful about being on this show is that you see the good, the bad, and the ugly, because not every trade is a winner. If it were, the game would be rigged. So you get to watch us manage our winners, and you get to see how we look to get out of a trade that might not be going our way.
My biggest piece of advice to beginners is to jump in, but stay small.
Putting it out there and doing it in small increments, you will learn more than ever reading anything in any book.
So stay small, but jump in.
Top kid.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Niggy, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with this man, Dr. Jim. Nothing says Monday like this, man. The skinny on options, abstract applications. Dr. Jim, how are you, sir?
Man, what's going on? What's going on? Christmas week. Merry Christmas to you guys. Happy holidays. I mean, we made it, man. We made it. We're only a couple days away from greatness. So what are you guys most excited about? What are you guys most excited about here for Christmas Day and whatnot?
Well, we're all most certainly on the nice list.
We are on the nice list.
We made the nice list, which is good.
Love us, hate us, like what we do the opposite of what we do. I don't care what you do. How can you be mad at us? I get it's funny when somebody gets mad at me on Twitter. I'm like, why would you even care? Like, do the opposite of my trading. And personal views, who cares about those? Those are like armpits. They usually stink, right? Who cares? You got two of them, and the two opinions, they usually stink, both of them. So who cares? But you got to love us, Dr. Jim. Even got to love you.
Yeah, you even got to, man. Like, it's a package deal. Like you get one, you get the other.
Yeah, exactly.
Yeah.
What am I most grateful for this week? Let me start the week. Monday Night Football, home team dog, your favorite.
Now you're talking.
Indianapolis Colts.
This
Gotta
is my
love
guy.
them.
Hey, Jim, I mean that you've been banished from Bears. We can't take you back.
We wouldn't even take you
back.
back.
You can have the rest. You can have the rest.
Take me back. I've never been. I've been Phillip Rivers from the beginning. Again,
I've been Caleb Williams from the beginning just as much as you've been Phillip Rivers since the beginning.
Wasn't there a bunch of controversy in that Bears-Packers game? Like, there was a couple things. I didn't see it. I just saw some of the highlights. I mean, it was a crazy finish.
It's great.
Wasn't there some...
What?
No? I don't know.
Not from the Bears' point of view. I don't know. I didn't see any.
Okay.
Great defensive stance at the goal line there. A great pass at the end of the game. I mean...
Amazing. Multiple great passes.
Sure.
Yeah.
I mean, it's going to be funny when they start dropping these passes or he doesn't make the play. He's going to be back to Caleb Williams stinks again. And then I'll be able to get on that bandwagon.
Weren't you fading?
I did fade the Bears, and I did fade Caleb Williams, and I paid. You're allowed to be wrong. As long as you have an opinion, you're allowed to be wrong.
That's fine.
I paid.
They got the number 2 seed locked down right now, right? Is that right?
No, I think we have a wild card locked down.
Yeah.
So we're in the playoffs.
Oh, no, I'm sorry. I just meant, no, not locked down. I meant like where they stand right now. Aren't they the number 2 seed if it ended today?
Yeah, right now, yes.
Right.
Yes.
Yeah.
But we still we have San Francisco next week and then Lions coming up.
Yeah.
So there's 2 tough
It's
games.
crazy now because they changed it now to where like it's only the number 1 seed that gets the bye. Like the 2 seed's got to play. That's kind of brutal, man.
Yeah.
I mean,
it is TV rights. I mean, there is money involved here.
Yeah.
I mean, we do want to see more games. I mean, they've taken away the kickoff. I mean, you can't fall on a quarterback. I mean, they should be able to play 2 games a day. I mean, they should be doing double hitters pretty soon. In another year or 2, we're going to have double headers of football. I mean, how much does it take? I mean, seriously.
I don't know. The way these guys hit now, I don't know if anybody could do 2 games.
They're not hitting the quarterback.
Not the quarterback. Everybody else.
You can't hit the quarterback. I mean, you cannot hit the quarterback.
Well, and you still. And
you watch films from back in the day. I don't want to say it was always better back in the day, but it always is better back in the day. And they used to murder quarterbacks. I mean, that was their job. And that's why the Bears were feared. And that's why football's changed. Yeah. But anyway, go ahead. I'm sorry.
Yeah, and I'll tell you what. I mean, the Bears' recovery on that onside kick is even more impressive now because now you've got to like.
What do you think the odds? What do you think the odds are on a kick being? Like first of all, you have to announce. I mean, this is, I'm going to punch you in the face. My next punch is going to be in the face. Okay. I mean, that's how they're going to have like fights. They're going to have to say, I'm going to go face, body, face. And then you can, try to defend it. I mean, it's so silly. But anyway, you have to announce. I don't know what the odds are. I'm asking.
The onside kick situation is a little weird.
It's weird.
It's weird.
You have to announce it.
Yeah.
Okay. And then you have to recover it. What do you think the odds are on getting that now that you have to announce it?
It's very low. I think.
I think it used to be. It used to be 10%, 8 to 10% before you had to announce it.
Yeah.
Now,
I actually thought it was higher than that. Okay.
It's got to be 5 or less now that you have to announce it.
Right.
I don't know.
Oh, crazy.
So great play, man. Everything they do seem like the Bears do seem like the team of destiny.
I know
they don't seem like a great team. They seem like the team of destiny.
I don't want to say it too loud.
Yeah,
I want to let it.
You put that on air.
Yeah,
right?
I don't want to put that
on
out
record.
there.
Wow.
I don't want to put that out there yet.
I hear you.
Yeah,
I hear you.
All I'm saying is nothing says destiny better than my boy Phillip Rivers playing tonight. That's what I'm saying.
Who couldn't pull for him?
Yeah.
I'm just saying. I don't gamble anymore. I don't bet on sports anymore. But tonight, the Colts and 5.5 points. It's safer than a UST bill, man. It is safer than a UST bill. And so there you go. Merry Christmas.
Absolutely, totally agree. Home team dog Monday night. That's old school betting. Dr. Jim, you'd be living in your car if Indianapolis Colts
and you would be
cover.
selling jeans out of the back of my car. Like we could do this together.
No doubt, 100%.
All right, let's do it, man. So
Sure.
we're going to do the 12 days of trading today. Let's talk about Dr. Jim's biggest 2025 learnings. Guys, we are forever students. We never stop learning. I've got my 3 biggest learnings from the year. Are you guys ready for this?
Sure.
Yeah.
All right, let's kick us off here, John. Get us rolling. So I've now spent over 20 years studying the financial markets as a student, professor, academic, and practitioner. But without question, I still found myself learning new things that I hadn't before considered each and every year. So in celebration of today's theme, within the 12 days of trading, here are my 3 biggest discoveries from 2025. All right, we're all getting ready for 2026. I mean, we've got a short week this week, short week next week. So let's go ahead and get going. Number 1, size exposes. So sooner or later, your true risk in the market is revealed by your trade size. It doesn't matter what you think. It doesn't matter what you say. It all gets exposed. It all gets laid bare in the end when you are faced with a pretty big market move. And so if you have a small trade size, you have kind of this organic hedge that's built in. You can make up for a lot of different things that might come your way. When you have a really large trade size, you now have a lot less room for error, and you could be too late. And what I mean by too late is if you are really, really sized up and you are really, really large, if a move comes your way and you're not ready for it, or maybe you're not at your terminal or whatever, and it starts to get away from you, it may not be so easy to cut size. I mean, you can always cut size, but the damage may have already been done. It could be too late before you can do anything. So what do you guys think? Size exposes. I've known this for a long time, but man, this year, I feel like every year I appreciate this in a brand new way. What do you guys think?
It's number 1. I mean,
and that's why Dr. Jim put it at number 1. I mean, come on.
It's the most important thing. And I think, you kind of get lulled into bigger size. And I think this happens to everybody. And, you're doing 0-day stuff, or, you're taking big directional bets, and they work for a period of time, and you think you're a genius. And everybody gets, I'm going to go from 2 to 4, and now I'm 4 to 8, and 8 to 16. And soon enough, you're trading, these huge size positions, and one goes wrong and it wipes everything out. And I think size is the number 1. It's the hardest thing to keep under control, because the stuff that works and the amount of times it works, you're like, okay, well, I don't want to wait 20 days to do this over and over again. I'm just going to do this in 2 days. And then, you kind of, you get caught. Everybody gets caught with size at some point in their trading career. And then you say, okay, I got it now. And then it'll catch you again in a handful of years.
I'm never going to do that again until the next time.
It's impossible. It's impossible to really not get caught every so often. But it's a learning experience, no doubt. The silver position, that got too big.
Silver position got too big.
And that was my one this year. And, you learn.
And it hurt.
Oh, it hurts. It hurts. That's how you remember it.
Yeah. And you got too big. And you got too big in a very big product. Like it was a double cardinal sin. Like you put on the one trade as small as you could put it on. You put it on as a pairs trade. Then you took off one of the legs on the pairs trade, and then you added to it. I mean, putting on one contract in NVIDIA all the time and then making a 2 contract trade, that's getting big. What you did you were 10 times as big as you should be, and then you got like 30 times as big as you should be, and that's, the whole portfolio becomes that trade. That's the problem with getting too big. Your whole portfolio becomes that trade.
Yes.
Everything else gets thrown out the window.
That's a great point. No, that's a great point. Yeah, there's a lot of wisdom right there. A lot of wisdom right there. Another thing too, man, I got you, man. Don't worry about it. Like, it's you and me tonight, man. It's you and me and Phillip Rivers. I mean,
that's right. That's right.
We're just like the perfect storm, which was what? George Clooney, Mark Wahlberg, and that other guy.
Classic.
It's a perfect trio. Who was the other guy in the perfect storm? Was it John C. Reilly?
Yes.
I want to.
Wow.
Is that right?
How did you pull that one out of your arse?
The Step Brothers guy?
Yeah.
Is that right?
Yes, you're correct.
Yeah, John corrected it.
That's crazy.
Yeah.
I don't know how I pulled that. I pulled that out. That was a pretty nice pull.
He's done some good ones in that drama realm in Gangs of New York. He's in there too. He's one of the are they Irish? What are they? Irish?
I think so.
Yeah.
I think so. Yeah. Yeah.
So you guys want to hear a funny story about Gangs of New York? So
sure.
I've only
Daniel
seen
Day-Lewis.
Gangs of New York.
Good movie.
Amazing.
Yeah.
Absolutely.
Yeah.
The rabbits.
Great movie. Daniel Day-Lewis. I would have no clue, but I've seen the movie. So I saw the movie, right? So I saw the movie. It's what, 3 hours long? 3.5 hours long?
No.
John, look that up. It's 3 hours long. John, I need a timestamp. It's definitely.
If you're
not
watching it
under
on
2.5.
like TBS,
no,
3 hours with commercial.
No. I'm talking straight through wire to wire. It's 2:45 minimum.
No.
Give me a timestamp.
No, it's like 1:45. It's like a normal. Yeah.
This isn't a rom-com, dude. This thing's 2:45.
He's right. I think it's got some time to it. Let's see.
Oh, yeah.
2 hours and 47 minutes.
Wow.
Look at that.
That's a fast 2 hours and 40. That is a movie that
it goes by like it's an hour and a
20
half.
minutes.
Right.
Right, sure. Okay, of course. It should be. But I saw the movie in 2003 when I was starting abroad in France. I went with my French friends. We watched it in French. Man, it was brutal, dude. It was the longest 3 hours of my life.
What,
I had no idea what anybody was saying.
I was gonna say you don't
No
speak
subtitles.
French, not
No
you
subtitles.
uncultured SOB.
No, I did a little bit at the time, but it's too fast, too much slang.
Yeah,
too much
you
whatever.
can't watch Gangs of New York in French. That should be illegal.
That's a hate crime. That is a hate crime.
Like, come on.
That goes against everything cultured in France or New York.
Yeah.
That's a good point. My French friends were excited about it. Like
I'm sure.
we listened to Jenny from the block on the way there. Like we watched Gangs from New York. It was awesome, dude. It was amazing. For them, it was at least. But man, that was brutal. That was absolutely
Great
brutal.
movie.
But anyway,
Watch that over the Christmas holiday. You'll like it.
Okay. Actually, you know what I'm watching? So I want to get back to the piece, of course, but you guys aren't going to believe this. So Autumn and I just got done watching Die Hard, right? Christmas movie, obviously.
Of course.
It's not even up for debate.
It's a good one.
But Autumn had never seen Die Hard before. We've been married 16 and a half years. Had never seen Die Hard. I couldn't believe it.
Oh,
I can see that. He's a woman. I
don't know,
see
man.
that. I mean, I could.
It's iconic, man. It's absolutely iconic. And by the way, if anybody ever does dispute Die Hard being a Christmas movie, all you have to do is look at the soundtrack from the movie. They've got all Christmas songs. Like, that's all you need to know. Like, that's your bread and butter. That's your haymaker right there. So anyway.
Good point.
All right, John, bring us back into the content. Okay, so Size exposes Gangs of New York is not a movie to see in French.
Yes.
Number two. So number two, my second discovery. Now I'm going to be curious to hear what you guys think about this, because these are my own thoughts. Okay, so these are my own thoughts. John, let's go to the second discovery. Trading in a 0 or 1 DTE cycle can certainly bring opportunities, but it still cannot replicate what the traditional 45 to 21 cycles can produce. So that's my first main discovery. But then secondly, how I trade the 0, 1 DTE cycles, because for me, I do most of my trading on from theory to practice. So I don't do a 0 DTE. It doesn't make any sense. There's only an hour left in the day. So I do a lot of trades for the next day, which is technically a 1 DTE, but I kind of treat it like a 0 DTE. But when I look at these trades, I don't like to sell premium at all. I don't like to sell premium undefined risk for kind of obvious reasons. I don't feel like, you don't have any time to adjust in case you're wrong. I don't even like to sell premium defined risk. And I know the Tasty Research has a lot of promising results when it comes to this, but for me still, the results 45 to 21 are so reliable. Like they're so consistent man, that just makes so much more sense to me when it comes to a 0-1 DTE world. But if I'm looking at making some trades in this time frame, I'm typically buying premium.
So give me an example how you would do it. So you buy directional? Do you buy a call spread?
Well, I'm going to give you there's a great example on the next slide, so I don't want to ruin that just yet.
Okay.
But basically, I'm looking at debit spread strategies. I'm looking for directional plays. Let's just put it like that.
Butterflies.
Could be a call spread.
I would have no problem with that.
Could be a butterfly. Hey, there's a little preview into what's coming on the next slide. But yeah, what do you guys think about this? I may run counter to how you guys feel about this, but I'm just curious where you guys are at.
I don't have a problem with it. It's not the way that I would do it. You're being, you're having a directional bias and you're doing it a day out. I have no problem with that. I mean, you're probably turning a 50-50 directional play. Probably, I'm assuming, I don't know what you do, probably buying a little bit of an out of the money spread. So you're going all with direction. You're trying to get, a multiple 2-3 times what you're paying for the spread. If I know you're probably going bullish every day because that's the way the market's been going and it's worked out well for you. So that would be my...
What? Hold on. You guys are the momentum traders now.
I have no idea.
You guys are the Momo crew. I'm trying to be the last Mohican to protect the short-term contrarians.
Another great movie. Another great Daniel Day-Lewis great movie, Last of the Mohicans. Have you ever seen that?
No, he was in that movie? Wow.
He's the star.
He's
the last Mohican
in that one too?
No,
he's Hawkeye.
Hawkeye.
He's the final Mohican? No, I've never seen that one.
Yeah.
You've never seen. Wait a minute. You've never seen.
I take that back. So when I studied abroad in Spain in 2006.
Oh no, you watching it in Spanish? You can't watch a Native American movie in Spanish. You're all over the place, Jim.
I had no idea what was going on, man. But all my Spanish friends had a great time. I'm like, I don't know what's going on. But there you go.
You're gonna love it. First of all, you're gonna love it. And you're gonna instill the wisdom in your children and your lovely wife. So you guys should watch it together this week.
Okay. All right.
Last of the Mohicans. I'm being dead serious. Great movie.
It's a great one. It is a great one.
Great movie.
I'll give it a look.
Great movie.
Okay. So Tony.
Yeah.
So you don't mind getting back to my second discovery. You don't mind selling some premium in a 0 DTE world.
We do it intraday. We take our profits quickly. We really do from the research. We do both sides. Typically, I don't think we've really ever done one side, maybe one time, directional biasing.
But I think the key concept applies to both of us, Jim. We're managing these really quickly. Like, we are trying to take risk off as quickly as possible. I think your slide kind of highlights the idea that, there's a lot of risk and it's very quick in both directions on these sort of trades. And so, you approaching it with the debit trade, risk defined, you know exactly what your max loss is going in. It's defined. It's a shot trade, is kind of the same thing that we are applying to our trades where, we are on the short premium side. We have a lot more time left because you're towards the end of the day, but we are managing them very, very quickly for small amounts of profit to take that risk off. So I think we're highlighting kind of the same idea here that these short-term trades, it's very quick risk. And so you should be taking the reward very quickly too.
Mm-hmm. Yeah, and I think there's a lot of wisdom in that too, and that just shows kind of how, you need to know what you're signing up for. Like when you go into a 45, 21 day cycle, like you've got time, you can be patient, you can go for higher profit targets, 50% of max profit, whatever. But when you're in a 0 DTE world, it's a different ballgame. Like you've got to understand, like, this is Lambeau in the cold. This isn't Miami in, September. Like we've got to play a different game here. You know what I'm saying?
Mm-hmm.
For sure.
All right.
Sure.
Okay. Third discovery, John, let's go to the final discovery. This has probably been the most impactful one for me because I use this strategy so much. So the more you use a given strategy, the more subtleties and nuances you pick up about how that specific strategy reacts to varying market metrics. And I think we could apply that statement to every strategy, but I'm just going to use one because I do this all the time. And the From Theory to Practice fam, they know that we do this all the time. The expected move butterfly. This is my go-to directional play for earnings, for binary events, for whatever. Because you're right, Tony, you can set it up for multiples of the debit paid, and it could be a cheap way to take a shot. Well, what I kind of discovered was for the longest time, I really liked like Wednesday into Friday butterflies or Thursday into Friday butterflies, because the way the strategy is structured, you don't want there to be any extrinsic value left. And the only way that's going to happen with the butterfly specifically is at the very end of the cycle. Like it's got to be like the expiration day or maybe the day before. Even if you hit the move or whatever, if it's too early, those short options cling on to all that extrinsic value and you can't get anywhere near max profit. I mean, you really can't get anywhere near max profit until the final hours anyway.
I was gonna say that. I was gonna say that even in the butterfly that you're using, let's call I don't what do you do them? $10 wide?
It depends on the product, but I mean 10, 20, 35 if it's like SPX or something.
You're going to get, if it goes to or near the body of your butterfly, which is exactly what you want when you're long a butterfly, you're long one, short two, long one on the back end, so it's a defined risk trade. Even with a day to go or that day is expiration and it goes to your short strike, what do you're up, 1/3 the width of the strikes, maybe a little bit more, maybe a little bit less, depending on where it is, but you don't go anywhere near max profit until the last hour-ish of the day. And even then you have that gamma risk. Now, again, it's gamma risk because you have a profit in the trade. Profit goes away, or you make less money if it starts going the wrong way. You don't have the gamma risk of losing more money if it goes the wrong way. But taking money off the table that you didn't ring the register for feels just as bad as watching the P&L go in the opposite direction, right?
That's exactly right. Oh, that's so true. That's so true.
Sure.
But yeah, so the 0-1 DTE, that's your best chance to get a big home run winner. But even still then, you're not going to get near the max profit. Yeah. Okay, that's how I felt, and I still feel that way in a lot of ways. But man, this last year specifically, it's really opened my eyes to doing butterflies earlier in the week, like a Monday or a Tuesday going into Friday, because you just have to understand the dynamics have changed. So now I'm not going to get anywhere near max profit. I'm not going to get anywhere near like a double or a triple or whatever. But now I do have multiple opportunities for the stock to kind of land in that butterfly net. Like if I do a 0 or a 1 DT, I got one chance. I got two chances, whatever. But if I do it Monday, now it could be Tuesday, it could be Wednesday, it could be Thursday, it could be Friday. And my risk is defined so I can let it ride the whole time if I need to. And so that is really, it really opened my eyes to like, all right, I can use the same strategy I've been using for so long, but in a completely different way with different goals and different objectives. And those are the types of things that only happen when you've been doing the strategy. You can't learn it in a textbook. You can't learn it on a podcast. You have to be in it. You have to be seeing how the market reacts or how the strategy reacts to the market moving. And then you begin to make adjustments. And I think that's been one of the biggest discoveries for me this past year.
One chance, one shot, 8 Mile. Did you watch that in Germany? Did you watch 8 Mile in German?
So I was visiting Hong Kong in 2011 and I actually grew up. No, all kidding aside. Did you guys, I grew up on 10 Mile. Like my mom and dad still live on 10 Mile.
Wow.
Like 2 miles away from where that movie was shot.
You're like the Eminem of option trading.
I'm something, man. I don't know if I would say that. Oh, man.
So good. So
all right, well, let's get him a few takeaways, John.
Sure.
Give me my takeaway slide.
Trading. I don't know. You might be dating yourself too. I don't know if a lot of people know who Eminem is.
Oh,
anymore.
come on. Everybody knows who Eminem is.
Any trader who takes his or her craft seriously is a perpetual student of the markets, where certain things might dawn on you after many, many years and when you least expect it. Much like what I continue to experience each and every year, even after 2 decades in the markets. And Merry Christmas and Happy Holidays to everybody out there.
Merry Christmas and Happy Holidays to you. That's Dr. Jim, the Eminem of option trading here at
And by Eminem, I think they mean like the little chocolate candies that like
the goat, baby. You're the goat.
You're the goat. You're the goat. Good job out of you. Go Phillip Rivers. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a market measure next. Even the S&P's up 29 and change. Volatility in by 50 cents. I'm a little surprised by that. 1690, almost a 3% move on volatility. Scary low. We'll take a quick 90-second break and come back. We got a market measure next. Good job, Dr. Jim.
Yep.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son. And you know what that means. Time for a little bit more Tasty Live with this market measure sponsored by the SIBO. But before we do, let's take a quick look at the market. Even the S&Ps are up 24 handles. NASDAQ up 111. The Russell is the big leader. If you're looking at a percentage basis, the Russell is up 1 1/8%. When everything else is up a little less than 0.5%. The Dow has been the weakest of the group, up 95, and volatility in by over 2.5%, 45 cents, just a nickel off of its lows. I think volatility is getting a little bit ahead of itself here, and maybe volatility is going to catch a little bit of a bid. Bonds are down 6 to 115.04. Bitcoin hanging out at 90,300 for one of the, up 2%, one of the more volatile, non-volatile products because it really hasn't gone anywhere in the last week or so. It's really stayed steady at $90,370. It's moved about $300. Ethereum up $51. That's moved a little bit more, about $30 off of its highs. Oil up $1.30, sitting right where it was pre-market, really, right at the opening bell when you made your oil trades there, right at this price to close some longs that you had. Gold up $65, been hanging steady too. It is $10 or $15 off its highs. 1.5% move there, and silver having about a 1.5% move too. Your gold silver ratio getting more in line to where it closed on Friday. Net gas trading near its lows, continues to make its lows. Net gas trading 3.49, just about a tick off of its lows. Some of the movers to the upside: AppLovin up 8 and change, Meta up 7 and change, Coin up 7 and change, Tesla up 5. Tesla was up about $10 higher than this. If you remember, it was one of the leaders in the clubhouse comeback a little bit. RK, LB, Rocket Labs, usually not around there, but it is up almost 7% or almost $5. Oracle, a big star, up 4.5, although I am out of my Oracle longs. On the downside, let's see what's going on there. Carvana down 8 after trading 458. Remember, I made jokes that Carvana was up on Vinny having to buy a car soon. It's now down $8, realizing that we're going to buy a very cheap used car. It wasn't that wasn't out. Costco down.
Those are the highest margin, though.
Those are the highest margin.
Those are big margins on those cheapies.
Yeah,
those Camrys.
Camrys are traded at premium.
They're just cheap. You always buy them cheap, and you gotta watch out because those are all the Uber/cab ones. You look at how many miles per year. You want to be below you want to be in the 8 to 9 range. That's then you have a night.
That's Nirvana.
Yeah,
a little old lady drove.
Yeah, but some of those when you get into the 10 or 15,000 range, then you know that's a car that gets beaten to the ground. So you got to be careful with those.
Words of wisdom, right there. Words of wisdom. You ready to do a quick little market?
I had Coinbase puts that I just closed out of. It's funny. We're
going back at $5. That seems expensive. Where'd you sell them?
6.
Oh, okay.
I've been scalping them around $6, but it took some heat on the downside. I mean, those got to $8 or $9.
Yeah, Coin up $7.50 here. Yeah.
Yeah, but everybody in the YouTube chat looking around, they're you can't. There's nothing to sell. You can't sell puts or calls.
Volatility is very low. You're going to look to be one of your diagonal spreads if you're still trying.
Or you're taking stuff off
that
you're getting kind of bailed out on, and stuff that was a couple $100 loser to a scratch or a small winner. You take those off the table. You lower your amount of capital that you're using on all your positions as a whole. I mean, that's kind of what you do here with low volatility, but it is slim pickings.
It is slim pickings.
And when you go through a couple months of this, which I hope isn't the case, that's when it gets real bad.
That's when it gets bad.
That's when the size catches up to you.
You are right about that, my son. You are right about that. You ready to
Yeah, let's do it. Market measure.
Market measure.
It's another best of our zero.
Sponsored. Who's it sponsored by?
SIBO.
SIBO, that's right.
Not the CBOE. It's the SIBO.
SIBO is correct.
Best of.
You're always right.
You're always right.
No, you're always right.
You do no wrong in my eyes.
I think young you would have a little bit of issue with that statement. I think I'm less wrong as you get older. Can you give me a few of those wins that you made ties or losses? You can give me a few of those as you get older.
Yeah, the problems are different.
Problems are different.
Yeah, so you become less wrong. Yes,
I become
more reliable.
Thank you.
Yes.
Thank you. I appreciate that. I consider myself 100%, but I understand others might have a skewed view of that. Market measure.
Market measure. Best of.
Best of. Yes.
Is this like family counseling or something?
Absolutely.
Sort of.
Absolutely.
Oh my God.
Yeah, are you kidding me?
Let's do it.
I'm
First
ready.
slide here. All right, so this one goes back to May, the days of the week with 0 DT. So we're isolating specific days here. Next slide here. So how have 0-day trades fared on various days of the week, and what insights can we glean from these differences? And the setup for these is we sold a daily iron condor, so this is in 0-day options, 20 delta for the short options, going $20 wide, entering it at the market open or at 9 a.m., so in the first 30 minutes here. Winners close at 25% of the max profit, all others allowed to expire what do you think is the best day?
I mean,
you know the worst day, right? You remember that one?
Yeah. I mean, the worst day of the year?
No, of the week.
Oh, of the week. Oh, Thursday is the worst day of the week to put it on.
Yes.
We know that. I think closing the windows is going to be the profit, but I don't know. A lot of the times, I've been watching them on Twitter. They hold these things into expiration, but they don't stay with our mechanics. They a lot more aggressive with their rolls, which was something that we would definitely do. Yeah. They add to positions, which is another thing that we don't usually do. But I mean, you have to be highly capitalized to do this. I'm going to say the 25% just as a whole if you're just doing one.
Yeah. Well, what day is the best, you think? Which day of the week?
Monday, I think, is the best day of the week. I think Thursday's the worst.
He does listen.
Yeah.
Next slide here.
Of course. Hey, what day is today? And it's worked out real well. And did we do something? No, because I told you I don't think it was the right thing to do. Never think, just trade. I tell people this all the time. Don't think, just trade.
Yes.
Sorry.
20 Delta Iron Condor sold at the open. Overall, you can see there it's been a high win rate. You have a pretty decent average P&L here. Your CVAR is about $1,600. And that's just like because that's roughly your max loss and you're doing these as Iron Condors. You can see overall Monday is the best performing day. By far, actually, Monday and Wednesday really the best performing days. Tuesday, Thursday, you get a little bit dicey here. And then Friday is kind of inconclusive as well. So the Tuesday, Thursday, Friday are kind of your, 50-50s. Mm-hmm. Monday and Wednesday have historically, and this is only 2 years of data. So, take that with a grain of salt. But Mondays and Wednesdays, the best performing. Thursday, by far, the worst performing there. And I think that's sort of a function of like, in the middle of the week, you have a lot of binary events. So Monday, you usually have like the weekend, the weekend move is digested on Monday. And as we see today, having a lot of chop. Tuesday, Wednesday, Thursday, you have a lot of earnings that come out, you have stuff after the market closes that moves markets in one way or the other. So you can see here across the board, win rate high for all of them with a positive P&L. So this strategy has been a solid one.
Has been a solid one. Totally agree.
Yes. You do increase pretty much everything, though, on the next slide here by doing it, and this is just at the open. So when you wait a little bit, when you wait like the 10, 15, 20, 30 minutes, you do get better win rates and better entries. VR backtest, I mean, you can see all the numbers kind of go up with this. Even the losing trades on Thursday increased as well there, but I think it tells you a little bit about, the liquidity. You're probably getting tighter markets, once you wait a little bit.
These numbers look so good, you almost have to say, why isn't everyone doing this? But I'm going to caution you because I get the emails from people. And a lot of times, I got to take that with a little bit of a grain of salt because you don't get as many winning emails. You get that more on Twitter and other places like that, or X, whatever it's called now. But you get more I don't get, like, you sell a put, you buy it back. You don't get that email, hey, this worked, it was great kind of thing. You sell a call, it goes down, it works. You future scalping, it works. You always get the ones that
I got too big. And
I got too big, or what can I do now kind of thing. Even those who've had profits in other trades, maybe in 0 days, they don't write about hey, this was easy. It's always what can I do? So I will caution you that your timing on these, especially if you're undercapitalized, is nirvana, and there's no way to pinpoint that because I've had people with lower sized accounts try to ramp up their accounts because they'll write me. It's a process. They'll write me and say, I love what you do, 45 days, but
boring. I want to make more.
I got $10,000. I want to
make 100. Yeah.
So I say, well, then 0 days might be the place, for you to go. I mean, if you're looking to ramp up your risk and ramp up your profits and ramp up your losses, that's the place to go. And they'll do it on the 1 or 2 days prior to, or the first day that we have a huge move, and most of the time, they can't use more buying power, so they're not rolling anything down. They're pretty much setting it, forgetting it, and stuck, and they take full losses, and it basically makes them too gun shy to ever do it again, or they don't, they hate the strategy, it didn't work. So I will say, you have to give the process some time, and it's for the accounts that are $50,000 to $100,000 in nature, where you can take a 2-day loss in this strategy to make 3 or 4 or 5 days to get it back and stay in the game.
Yeah.
Where in a smaller account, you can't afford to roll up, you can't afford to use more buying power. You can't afford to be wrong on day one. It's the old saying about everything on the floor. Even like, you asked me earlier today about being a floor trader. You had to be profitable in your first month of trading, or you didn't get a second month of trading because you didn't have the capital to sustain it. I started with $5,000. If I lost money, I didn't have enough money to pay my seat lease the next month. So it was not a matter of sustainability. It was all or nothing, and this 0-day strategy is all or nothing. And it can be, I've never done crack cocaine, but I assume it can be like crack cocaine, where you really get used to these profits and how easy it can be until it goes wrong.
Yeah, and then you size up, and that goes to what we talked about with Jim. It was like, you start getting too big because it's free money, and then one thing goes wrong, and now you're get spanky pooed.
Yeah.
You gotta be careful.
So that's because I see 90% overall wins, and I'm all in.
Yeah, you gotta be careful.
Yep. Next slide, please.
But the takeaways we'll explain. CVAR remains almost identical across days and entry times, showing that tail risk exposure was extremely consistent. So if you are having losses, they're usually full losses. Like, there's not a lot of wiggle room here. And that goes to what you were talking about of you have to be able to have that string of, a couple days, week, 2 weeks where you're losing all of them. And that's a hard pill to swallow. Profitability varied. So Mondays were the strongest day overall. Tuesdays and Thursdays underperformed relative to other days. So over the testing, it's been Monday has kind of been the best day across the board.
We missed it.
And we missed it today.
You gotta send like a calendar alert every Monday.
A reminder, today's the best day. All right, next time.
Simplify.
Yeah.
All right, let's take it.
No, we got one more. 2. Remember?
Oh, that's right. These are doubles. I forgot. Thank you. I'm old.
It's a lot.
I appreciate it.
There's a lot going on. The last 15 minutes of S&P 500 performance. What do you think? Last 15 minutes. Up, down, inside, outside.
We're at all-time highs. It's got to be up, I would imagine.
Let's take a look.
Going to be inside? Darn.
Yeah, it's going to be inside. So this is a distribution of the last 15 minutes of price action. You can see it is fairly normally distributed. And it's relatively tight. So 85% of the time we're in a 0.25 percentage range. And so this is in the last 15 minutes. So that doesn't seem like a lot, but it can be like 10, 15 handles is kind of your range here. When we get over to the next slide here.
So just by seeing this right now.
It doesn't tell you anything. It just tells you that we're inside. Sometimes up, sometimes down.
So let's extrapolate out here. So if you're putting on 0-day trades in the last 15 minutes and the option pricing, and you believe the option pricing is telling you what the expected move is, and this is showing you that the expected move is inside that volatility cone most of the time, putting on trades 15 minutes before might seem like you're risking a lot of money to make a little bit of money, but the numbers play out.
Yeah.
Okay. Especially if you manage a little bit early. So maybe that's even a little thing you can do. But you gotta be careful. This is really flirting with death.
Yes.
Go ahead.
Next.
I would hate to do this.
Yeah, you gotta be careful.
Yeah.
Careful.
Well, be careful. You mean you have to be profitable because you can't be any more careful.
Small.
Or small. Or small. Yes. That's the key here.
And we're looking at SPY here. So 85% of the time we're in a 0.25 percentage range. And so this is in the last 15 minutes of price action. You can see it is fairly normally distributed. And So for the last 15 minutes, 48% higher, 50% lower, 1.5% were basically unchanged. So it's exactly 50-50. There, like it feels like, and back in prior years, prior to COVID, it felt like the last 10 minutes was a 5-point rally every single day. In our back test, it's basically 50-50. There's no like trade here is kind of, I think, the key here. Next slide. So we looked at the number of outlier moves. This kind of gives you the, you see this pretty clearly that the summer months, the middle of the year, are kind of your, that's when things kind of dull out. You can see here, June, July, you really don't have much craziness that happens in the last 10 minutes. A lot of that has been structured towards the beginning part of the year. Going on to the next slide here, we did this by day. So you looked at outlier moves per day. So Tuesday has the smallest median percentage move for the SPY in the last 15 minutes. You can see here across the board, they're all kind of consistent, but Tuesday, for some reason, has been the tightest range at the last 15 minutes. I don't know if you take too much from that.
No, I don't think I take too much.
It's a cool, it's an interesting fact.
Yep. Interesting fact.
So a couple takeaways. Tight and predictable ranges. So SPY stays within a very narrow band in the last 15 minutes most of the time. Outliers are rare. The large moves happen about 1% of the time, but can be big, of course. So you want to use defined risk. And this last 15 minutes, as you talked about, it's great for non-directional strategies. You just have to keep in mind that, it's small. You're picking up pennies in front of a steamroller.
Seems like that.
Gotta be careful.
Be a very, very hard thing for me to do.
Yes.
If I did it at all.
Yes.
Let's take a quick 90-second break and come back. We got more Tasty Live as even the S&Ps haven't moved too much, about a 5-handle move all day long. Volatility in by 45 cents. Russell still the strongest of the group, up almost 1.5%, $36. A big move. Even the S&P's up 31. We'll take a quick 90-second break and come back. We got more Tasty Live after this with G and Ryan. Money? Is it Glenn and Ryan?
Quentin and Ryan.
Quentin and Ryan.
Beautiful. Come on.
Back in 90 seconds. My man Q.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower.
What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, shitting like an elephant. That means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear 145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
Nikki, we are back, son. You know what that means. We've got my friend Q in the house. What's up, Q?
Fellas, how's it going?
Good to see you. I got to imagine today's a relatively slow day on the trade desk.
Yeah, it's pretty quiet. I don't know what the calls are because I'm helping like train some of the newer folks we're bringing onto the trade desk.
Right.
But
How do the prospects look? How does the 2026 future team look?
At first, I'm like, where do these people come from? But then, training program's good. We start to get them all trained. We've had actually a lot of growth on the trade desk recently, which is really nice. And as the business grows, the trade desk needs to grow too. And so, we've been having a lot more people train up, and these new ones, I'm like, where do they find these people? This, that,
He's
and no,
Gen
they're all
Z, or he's turning into one of us. You're Gen Z, though.
You get old quick. I mean, you can't even rent a car, right?
I cannot rent a car yet now.
You cannot rent a car. He's getting old quick, though. He's getting old quick.
See, that's what he said. He said, where do they come from? They're like a couple years younger than him.
Yeah,
I remember were you the one that talked about, like, if you didn't own a house and you were an adult? Was that you or was that somebody else?
No, that's definitely not me. I'm actually of the party that I think buying a house is a scam. Like, I'm not a big fan of like buying a house, like feeling forced to buy a house. I mean, to me, buying your primary residence, that's more of a life decision than an economic decision. But
I could go with your thinking. You're talking about married and school.
Yeah, it's like, all right, I'm going to start a family.
You got to be close to where she lives, right? Where her family is and stuff. I totally agree with you.
But people are always like, oh, like I need to buy a house now and stuff like that. And I'm like, there's no need for the. You can rent. You're a single person.
Sure.
You want to be flexible and stuff like that. Yeah, people are always like, oh, like. I'm 25, 26, 27. I got to start looking at buying a house. I'm like, for what? What's the rush? What's the rush? The market.
So when do you become an adult then? Like, is it when you could rent a car?
It's a great question. According to Jason, it's when you have a Costco membership is when you become an adult.
It's a good one. That's
one of which I do not.
I thought it was when you could rent a car. I was going to say you're an adult when you could, because you can go to war already. I mean, obviously you don't have
I've been able to go to war. Been able to do that.
Right. You'd have to take an Uber. You wouldn't be able to rent a car.
Yeah, it would not be. Yeah.
Right.
Pretty quiet market so far. I think like the last time I came on here and said something, the market like cracked right after that. So you don't want to use me as a barometer.
Okay.
However,
we used to use Tom on when he would get on a flight. That was like our batten down the hatches.
Yes. Tom did say to me this morning. He texted me, goes, "I'm thinking about putting the gold silver pairs trade on. I didn't want
to." This is moving good now.
Yeah, it's moving good for you. Yes. So let's.
You know what? He's been in it forever, and he's going to add to it. This wasn't his first time he was looking at this.
No,
he was shorting gold when it was at when we were going up 200 points a day.
Oh, absolutely. But
so he's been selling silver. I don't believe that for a second.
Oh, he's short silver as a whole too. Yes, as opposed to the pairs. He was thinking about doing that too. So it's 64.85. So it's moved about half a percentage point or a little bit more.
Yeah, and we were talking about the follow page earlier to this. A lot of people love the follow page. That's where all the trades that these two do, and like Liz and Jenny, other people as well, like Mikey, Jamal,
even the Shark and
he's
Jamal.
the number one. He's the number one contrarian indicator.
Who, Shark?
Yeah.
Yeah, because even right here, Shark G right there at the bottom. Yep.
Yeah, so we were talking about that. You can see on the Tasty Trade platform, you can see all the trades that you guys do, which is super cool and a unique feature. We hear a lot of customers. I feel like we don't get a lot of calls about it because there's not, we get calls about the like problems and stuff like that.
Right. You usually don't have a problem with the follow page.
We don't get a lot of calls about the follow page, but we do know there's a lot of love towards it. Good. So shout out to everyone involved. A lot of love from the follow page, getting all the trades that you guys do.
Very nice.
All right, let's get to my list here.
Let's do it.
20 symbols going through the system and their IVR. At number 1, we've got Tesla, 7, GLD, 48, SLV, 84, NVIDIA, 1, Palantir, -3. That's because intraday, it can go negative and above 100. PLTR, -3. Micron, 34, IBIT, 43, AMD, 14, SoFi, 3, Oracle, 45, Rocket Labs, 30, Meta, 0, TQQQ, 17, Netflix, 36, Broadcom, 9, MSTR, 31, GDX, 61, Amazon, 5, Google, 2, and CoreWeave, 16. GDX, good for them getting up there, the volume. That's
the junior miners.
Yeah, the junior miners.
GDX is just the
That's just the miners.
Just
the
the
junior miners
miners,
is GDXJ.
Yeah.
Right.
Yeah, but good for them getting out there. You don't always see them on the list, so shout out.
Yeah.
Somebody I think named Allie, I'm not really sure, says, I was dunking my donut in coffee this morning and thought to myself, I'm an adult.
There we go.
So maybe when you're dunking
like
your donut
that.
in coffee, I'm a dunker. You a dunker?
I don't really drink coffee.
What?
Dunker in milk, cookies with milk?
I'm not. I wouldn't really say
You can't laugh. You can't laugh, Brian. You can't laugh, Brian. You're live. Go ahead. Whatever.
I wouldn't really say I'm a dunker.
You're not a dunker.
Not really, no.
You're a dunker?
Oh, yeah, yeah.
I might have to dunk now.
You're not a man until you dunk.
You're making me crave some like Oreos and milk though. I can't tell you the last time I did that, but now I'm kind of craving it.
All right. Good job out of you, my friend.
All right, thank you.
All right, back to work. Off with your head. Who's next? From parts unknown, my man Ryan. What's up, brother?
Oh my God, I'm trying to keep it together over here, guys. I apologize. I should have been on mute.
It's okay. It's okay. Nobody really knew who was laughing. I just outed you.
You're hysterical. I love listening in.
Are you a dunker?
10 minutes of this. Once in a while, yeah, I'll dunk.
Okay, yeah. You're a man.
You gotta live a little.
You're an adult. Sorry, you're adult.
Yeah. I appreciate that. I haven't recently, but I'll dunk. I am 38 though, and I would love to own a home. Quentin, I'm not sure what he's talking about. Yeah, let's get interest rates back down here. Let's, prices aren't going down. So the longer you wait, the worse it's going to be, I think.
Yeah, he's
right. So what are you waiting for interest rates to come lower? The $10 a month ain't going to save you anything.
Listen,
okay,
Ryan, we're seasoned now. I didn't want to say it while he was in here, but he's still, young and the future's bright, and you just work hard, and the American dream is here for you. Like, he's 24. He has no freaking clue the shitstorm that will pass to him like our fathers passed to us. Like, it rolls downhill, and his will be even worse than ours. Like, he has no clue. He has no clue. He's just bright and
you guys have no idea what it was like when I was growing up. Gas went over $1 a gallon,
and it was, oh my God, it was horrible.
Well, I think the line for me though was taking an Uber to war.
He can't rent a car. He's too young. Can't drive himself to the whatever the ROTC or wherever he's got to go. Yeah, he's got to take an Uber.
I got tears in my eyes. It's good to see you guys.
It's good to see you, man. Good to see you. Anyway, what do you got for us today? Hey, crypto.
Yeah, you can get out of your mom's basement. We're back in 90K. You can buy the house now.
For a moment, yeah, it was looking better. I think I don't know what you guys got. I got 89.3 now. So depending on what exchange you're looking at, it's chopping.
Mm-hmm.
But yeah, not much has changed. Look, I think trend remains bearish. There's no way to ignore that. I think the structural setup, you look out the next 3 to 6 months, it's probably better. Market prices, some changes in. We've got liquidity on the margin that's coming. You probably get a new Fed chair. Like some of that stuff that maybe matters to the market long term, I think starts to get priced in. But for now, I mean, you're seeing every rally over 90 into 94. It's been the top of that 1 week, one standard deviation move. It's just been slammed back down.
Yeah.
So I'm waiting for that to change. You still need to recover those levels.
You're waiting to buy a house. Yeah. Are you waiting? Wait as long as it's to buy a house.
I'm gonna be homeless. I'm gonna be homeless, and ETH will be trading or Bitcoin will be trading like 56. So.
Still homeless is what you mean.
Homeless and no savings.
Exactly. Yeah. So until that changes, in terms of the price action, there's nothing that I'm all that excited about. We'll see now that we got post OPEX here out of December. Markets obviously are trading a little bit better here. The profitless tech is finding a little bit of a bid after being slammed down. So I think Bitcoin and crypto at large is going to remain correlated to that, as we've seen. And if we do trend higher, we just kind of levitate here in equities, I would expect that you probably see similar price action in crypto. But again, until you get back above 95 and maybe retake that big 100,000 psychological level, 35 in ETH, I'm just not really excited to buy dips. I'll buy big dips, down to 75, some of those key levels that we've talked about. but you're just getting chopped up here at the moment.
Yeah. Do you take anything out of the? I feel like, and I've been kind of trading around this too, but you kind of get the overnight bid in Bitcoin where, kind of the open is near the high of the session for Bitcoin. I've been selling calls against long shares of IBIT that I have. That's how I've been trading around Bitcoin. But do you take anything out of that? Do you think that's just kind of the chop, or is there more to it than just the fact that, kind of the overnight session has seemed like the strong part for Bitcoin, and then during the day it's just constant hammering? Like even today, the high for the Bitcoin futures was 91 spot. I have 90,300. So we've sold off, $500-$600, which is about 30% of the move. It was up like $1,500 to only up 900 right now. Do you take anything out of that, or just that's just the choppiness?
It's definitely
dispersion?
a strategy. I don't know what's behind it. If there's somebody that's waiting to unload when the U.S. equity market opens, but short term, that's been a strategy. It's worked really well. Like you mentioned, kind of levitates higher and then slam it down on the open. You've seen that in times with U.S. equity futures, right? Yeah. You've seen those charts where it's like, look at the performance. If you just bought it at the close and then held it overnight and then sold it on the open, you outperform significantly. I don't think that persists forever. To that point, though, I was talking to a former trade desk manager, Kevin Labno, and he told me over the weekend that there's an ETF launching to actually take advantage of this price action in the Bitcoin market.
Yeah, I saw that. The fee is I think is like 125 basis points or some insane number, because it's all like, it's actively managed and it's day to day. So there's always that piece. It's like, oh yeah, we'll make this product and then we're just going to scalp 1% off the top.
Yeah. So it's working for now, right? You look at the charts, and short term, that Bitcoin price chart kind of looks like people will compare it to Bart Simpson's haircut. These are just $5,000 spikes and then slammed right back down. So if that's the trading range and that's the kind of characteristic of the market right now, I suppose that's working. I'm not really looking to kind of trade that and hope that it holds up. But to your point, there has been something to it over the last couple of weeks.
Very good. Very good. You have a slide for us?
Yeah, got the quick updated ranges for you guys. That said, not much has changed week over week since we last talked. Vol has come in a little bit here, still a premium between implied and realized vol for Bitcoin and ETH. We don't always see that, but we do have a premium in there now. Realized vol has come down. I would expect, barring any sort of news into the end of the year here, we probably stay near these levels, maybe even dip into the 30s in realized terms. But your Bitcoin expected move is about 5,500, same as it was last week. The range has moved up a little bit more, but you'll see here, still within that implied volatility, 1 week, 1 standard deviation move, we do not have a top of the range that is any higher than where we've been. So that's well within where we've traded, right about 94, 95 is where we've run into a lot of selling. And then the same thing, we've seen some buyers show up kind of mid 80s. ETH, nothing has changed there. Smaller expected move here as volatility has come in. And then Solana, SUI, XRP, again, unfortunately, nothing to write home about. Expected moves are pretty low versus where we've seen them earlier in the year as we round things out here.
Yeah, volatility is low across the board, just about in everything. You got vol in the market under 17. I'm just talking about /VX. If you look at VIX after volatility rolled, you're down to 14.5, 14.54. Which at 2 is probably one of the lowest levels. And you've got assets, unfortunately, like homes, gold, silver, going higher and making new all-time highs there too.
Yeah, I think that's a great point, Tony. Who cares about this quote-unquote digital gold at the moment when, personally, I'd rather be trading gold, silver, and my God, platinum.
Yeah.
Oh, yeah.
It feels like it was 1,300, 1,400 like a month ago, it seems.
Yeah.
Right?
Yeah.
Much more exciting.
It was 10 days ago.
It was at like 1,700.
1,700. Yeah.
Yeah.
If you want to go back to if you want to go back to November a month from today, you were looking at around 1,500. So yeah, it's gone from 1,500 to 2,100.
You really have been talking to Lab No, because him and Chris, they trade platinum like crazy people.
Yeah, I don't know how you do it, but I get it. Yep, I get it.
It's a big contract.
It's a big contract. You dabble. I know you.
I've been there once in a while. I prefer much more dangerous things like natural gas, and crude oil. Yeah, platinum's cool and everything, but have you guys ever traded oil? You know,
size up.
We'll get them there.
We'll get them there.
We'll get those guys there. Yeah.
Hey, good job, Ryan. Really appreciate your time. Thank you for coming in today. And because you did come in, Bitcoin just went over 90,000 for you again. 90,000.
There we go. We're back.
100. Look
back.
at you. You'll be.
I also wanted to put out there. We got some people in the chat. We're talking about like adulthood. The real measure is how much pepper you put on like your food. Like when you start getting spicy, you put some pepper on it.
Good point. Good point.
That's another good one.
Cracked black pepper, or are they talking
I think
about
either one? Like just like spicing up food. Like it's like
I agree. I find myself with a lot more pepper on my eggs these days.
Yeah.
Good job out of you. Good job out of the team. Ryan, you're probably not putting pepper on anything, right?
Oh no, I would put, if you're eating plain eggs, then I think there's something wrong with you.
Yeah, totally agreed.
Good point. Let's not alienate those people too. We're gonna take a quick 90-second break and come back. We got more Tasty Live. Immediately following these messages. Peace. Lynn J next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. We both decided to wear green.
I know, and I've got red on deck for tomorrow, Liz.
Oh, I don't know what I have on deck, but I might have to bust out some red. I'll try to comply with you. But this is a follow-up. Did you see the Dr. Jim segment this morning?
You know what? I was getting my hair colored. I had a 7 a.m. hair appointment. So no, I was coming in hot, ready for the show.
Okay, so he made his wife watch Die Hard, and he's like putting it to bed. Die Hard is a Christmas movie. And my husband gave me the shirt. I'm a big proponent. I've said it millions of times if I've said it once. Die Hard is 100% a Christmas movie. But
they are at their Christmas party. Like all the action happens during their annual Christmas party. So yeah, I agree.
Okay. And I like this. I went downstairs and I told my husband this too. I was like, Dr. Jim said to put it to bed. It is a Christmas movie. If you listen to the soundtrack, it's all Christmas songs.
Yeah, no, I don't think I ever fought you on this, but I know it's a worldwide.
Fought me on this. I just wanted to put it out there to all the naysayers in the world. That's like,
yeah, I think there's a national debate on this, but I like the shirt. I like the shirt. When is that new this year, or did you get that last year?
No, Dan gave it to me like 2 days ago. He's like, it was one of your Christmas presents. He's like, but then I figured if I gave it to you on Christmas.
It's too late to wear.
Yes.
Love it. I had to give my husband one of his Christmas presents too. He had to go last minute, like Bears Packers party, and he didn't have any Bears paraphernalia to wear. And so I said, well, these will be, a couple less Christmas gifts under the tree for you. But I had to give him all the Bears stuff I got him.
How come he had no Bears stuff? Your husband's a huge Bears fan.
He had like Bears sweatshirts, but nothing nice enough to wear out.
I see what you're saying. I
got him like a nicer Bears shirt, and it's hot. The Bears paraphernalia, they're hot commodities. I went back out to get my brother-in-law the same thing I picked up for one of our grab bags, and they were gone. Like all the Bears stuff off the shelves.
Really?
Yeah.
Well, yeah, for the Bears Packers.
You could find like a men's extra small, but you're not going to find like a...
That won't fit my house. Perfect. Everybody's looking for a men's extra small.
How many people? So I know, like, of our circle, I know 2 people who turned the Bears game off before it was over, because when they were like, I can't watch this. I can't watch them lose again to the Packers. And so I know 2 people, my father-in-law and our friend Mandy, who turned the Bears game off before they won.
Are you serious?
Yes.
So I'm going to see if I have a picture of us watching the Bears game, because I do. I'm gonna tweet this because it's pretty funny, okay? And then I'll show you who I was watching during the Bears game. This is wonderful. I love the live.
Okay, well, tweet it out, and I will. Hey, there's not too much going on in the market. SPOOs are up 33. They've been up 33 pretty much all morning, right? As far as I threw. The market knew there was going to be nothing going on. I threw on the SPX calendar this morning. It was literally only 6. It was the cheapest I've ever seen it. And since I've been doing it for the last month, it was the cheapest I've seen it. I've seen it usually around $8 or so, $8, $9. I've seen it as high as $14. Today, $6.80. I paid $6.80 for the calendar. That tells you the market's not going anywhere.
Well, and there's no numbers coming out. There's no numbers tomorrow on tomorrow's not Christmas Eve. Tomorrow's the 23rd, but there's no numbers, right?
I don't know. I really don't know, Liz. I'm like knee deep in Christmas party. I haven't heard the news.
Okay, now can you please go to Twitter and sure. I'll show you what I was watching during the Bears game.
Hold on, let's see. The dog standing right in front of you.
So, I mean, it was great. There were so many people. We were all watching the Bears game, but that's Hank. And he sat like that for like 10 minutes just staring at me. So I took a picture of him.
Oh, my gosh. Cute.
Yeah, he's a giant puppy. Like, he is the biggest puppy you'll ever see in your entire life. He's not even 9 months.
Looks like a puppy. It looks like their tree is hitting the ceiling.
Oh, it is. And they have high ceilings. Everybody's sitting, but they have really high ceilings, but it is hitting the ceiling. But yeah, this is what I was watching during the Bears game.
Oh, cute. So Logan had 6 boys, 6 of his high school friends all over for the Bears game. And literally in the end, our house shook as if there were an earthquake.
Oh, this place was going bonkers too. I mean, the dog had no idea what was happening. But it was fun. This was actually my husband's 50th birthday. We were there for his 50th birthday, which was kind of crazy.
Yeah, how were
everybody kept being like, "How old are you?" He's like, "I'm 50." They're like, "Today? You're 50 today, and you just came to a Bears party?" I was like, "Yeah. What else are we gonna do?"
How were the 50th birthday weekend festivities?
It was fun. I saw all of our college roommates on Friday night. We missed you, or all of our college / high school friends.
Yeah,
on
I was gonna say like, well, Liz and I didn't go to college together, but I would visit her those guys over for maybe like every Thursday or every other Thursday because by the time I was a junior or senior, I had no class on Friday. So I would come.
I felt like we went to college together. So we had our friend's Christmas party, which you were sadly missed at. So it was like I felt like I was in college. To go from that, it was like party after party after party after party. It is the season though. As my husband says, his birthday kicks off the best week of the year.
Oh my gosh, it is a crazy time. I feel bad I wasn't there, but this is where I was. I'll send this picture. Let me see if I can. I couldn't make it, but I was hosting, and I don't know if I sent you a picture, but I had so many people at my house for brunch the next morning. I just couldn't make it to the party.
I know. I did. Are you sending us the food? Because I know you didn't take any pictures of people.
Here, let's see. I just posted one. Okay, so
looks awesome.
I fit 23. I could have fit more. I could have fit 25 people at that table.
You're taking a page out of my book. That's what I do every Christmas Eve. I extend my table all the way through into the living room. You throw a tablecloth on over it. Bada bing, bada boom. Did you rent those chairs? You must have.
Yeah, I got rid of I took all my dining room chairs out and rented those chairs because then you could fit way more. That was a hack I learned on Twitter or on TikTok.
So that's why, if you notice in my house, I always have those long benches, and everybody's like, "Do I have to sit on the bench?" I was like, "You're a bench person. Get on the bench."
Well, so you could see the bench. I made only 3 people on the bench because you know who controls the bench?
Clarence.
There he is. He had his spot. That's his spot. So he had his spot. So I only put 3 people on the bench because there had to be room for the dogs.
Oh my God, that's so funny. So funny. Okay, so the market is really doing nothing. Can we take a look where the VIX is? And today is the 11th day of Christmas. Sing it, Jenny.
On the 11th day of Christmas, our traders gave to me
lessons that we learned in 2025.
Hey, good. We've got some good ones. We've got some good lessons.
Yeah,
so we'll talk about that. Here's taking a look at the market right now. We've got SPOO's up 35. Let me just price out I want to see where my calendar is now. If I paid $6.80 for it, I'm just curious as time is ticking on. I bought it around 9:15. 0 day, it's the 65. So I sold this one. Bought this one, $7.70. It's not, it's not moving that much. I paid $6.80 for it. It's $7.60.
So I was looking at your calendar that you did the other day. I know you took it off, but I priced it at the end of the day, and it was only up $400, and you were pinning the strike.
Yeah, and it only was $400. I know. There was There wasn't a lot. So was there that little premium left in the next day's option?
Yes.
I think it got a little bit in the money. I think at the end of the day, I looked at it.
No. You were 20 cents away from pinning it.
And but at the very end of the day, at the very, very end of the day, it was a couple dollars in the money, and it was still only so let's say the next, I don't know. There wasn't, how much was that calendar at the beginning of the day?
I don't remember. All I know is it wasn't that much of a winner.
It was like a $400 winner at the end of the day. So I decided with these calendars, I'm taking, today I'm going to shoot for 20%. It's interesting. If it's an expensive day where it's a $1,400 calendar, maybe I take 10%. But on a day where I only paid $6.80 for it, I think I'm going to shoot for 20%.
No, I think that makes sense. I think that totally makes sense.
I don't know.
Okay, can we take a look at the VIX? I want to see what the VIX is doing. SPOO's up 37, but it has been a very slow
I'm gonna
drop.
Guess 16, 1590, 1450.
14!
That's why I should have known. With that calendar being 680, I should have known. That's insanity. Insanity. So let's get along some VIX. What do you think?
We can. I think it's going to be a slow. I think the Santa Claus rally has begun. And I think through the end of the year, it's going to be a slow bleed. So, if we want to get long VIX, I want to get it long later.
So, right. I mean, I don't know, but VIX at 1447, this move, that's nuts. Nuts. Look at that.
Well, it's been
when it gets this low, it doesn't stay there long. But in order to get long volatility and profit on getting long volatility, you have to time it. You have to time it perfectly because VIX has the drag. So you have to time it perfectly. So we get a lot of emails that'll say, like, how do I get long volatility? And we'll say, just get short the market. But I don't want to get short the market. I don't know about you.
I don't want to get, I don't want to. I kind of agree. And volatility, it's so funny because you're right. Eventually it will pop back up, but you have to time it perfectly. Can we
we're at the lows. I mean, you take a look at this. How often is it in the 14 handle? I mean, we used to see this a long time ago, but since COVID, we don't see it this low that often.
No, we don't.
No. So if you were to get long vol, you'll see it's hard. It's very hard because if you go out to VIX, if you go to like Jan 29 day, here, it's not pricing a 14 VIX. It's pricing a 17 VIX. You look where the calls and puts are the same, $1.30, $1.30. So the 29-day VIX is 17. It's just like this Christmas week VIX, that's the 14.
Yeah, it is, which is kind of crazy.
So you can't just say, oh, I'm going to go get long volatility, because if you try to get long volatility in 29 days, you're getting long the 17 VIX.
Yeah, and I'm going to put this on as one of my big lessons. How about so kind of to tie this up with a nice little bow, I feel like this volatility is one of the lessons that I've learned. I think volatility is a precursor, right? So kind of going through this, I like this lesson. The old trader trick is she knows that the future price is 17 because it's where the calls and the puts are trading closest.
Yeah, calls are at $1.35, puts are around $1.40. That's where the calls and puts are the same. That's where the money is and the VIX in that time frame. So to say you're going to get long VIX, if you're going to think you're going to hold it for a month, you're getting long a 17 VIX, not a 14. Now, in the 1 day, we've got VIX. So let's take a look. You can just go to SPX. So you can go to SPX and you take a look. You've got the 0 day 12, 1 day 11, 2 day 10. And what I'm curious to see is this end of year, end of day, end of quarter, end of year.
End of quarter, end of everything. The end of a quarter of a century, Jenny.
And that's only a 75. If I thought about this today, Liz, if we thought we weren't going anywhere, and we wanted to give ourselves a little room, the 68.85, how, could we do the 68.85 and every day try to chip away, so that when we get to this 9 day, we're left with our 68.85.
But go for it. Well, I was going to say, we have a very similar situation to this. Go to SPY. We left that one long option. I do like it in SPX. I understand where you're coming from with this, but we left this one option as our Santa Claus rally. It's January 2nd.
And it's at the money. It's at the money.
So if you take a look at it, go back and can you see what we had on there? We left this saying, okay, if we think there's going to be a Santa Claus
rally.
Yeah,
but we paid like $7 for this.
Yeah.
So, we could try to chip away at that cost a little bit.
I want to.
But if it blows through.
That's what I'm saying. I'm fine with this. All I'm saying is if we were looking to do that in SPX, we already did it in SPY. Do you know what I mean?
And it makes sense. Okay, so the little calendar I was looking at was like $30-something $100. If we took this 685 and just bought the 685 in SPX, it'd be $4,800. 10 times. So it's expensive, but this is like 1/10 the size in SPY, and this is making a comeback. It really is.
It is.
And with such a low VIX, you're not giving up a lot. To think you're giving up 480, and I know we don't like to pay for options or pay extrinsic value, but you think you're only giving up like 480 in extrinsic value for 11 days. We got a $4 move today.
I know. Well, that brought us right back. I think we left that as like our hope that we would kind of, slide gracefully up into.
I mean, I don't know if we want to do something with this 480, if you want to use that 480 and turn it into like a little bit longer term diagonal. I don't know. I don't know.
You could, but all I'm saying is when you were looking at the SPX, I knew we had this residual option in, and today was doing good for us. Like if we go up to 700, that was our point. We said,
I know if we go up to 700.
I forget what show we were on. We're like, we think we're going to go up 700 or 7,000 or whichever one you're looking at. If you're looking at SPOOs or SPX or SPY, 700 in the SPY, whatever 100 in the SPOOs. Yeah. That's what we said. If that was our prediction where you can touch it before the end of the year, that's why we had that option in.
Let's keep it on and hope for SPY 700, SPX 7,000. I mean, that would be, again, we're the two of us are positive thinkers. And we're positive people. We're positive people. We're going for SPY 700, SPX 7,000.
Yeah, before the end of the year. I mean, was it last December? Can you go back to last December?
Sure. Wait, did I pass it?
Yeah, you passed it. There's December 2nd, just go straight up. Yeah. So that's it. I mean, we went into the beginning of the year. So December, there's January 1st. We went to
down.
What we thought was all-time highs, and then it plummeted to the depths.
It was down. So basically from December 26th till the end of the year, it went down.
Mm-hmm. And that was supposed to be the Santa Claus rally.
And at this time, we were probably rooting for, 615.
620.
620, 615, 620. Yeah, because I remember like at the end of the year, I gave up some of my profits, like that last week.
Oh, right there. That's your.
I was like, yeah, this day. What day was that? December 18th.
We're already past it.
But I do think I gave up some of my profits in that last month.
Can you do me a favor? Will you see where the VIX was between December 18th and January 4th? I just want to see where the VIX is during that time.
Can we see the daily? Let's see. Yeah. Okay. So here we have, let me zoom in a little bit.
I mean, that's close enough. You can kind of tell from there. That's all I needed to see. There's December.
So this is December 18th.
Yeah.
So before, let's see how low it got here. So here we were, 12.
Wow. That's what I'm saying. Whoa. Like we think 14 is low, 12 is low.
Yeah. And then it spiked up as high as 28. That we had 28, 24, 26. And then by December 24th, it was down to 14.
Yeah.
Okay, so here, like, this is kind of like, okay, so now we've got 14, like we're seeing today. The next day, 14. Then December 27th, up as high as 18.
But it closed at 50. You see what I'm saying?
No, and then the next day, up to 19. And then,
well, because we did not get the Santa Claus rally that we were all.
Yeah. So by December 30th, we were 19.
Yeah.
I'm going to go back. I'm going to go the year before this and see how that was. Because typically we would think we're just low VIX. Okay.
Yeah.
And I'm going to zoom in a little bit more. So here we have end of the year, 12, 13. 12. The little spike we had, 13, 14.
Yeah.
I would say that's, and I don't want to, this isn't like a study. I'm not going to go back too many years, but you would think that's what we usually see.
I don't know. And the VIX is, I like looking at the market instead of the volatility because you can't time this perfectly. Like to your point, if you feel like shorting the market, it's the same thing as if you were getting long. It's the same
right. Yeah, if you want to get long vol, the vol is so low right now. The vol is so low. If you're thinking like, well, I mean, long vol for the end of the year, just go a week out, go to the 4-day and buy a put spread or something like that.
Yeah, because
there's no vol there. 90%.
It's a cheaper way to do it too.
Yeah, look at that, $1.75 for the 684 in the 4-day. But again,
so the markets are open on Friday. Let's talk about this. So the markets are closed on the 25th. They're open on the 26th. We are not here on the 26th, but the markets will be opened.
Wait, we're here on the 26th, aren't we?
No.
We're not working the day after Christmas?
I don't believe so, no. Well, you might
John,
be.
Are we working the day after Christmas? We always have in the past.
We have in the past.
No.
I think the regime change is helpful. Yes, you're not working the day after Christmas.
So my sad story of telling everyone at my party, like, I got to work the day after Christmas, that was a lie?
Yeah, you lied.
I didn't know that. We've always have in the past. Like in the past.
Have you not been reading the emails, John? She needs to be reprimanded.
Oh, this is Christmas miracle. I didn't know this. So we're only working Monday, Tuesday, and then we're off the rest of the week?
Yes, Jenny, yes.
I must have missed that on the holiday schedule.
And then, okay, so now we are taking live tweets with the hashtag LAZJNY. So we've got some really good ones coming in. Can we go to Twitter and not just look at the dog that watched me on?
Sure. Okay, hold on.
We have some that came in before us as well, like before you and I tweeted what we tweeted. So if you
Oh my gosh, this is the best one. And I'll get to everyone's. And I don't want to say like this is the best, but no one else's is good. But look at the look at Ashvin. I guess I watched a lot of Tasty Live this year. He top 0.6% of viewers.
Ooh.
Nice work, Ashvin.
How do I know what percentage am I?
You'll see this, like you can see this on I don't know, my daughter looks at hers for Taylor Swift. Like I remember that one year she looked at hers for Taylor Swift and see what top percent of her listeners were. I don't know. Maybe on Spotify?
I don't know, but I like it, Ashvin. You get a gold star.
Yeah, where did he get this from? Maybe, I think Spotify gives it to you.
Okay, well,
but I'm not sure.
And then Frank came in. That's 17 hours ago, so I think we got to everybody.
I just wanted to show that. And
Frank, economic calendar?
Nothing really.
Okay. I know this is a Jeet. I can tell by the organizational skills put into it.
Yeah, he's on naked put in Tesla. Honestly, I like it. Naked put in Tesla, short put 497. Let's take a look at that.
So I like it. I mean, I'm bullish Tesla. I know my son is too, and I'm bullish because he is, just because I like to have the same things that he has on.
Tesla, I'm going to see. Was it January?
I think so. I can look at his. Let me.
Wait. Would it be this in the money put?
It's January. He's January 16th. He's selling the, let me see what strike it is.
Was it 427 instead of 497? 490. Oh, spot. That's where it is. Spot 497 short put. Expected move. IVR. Net delta.
I can't tell what put it is. Do you know what put it is?
Tesla at 497.
I can't tell what put. Well, we can tell what he's getting for credit. He's getting
here. It's way down here. 440. It's the 440.
Okay.
It's the 440. So he's selling the 440 put.
He's getting $6 in credit. So you can kind of work backwards.
Yeah. Sure, Ajit. I don't mind it. You're in $5, but it's using 15,000. It's kind of a lot, but you're getting.
Saying it's using a ridiculous amount of capital.
Hey, if we want to get in with the Ajit, we could just sell at this put spread, but we're only getting $1.50. And then on that, we're not, that's the hard thing. That's why I'm a big fan of naked options. Lower price products for smaller accounts, higher price products for bigger accounts. You got a big account, you're doing bigger products. You got a small account, you're doing smaller products. Like there's such a difference of, selling that put and getting $6 versus selling a $10 white spread and getting $1.50. It's just not worth, to me, that spread's not worth it.
No, I kind of agree. But Ajit's got it. I like it. I don't mind it. I do it in my own account.
Mm-hmm.
See what I have in Tesla, because I know I have something in Tesla.
Yeah, but I like it, Ajit. I like it. And who is this from? Bob, thank you. Thank you for always sending us the earnings. And thanks for this, Chris. Listen, Jenny, wishing each of you and your viewers a joyous and blessed Christmas.
Oh, thank you, Bob. We love it. Bob. You and your family, too.
Yeah, Merry Christmas to everyone. This is my first year.
I wonder what he's making for Christmas. It's got to be good.
I'm sure it is. I'm sure it's amazing. This is my first year in 25 years, 23 years that I did not send Christmas cards.
You didn't send them out?
I didn't even make them. Oh,
I mean, at some point it ends, right?
Well, in my mind, I keep telling myself I'm going to send New Year's cards because I just I dropped the ball on the Christmas cards.
Well, it's hard when the kids are older.
Well, I couldn't find one picture this year of all four of us. But we're leaving for a cruise. So I told myself, like, I'm going to get a picture on the cruise and I'll send New Year's cards.
There you go.
But a Merry Christmas to everyone. I didn't send any Christmas cards.
It is good to have goals. We'll see if we get those New Year's cards. All right, let's keep moving forward because there's other things. Oh,
Okay, I posted this. A couple reasons. If I knew we were going to be doing this day, I wouldn't have worn jeans. I would have dressed up a little more. Number two,
we had no idea we were doing it that day.
No, we walked in. I literally walked in I was going out to the shopping at the mall or something, and they're like, "Hey, yeah, you guys are going to be filming this today." I was like, "All right, okay."
I'm gonna surprise you with something too.
But this is funny, and we love the SIBO, and this was so much fun. Actually, so much fun when we got to be in the front of the Mag 10 pit. This was just like the teaser the day before. We had Rob Hawking on the next day.
Please refresh the Twitter, because I just posted something for you that I just saw, and it surprised me. So I think it's going to surprise you. Oh, you can't see the thumbnail. That's the best part.
Mag 10 launched, cash settled exposure. Love it.
No, you can't see the thumbnail. Darn it. Darn it. Okay.
Here, wait. Oh, here we are.
No. It was the thumbnail that I was trying to show you, but this is the next day when we had Rob on.
Oh my gosh. But he was great. It was great having Rob on.
It was.
Yeah. It really was. It was. He is a wealth of knowledge, an old floor trader from the SPX pit. Yeah, that was fun. Oh, and look at Mikey. Is this your position, Mikey?
This is amazing.
Here's my December 31st SPX Forest. Disregard the positive P&L. There is a glitch in the tasty analysis. Oh, but Liz, if you can blink for 6,600, 6,680, 6,710, 6,800, 6,850, 6,885, 6,940, 6,940, 6,980, 7,000. Come on, Mikey.
That's amazing. You worked so hard for this. I'm so proud of you.
Mikey. I mean, you deserve a gold star for this, Mikey.
For sure he does.
Yeah. That's crazy.
Yeah, it is.
Nice work. Oh, and if you're on the YouTube chat, Frank can take your questions and share them with us. He did this here. So Frank is watching the YouTube chat. So here he grabbed this from one of our YouTube people. How do you pick a short call on the diagonal? Great question.
That is a good question. Honestly, and I think we should go and show it, but without even you doing it, if I'm doing a diagonal, the short call is going to be at the expected move for the short call cycle.
Yeah, so let's say we wanted, hang on. Let's say I wanted to go, put on a new diagonal in SPY, and we did Jan Feb. We would go to Jan monthly, and you could pick your cycles. It doesn't have to be monthly. You could put them wherever you want. But I'd go to the expected move, like Liz said. I'll just go to 700. Then go to the next cycle. If I'm doing Jan Feb, unless I want to do I want to do Feb March? I don't know. Then I'll go to Feb and I'll buy the at the money.
So in my mind, the only decision when you're doing a diagonal is how far. And I'm like you just did in your head. Should I go Jan Feb or Feb March? That's the only decision in a diagonal. The short option is at the expected move for that cycle. The long option is the at the monies. That's the strikes.
And then this is what we're going to assess. I'm going to assess how much am I paying for this versus what is the width of the spread. So if this is the 685, 700, there's $15 difference between that spread, and I'm paying almost $15. I don't love it. I don't like it. I'm not getting enough for the short one that I'm selling. The spread is, I don't want to pay the width of the spread. And so then I'm going to reassess and look for something else.
I agree. So those are the only decisions. The strike selection is the easiest part of a diagonal.
So then what I could do would be highlight this 60-day and make it a shorter time frame. So so look at that. That went from the 60-day to the 39-day, and now I'm only paying $10.
But that's a big difference from 60 days to 39 days. Big difference.
I know. But then it went down from $5 to $10, so a third of the price, knocked a third of the price off. And then I have a $15 wide for $10. And I might be more likely to do a $15 wide for $10 than a $15 wide for $14.
Yeah. No.
Or maybe I'll check the Feb March. And if you do Feb March and sell at the expected move 710, and then you go to March and buy the 685, you've got $25 wide for $17. Maybe I'd rather do this one.
I know. I get it.
You have to look at you're paying and the width of that spread. Because if something happens and it blows through that spread,
But your strike selection doesn't change. Their question was strike selection. Your distance between your longs and shorts can change, but not a number of days between your long and shorts. But your strikes are always at the money for the one you're buying, and the short is at the expected move for that cycle.
But sometimes if I like really have a directional assumption on something, what I will adjust, I will always keep. So like, let's say I go back to this 25-day, a 60-day. I'll still sell the expected move, go the expected move and sell one there. But what I will change sometimes, depending on how much money I want to put into it, I know if I buy this at the money, it's so much extrinsic value. It's all extrinsic value. If I really have a stronger assumption, I don't mind putting a little more money at risk. I'll move this deeper in the money and give up less extrinsic value, and then you'll see a much bigger difference. Like here's the 665, 700. So there, I've got a 35 wide. I'm paying 29. So you're not paying like as close to the width of the spread. The less extrinsic value you pay.
And I understand that this is a diagonal. I understand that it is still a diagonal trade, but I consider this more of a poor man's covered call.
Yes. Then this becomes more like a poor man's covered call.
Correct.
Yeah.
Only just because it's easier with the names. You say diagonal, I think get the monies. You say poor man's covered call, I would go in the money.
Yeah. And if in the flip side, I wonder how it's pricing out on the flip side. Let's say to the downside, sold the expected move, and I'm just using the 670 to keep the math simple. Sell the 670 in the 25-day, buy the 680. There you've got only $10 wide, but you're paying only $7 for it. Mm-hmm. So honestly, because you're getting more, you're kind of getting more for that.
The one you're selling.
You're getting more for that put. You're getting $3.60 for that put instead of $2.
Yeah.
Yeah.
That was a great question though, and I like when Frank. That was from Twitter, right? Or from YouTube?
That was from the YouTube chat, and there's another question from the YouTube chat.
Wait, can you go top down real quick? I want to see if it fixed. Just go back to that thumbnail. I want to see it. Darn it! Because I've got it on my Twitter where it's the thumbnail. Because that's what I want to show you. It's you in the zebra going like this.
It is.
That's what I'm trying to show you is the thumbnail with it.
Why would you want to show me that? Why would you want to show me that? We took new pictures. I don't know where they are. We took new thumbnail pictures. They're never to be seen.
That's what I was trying to show you is the thumbnail. Sorry about that. Okay, now we can keep going.
Okay. All right. This is another one from YouTube chat. So thank you for sending this. Can you ask the ladies what their thoughts are on selling a put broken wing butterfly on SPX 45 DTE and then buying in the risk on up moves? Yeah. Great idea. You've seen us do it in natural gas. Let's look at it in SPX.
No, we've done them in SPX. A lot of times we do upside broken wing butterflies in SPX, but let's do it to the downside. I have no problem.
No, so they said 45 days. So I'm just
go to 45 days. I'm fine with it.
Yeah, sure. Okay, 45 days. Now they're wider, so let's take a look at how this could be. If we go,
I would put the shorts there. Yeah, I would put the shorts at the expected move.
Around the expected move, and these are $25 wide strikes. So if I just break one wing, okay, 6,700, 6,675, 6,625. We're taking a 310 credit, and this is $2,000 in risk.
And what they're I believe what they're asking is leave this right as it is. But if SPX goes up, and say SPX goes up 50 points or more points than that, just because you're going to need it to go up higher to do this, we're taking the $3 credit. You could then sell out your 66.25 and buy your 66.50, creating a butterfly, taking all your risk off the table. If you do it for less than $3, then you've got that in with no risk. And that's what Mikey's got right now, by the way. This is what Mikey is playing with. He butterflied, and he took in a credit for all of it.
So you look at this, like I just put in that spread, what we would be trying to do, sell this and buy this, and it's only 360.
How much is the big butterfly? How much is the butterfly?
So just the butterfly. That's what I want to see.
Because it's $25 wide. It's not like it's a...
Right. 60 cents, probably. I was going to say, this is...
Press that button.
It's so cheap for this butterfly.
Let's talk about why butterflies are cheap. Because, $25 wide, you would think this is a $5 wide, whatever. But $25 wide, what you're saying in this is I'm going to pin the 66.75 strike in 45 days on February 5th at 2:37. It's going to be 66.75. That is so hard to do. That's why it's cheap.
But if this were $5 wide, I would believe it was 30 cents. I'm very surprised a $25 wide is 30 cents.
You've got pretty wide.
It's wide market. You've got some wide markets. I'm going to put in a 40-cent bid for this. What do you think?
If you get filled, great. Why are you delaying and pressing the button?
I'd rather pay 40 cents. Well, you can put, or we do it, or we could do it for the credit and try to get it on for free. Sure. Maybe that's smart.
Jenny, can we look at a different cycle where there's more options that have been traded? Because if you look at that, it's very light. You've got options and volume. It's light.
I know. So I almost think we need to look at more of a, let me look at this.
It's your AM settlement, which I'm fine with.
So open interest, there is some open interest on this.
You got a lot more open interest in the...
Well, and you have $5 wide strikes. You have $5 wide strikes instead of $25 strikes. So, okay.
It's a different cycles. You have to go to different strikes. It wouldn't be the same strike.
But we were looking at like a $25 wide. So 66.25, 6600, 65.75 would be just the symmetrical butterflies. 30-cent debit. If we make it...
No, press the button on that one too. If we can get filled on one of them, we'll cancel the other one.
I did cancel the other one. I canceled the other one. 30 cents.
Great.
I'd rather risk 30 cents than risk 2,000. We were risking like 2,000 on the other one. I don't know.
No, I agree.
I feel like 30 cents is, and I guess it could add up and I wouldn't be throwing these all over the place. And if you want to throw in a lot of these or all over the place, on and off, on and off, on and off, maybe you are better off doing the broken wing and then trying to do that spread. And maybe it would be easy to fill because this butterfly is so cheap. When we saw how close it would be to move that spread, that's when we thought, well, this butterfly is really cheap. And again, you hesitate to throw away 30 cents, 30 cents, 30 cents, 30 cents, but I kind of would rather throw away the 30 cents than the $2,000.
But look what Mikey, look at the corner Mikey backed himself into. And I use backed himself because it's a great corner to be in. I wish I was in your corner too. He's got everything locked and just chances.
Yeah, and all like that green P&L. So Mikey had the green P&L. So it would be doing the broken wing and then rolling it up and turning it into a spread. And you would, if you take a look at our analysis on this.
Yeah.
Hold on. Okay, so if you look at our analysis on here, here's our 30-cent loss because we paid 30 cents for it, and we only have this green peak here. But if we did lock it in, if we started with the broken wing and adjusted it, then it would be green all across. What, like Liz said, what Mikey's got going on. So maybe we should have done that, and I don't mind that at all. But 30 cents seems so cheap.
So that's what I do in natural gas. That's my go-to move in natural gas. I do a downside broken wing butterfly, and then I move it as soon as I can to lock in $50, $100, some type of money, some type of moneyness, where then I have those peaks where I have a credit where it doesn't matter where it goes. That's my end goal in natural gas. And then I layer them exactly what Mikey did. So as I have one on and I complete the butterfly, I'll put the next one on, because if it goes through if before I get it butterflied off and it goes through it, I'm into the peak of my other butterfly.
So do you see them moving natural gas today?
It's still 3.46.
I know. I want to see how far we can get now. How far can we get now? 3.47. And look at the 64-day, 3.
Yeah.
The future of the 64 days, 3. So you take a look at that, and you're getting the expected move is 235.
Yeah.
So I'm just like, let's say we did 245, 240, like 2.25. Here, we're taking in $140 here, extra, $140 over with that spread. So if we got filled on this, we could put in an order to, try to move this up, and we've got $140 to play with.
It's not bad. So if I were to do something like this, I would immediately put an order in to buy the, sell the 25, buy the 35 for 10 cents.
Wait, sell the what?
So if I got filled on this, I would immediately put an order in to buy the 25 and sell the 25 and buy the 35 for 0.010, locking in $40.
Locking in $40 and having that butterfly on.
Mm-hmm. That's what I do. This is my go-to move in natural gas.
Is 64 days too far out to go in natural gas?
Yes.
I just, you think, okay, the 36-day, we're trading almost 350, where the expected move there, you're getting just into the twos.
Just into the twos, which I don't mind. It is what it is. See if you can break the swing.
I think you'd have to go like 3.05, 3 to get enough. And then...
I mean, you could break it by just one if you wanted to.
Oh, here, look at this. We're getting we're getting like $210. That's pretty good.
Which mitigates your drawdown. So what she's saying is if you get 0.02 instead of 0.01, you're getting your drawdown is less because you're collecting more. So we only have $790 in risk. If we don't get the butterfly off, we have $800 in risk. It's not the end of the world.
And if I move it up, then we have $400 in risk. We're getting like $100 over. But then we just have $100. It's the more you collect, the wider you make it at first, the more you collect. Might be easier to butterfly it off. You've got more credit to work with on an up move. But
in both, and we need to be crystal clear about this. In both scenarios, whether you've got the 2.9 or 2.85 as your long, you need natural gas to go up in order for you to butterfly it off. There is no, I'm losing money. How do I butterfly this off? That doesn't work. You have to be willing to give up some of your profits in order to take the chance of having that butterfly on.
What do you think?
Sure,
71 rank. Do you want?
I'm okay with it because when we were looking at it the last time, what I didn't like is the 3 handle for our break even. Here we've got a 2.95. There's a 2 handle in my break even.
Do we want the $100 or do we want the $210?
Wait, it's only an $800 drawdown versus a $700 drawdown?
No, max loss $790 on this one, or max loss $400.
This is a smaller account.
So if we're taking in $100, then we have a risk of $400. And then if it anywhere above this, we keep $100. We could hit the 3 if we butterfly, if it lands there. To butterfly it off, we don't have a lot to work with. We've got $100 to work with.
Right.
But yeah, sure, smaller account. We'll take the $100 credit and risk only $400 because that makes sense. If a smaller account takes a $400 hit, well, it's better than a smaller account taking an $800 hit.
It is. And that's the gimme and the gotcha of our account size.
Yeah. Okay. So that's working.
Can you go back to Twitter? I want to make sure we got to Ash Finn, and I can read it if you want me to. But Ash says, what are your thoughts on Archer, ladies? It's been a good moneymaker in my port all year, but it seems like it may not get back up. Are you still in it? I am. So Archer Aviation is one of those where I like it. It's a vertical lift technology, and it's a stock my husband likes, so I'm still in it.
And its competitor, I believe, is Joby, and I don't know that one's outperforming the other.
I don't think it matters. I think it's new technology. It's something that I want to be in.
But I mean, they both, like, I know for a little while, Joby got a big jump because there was something like Toyota, they did a deal with Toyota, but it took a hit. Like, it's taken a hit since the fall till now. I mean, from its highs. So it was as high as almost 20. Now it's 15. Archer was as high as maybe 14. And now it's... And now, as high as, 14, and now it's 8 or 9. I'm still in it too. I'm still in it because typically if one of us is in something, the other one gets in it
too. Oh, yeah.
Speaking of, did my little fly keep going? Did this keep going up? Again?
Yeah.
Again. Huh. I wish I would have got more shares of this for the kids. Like, this is what JD for his birthday. His birthday, I got him shares of Fly. My son, I told him to buy some shares of Fly, but I wish we would have gotten more.
I know, but it's good. It's hard.
Yeah. Yeah. And it's not like it's making some new highs. It's just back to where it was in the fall.
Yeah.
But 2 days. And the last time, remember, you were like, what's the news? And the news was not good. What did
The news was not good.
Oh, joins the Russell.
Oh, congratulations, little fly.
Flies in the Russell. Nice. I mean, it's funny because I don't want to say joining the Russell is like the kiss of death, but I mean, how many times over the years is like it when it's like everything's up but the Russell.
Well, at some point the Russell's got to catch up.
We always have been waiting for the year of the Russell.
Have you seen silver and gold today, by the way, Jenny Andrews?
Whoa.
Yeah. It's been crazy. You know what I haven't been doing?
Hey, let's take a look at our, we still have our short silver. Still have our shorts. Well, we got 2 things on here, but our 14 shares of silver are down $100.
Yeah, it's not the end of the world.
And gold, God, someone at the party asked me if they should buy.
And you said yes.
What were they wanting to buy? That people come over and they all ask, should I buy this? Should I buy that? Should I buy this? Should I buy that? What's your answer?
You give them zero advice, Jenny. You got to stop telling people what to do.
Should we take our fly off? We just have puts. We had puts. We rolled them up. We just rolled. Our puts were winning. We rolled them up. Should we just take these off or roll them up again?
Sure. And we should take off our natural gas because our natural gas is up 53. So we should do a little cleanup in here right now.
Okay.
I don't mind if we roll them up. I really don't. I kind of like having them.
So do we roll them up or do we roll out to Feb? So we've got Jan. We've got these Jan 22 and a halves. We could roll. Oh, look at how wide. The bad thing is that these markets are wide. I mean, look at this. 310 at 5, 290 at 470.
Let's take our profits.
Yeah. So what did we sold it for? And I'm curious, are we?
And that was a roll. So we made $50, then we made another $90.
I know, but how long have we been in fly? Yeah, I guess this is all we've made this year. 365 days. Our first trade was in November.
Yeah, it's a newer product for us, right?
Yeah. Yeah, I guess we'll keep an eye on it. And if it's down, we'll get back in. But it's a high rank. I mean, the 78 rank. What about this? What if I close this?
78 rank, but look at that. It's 60-cent wide markets. It's insane.
I know. It really is.
I get that it's got a high rank, but do a better job, market makers.
I was gonna just see. So $5 wide big lizard, and you get.
You didn't like the one way to work wide markets. Look at that, $3 at $5. Don't even.
I feel like they've upped the margin in fly too.
They might have.
I don't know. Okay, so and it's not natural gas; it's crude oil. Crude oil, it's up $54.
Oh no, that's what I meant. Crude oil. Sorry, our crude oil position.
Okay, so yeah, it's up 53%. We just have a put in there. We're gonna take that off. That's in micro crude.
The only reason that I didn't look at how much we were up, but I knew silver was up big, I knew gold was up big, and I knew oil was up big this morning.
Okay, so micro crude, we're out of that. You can push that out. And I'm going to see if there's anything else that, so we're up 36% in IBIT. That's a Jade Lizard for $44. I think we take it and put on next week's Jade Lizard.
Yeah, I kind of agree with you.
Right? So we sold it for $1.17 and it's up 44. So let's close this.
And so wait, hold on. And usually when you see you're up this much, I was going to say, is it getting to our call spread? It's not. Let's just take this.
Okay, we're going to buy this one back. But we collected a decent extra. We collected $1.17. So we'll close that and look for a new one in the 9-day.
Same process.
Where sell the 53.54, you get 20 cents, use that 20 cents to buy the 46. Oh, look, there's a lot. It's not as much premium as there used to be. We rolled it up to the money and we were getting, $1.17. Is vol coming in?
I mean, yeah, Bitcoin was.
Or am I not on the, oh no, I think I need to be on the 11-day.
No, you got to go 9-day.
No. Is it? What's the 11? How many days? How many options do we have in IBIT? What are
it's
they?
Weekly, but next week is a wonky week. That's the only reason.
Next week, December 31st.
Yeah, that's what I'm saying. It's not. It's just a weird week. It's
no, but December 31st isn't Friday. December 31st is Wednesday.
Yeah, and we're closed on the 1st.
Yeah. But normally when we put these in there every Friday, that's why we weren't getting much. Like normally we can get 20 cents on a call spread, buy a put for 20 cents, and then we're getting, over that dollar. Like last week we got $1.17.
We were right at the monies though. Like this is 11 days out. I'm glad you brought it down a little bit.
That's why but we weren't getting as much when I was looking at the 9-day, which is Wednesday.
I'm fine with either. I don't mind the 50 for 90 cents.
Are we in? We could do.
We're on the morning show on the 31st.
Yeah, we're on the morning show. So
we will be trading.
So then we'll keep it with the 31st because we're going to be here.
Yeah. I like them nearer term. And I understand it's Friday. I get it.
Hey, how about a big lizard?
Sure.
Kind of. 51.52. 50, 51.52 and getting $1.39.
Then you got to buy something.
$1.20.
Sure.
We're working both of those. Who's up 42?
Mikey. Go back to the Twitter. Mikey cracks me up. Go all the way. Go top down.
Broken wing butterflies turned into free butterflies. It ain't much, but it's honest work.
He cracks me up.
Oh, look at your.
Oh my gosh! Speaking of Mikey, I hope he's watching right now. So I'm terrible at this, but I'm on Snap for my kids. So literally, I snap my kids every day. That's the only thing I do on Snapchat.
Oh, and the people at the SIBO, she's constantly taking pictures of people at the SIBO, and they think they're on live TV, and all they are is going into her kid's Snap.
My kids snap. That's correct. I snap every day when we're at the SIBO. So I snap every single day. I send them something. And so I was sitting on the couch, and I didn't know this. There's a thing called a Snap Map. Do you know what a Snap Map is?
No.
Okay, where you can see people's locations, but I don't have a lot of friends.
Okay.
I don't have a lot of friends on Snapchat. So I was like, JD, what is going on? And he's like, because I must have touched something because I was snapping him while I was sitting next to him. He's like, oh, that's your Snap Map. He's like, I was like, so I tossed him my phone. He's like, yeah. He's like, you have me, Annabelle, and some guy named Mike Nemo Toka. So I was like, come on. I know where he is at all times. That's awesome.
Oh my God. It's so funny. Mikey, we know how to pronounce your last name.
I know how to pronounce your last name. It was my son that said it that way. When he was running.
Cute. How is JD? How is it having him home?
Good. I mean, he's wandering around like he's bored. Well, he doesn't have a job over Christmas.
Oh.
So he doesn't have a job. And I think that's really wearing at him because he's kind of wandering around, going to the gym. He likes to be busy. But I mean, it's going to be a busy couple days. We got to go shopping and do stuff like that now. So he's doing good.
I mean, be grateful he doesn't have a job. All Logan does is complain. He comes home from work and he's like, oh, that was the most boring day of my life. And I was like, get ready for it. Buckle up because you're about to graduate and go to work every day for the rest of your life.
He's got only, 3 months left until he's a working man?
I know. And I think it's really hitting him because he's not a happy camper going to work every day.
Yeah, it was hard. That work into transition is hard. I was at a party. This was in the summer. And some girl had just graduated and she's like, do you know they only give you 2 weeks off and there's no summer? I was like, oh, welcome to
Oh my God. Our friend's daughter went for an interview and I think they were giving her 10 vacation days. And she's like, so she just thought there was missing a zero. She's like, 10 vacation days. 10 vacation days. What the hell?
Funny. I know it's insane. Okay, let's make sure we got everything cleaned up. I still can't believe you don't see the thumbnail. I see the thumbnail and everybody else can see you like this.
Oh my, don't remind me. We haven't, what is our intel that's down 500%? What do we have? Oh gosh, that thing. I can always forget about this.
Oh yeah, that doesn't count.
No. Okay. What do we have that's big percentage? Marvell, we're up 142. I believe that's the buffer. Yes. That's the buffer.
It's not a bad thing. Well, you have still profit all the way up to 90. So when you take a look at this, the buffer trade should be acting a little bit like stock right now, and it is.
Because it's both of us on there. Listen,
I know. I just texted it to you.
Yeah, so this is the buffer. So we took in 678. We could make more. But 142 is pretty good. It's better than we would have made if we just sold some puts. Because otherwise we were just going to sell these puts for 220 and those are up $97.
And it is it's a high capital trade. Let's take it off. Let's take our profits.
Sure.
Yeah, Marvell's been very, very good to me.
Lately.
No, as an overall, it's one of my number one winners in life.
in life, but the 102 to 81, it's like, you know.
That didn't hurt nearly as bad. Just scroll back a little bit. That didn't hurt nearly as bad as.
Hold on.
Yeah, no. That didn't hurt nearly as bad as like there was a massive fall from like. Yeah, there you go. Whatever that
I don't know which one. I mean, it's had its days. Marvell has had its moments.
But from the beginning of time, I think I got into Marvell pretty when it was very low, and I keep ratcheting it up. I keep doing things around it, selling premium, yada yada yada. So it's been a good trading vehicle. It's got a 6 rank right now, which sucks.
There's okay, so we're out of our buffer.
We are miraculously out of time.
What? What? No. I'll give you $5 if you can guess who says this. What? No.
Logan.
Forky.
Who?
Forky from the Toy Story movies.
I thought you said Porky. I was like, who the heck is
Forky?
I do know. I do know.
All right, we're out of time. Hopefully we got to everybody, and we didn't get to everything in our account. We only made it from A to M. And
you know what? We'll be back. We'll be back tomorrow in this exciting environment. We'll be back at the SIBO floor tomorrow.
Okay, I was going to say in our 12 days of trading, we just briefly touched on volatility, and a lesson learned: don't get long volatility.
Well, we also have the 31st, so we're going to give you lots of lessons on the 31st. All right, everybody, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow, live from the trading floor.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
We just living it up, yo, that's real life.
But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. But they kinda kinda
You gotta level up, 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 up. Just look at me. You gotta level up, 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 up. If you kinda like it way.
I'm feeling myself, yeah. I'm feeling myself, yeah.
I'm feeling myself, yeah. I'm feeling myself, yeah. You gotta level up, 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 up. Just look at me. You gotta level up, 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 up. If you kinda like it way. You gotta level up. Just look at me. You gotta level up.
Tanta paciencia, contigo quiero una indecencia, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma. voy. Dale, baby, que hoy te sale. Tú y yo estamos en falla, vamos pa' los matorrales. Si tú eres una bici, yo te voy a dar pedales. Pero con cuidado que no estoy en comprar pañales. Yo quisiera que me dé un piquito. Dale de comerte huerfanito. No me dejen visto. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Te estoy esperando en la fila. Yo que tengo tanta paciencia. Contigo quiero una indecencia. Por eso te quiero desacatar. Te estoy esperando en la fila. Yo que tengo tanta paciencia. Contigo quiero una indecencia. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal.
Hello.
And of course, Ryan Grace, joining us digitally, virtually from Maryland. Ryan, how you doing?
I'm doing well, guys. It's great to see you, of course. Hope you had nice weekends. How are you guys?
Thriving.
I mean, I had a phenomenal weekend.
Yeah. All my friends are like, I can't stop smiling. The Bears have locked a playoff berth. And that pass was just insane. Like, what a wild, insane way to end that game.
I got to tell you, I mean, I was at home. We had family over the weekend. My mother-in-law was there, and the wife, and my brother-in-law and his family. I was outnumbered, to say the least. They are from, obviously, Appleton area, kind of Green Bay area. They're Green Bay fans, of course. I was outnumbered. I was really in the trenches. It was deep. It was looking bleak, especially 16-9. Looked like the game was over. So we were like, I went upstairs to get ready for this party we go to every year. I come back downstairs. The Bears have the ball at 16-9, and we're about to score. And I'm like, what happened? My brother-in-law's like, onside kick. And then, yeah, man, they threw the touchdown. But you're right. That throw for in overtime to DJ. I mean, he let that thing go. You just knew it was touchdown.
I've seen that throw like 100 times. I've seen it with Titanic music in the background. Like,
yeah, that was a good
one. I did see the whole thing. But yeah, what a nice way to kick off the holiday here. E-mini's up 42, NASDAQ up 120, Bitcoin catching a bid here. Feels like a green day. Santa Claus is absolutely here. We are close to 7,000. I think we're going to 7,000. I don't see any situation where we don't. But I mean, in all seriousness, volatility is still super low. The VIX not able to stay elevated here. Sub 15 now. 14 VIX tells you all you need to know about this market. But just looking at a handful of futures products, the Platinum Ferry coming back to the highs here, up 4%. Crude oil up 2%, gold catching a bid, silver catching a bid, Bitcoin, ETH, all in the green, and really not too much other than volatility and natural gas to the downside. Everything else is within 1% to the downside or is green. So pretty interesting macro move to the upside here. Some equities flying in both directions, but generally speaking, super low vol environment. E-minis up, NASDAQ up, Bitcoin up, gold up, silver up. Classic Monday before Christmas.
For sure. There's nothing that should hold us down. I mean, there's no bad news that I'm aware of on the horizon. There's not even any geopolitical real strong negative news right now. And macro stuff has basically been thrown in the trash. Nobody pays attention to it. CPI, jobs report, retail sales. It doesn't matter what it is. It's not negative. And even if it does come out, you can't really put too much credence to it. It's seeming like more recently. So there's nothing to do but buy stocks, buy crypto, buy it all.
Buy. Yeah, I mean, from an implied volatility standpoint, this is a super low expected move for the rest of the week. 4 days left, only 42 points in terms of an implied range, sub 10% implied volatility out for Friday. So, I mean, we have one less trading day, of course, and a truncated one as well. So this week and next week, things can still move, don't get me wrong, but from a volume standpoint, it's going to be a pretty low volume week, or at least that's what it's projected to be.
Yeah,
we'll see.
There's really only 6 trading days to the end of the year, and one of those is a half day. So, yeah, there's and again, there's really not much news. Everybody's looking to turn the page to the next year.
Yeah. Yep. Ryan, I saw we had a crypto update over the weekend. If you want to sign up for that newsletter, totally free. Just go to tastycrypto.com. I'll put a link in the YouTube chat in just a second. But what are you looking at for the rest of the year? Anything standing out to you?
Hey guys, I mean, outside of crypto for a second, completely agree with your views here. I think we kind of levitate, and you probably get sucked up into that 7,000 level or close to it in the S&P. I think this is bullish. I think you could get some more volatility off of these lows, right? With a VIX at a 14 handle, sure, it can go lower, but you probably want to be prepared for maybe some snapback at some point. And January Q1 tends to have some volatility. But I think the outlook is very positive. It's very bullish. And when you look at this from that kind of broader view around, okay, is this just a handful of stocks, which previously it was Mag 7, we saw some unwinds there. You're really seeing a broadening of performance now. And I'll point to the Russell. Russell futures up almost well over 1.5%, 1.7% or so on my screen here, versus the NASDAQ up 0.5%, versus the S&P up about the same. I think that's a very positive sign. I think it reflects growth. We've seen the inflation data come out, a little bit of a slowdown in inflation, see what the Fed does. But again, I think the outlook is very positive for risk assets at the moment. Bitcoin, on the other hand, crypto markets have been a bit subdued. I mean, it's been a bearish trend, no way around it. We're getting a lot of chop here. You've been able to pretty accurately sell 90,000 and buy back 85 or so. That's been the trade. And earlier today, I talked to Nick and Bat about this. You've been able to really buy it overnight and then sell it on the US Open. That's been kind of the pattern that's played out. Until price action changes, I'm not all that excited about crypto. Honestly, I know that's kind of weird coming from the crypto guy, I guess, but there's other opportunities elsewhere right now. Price action in crypto could change, but I'm a lot more interested in precious metals, in equities, and participating in, again, this broadening rally.
Yeah, I think long term, it's certainly an opportunity. But like you said, it's having a hard time catching and maintaining a bid. We're seeing more two-sided action in Bitcoin and ETH compared to your Russell, your Dow, your NASDAQ, precious metals all going to the moon. It's been crazy there. But yeah, I think, of course, long term, we're still looking at smashing the buy button there. But I think we'll see. And it's just one of those things where it's like, not many people are focused on it right now, but eventually they will be. And that's when you'll get your volatility to the upside. You'll get your implied volatility, call skew infusion. But we wait patiently for that to happen.
Yeah, I think that's the key to this, is just patience. And for me, I'm waiting patiently to see higher prices. That'll pull me back into the market where I'd rather buy dips. I'm not going to try and trade some of this short-term price action. Just not my style. You can get kind of chopped up here. If we did see some of these key levels come into play, and that's maybe 80,000, 75 or lower, the prior cycle high was 69,000. Sometimes you see, or you've seen previously, a correction down to those prior cycle highs tends to be where you've bottomed at times. So if we get that, I'll buy for the long term. But to pull me back into the market short term, where then we might see new all-time highs, or I'm more prone to buy dips, I'd want to see that 95,000 level in Bitcoin, maybe more so that big psychological 100,000 level get taken out, 35,000 in ETH. I think you need about 160 or so for the trend to shift in Solana. And until we get that, and structurally we're back short term to this bullish trend, I'm unfortunately not all that interested for now.
I get it. Yeah, I think we've brought this up before too, with sticking to these bigger products like ETH, Bitcoin. We're always going to see some stuff moving under the hood when you get more granular. But yeah, always interested to see how we can approach this moving forward, and especially looking at it from a 2026 lens. We were just talking about that, like this week and next week, based on current implied volatility, just feels like a fast forward to 2026, where a lot can change in a year. Of course.
Yeah, I think you could probably mail it in. I think there's a higher probability that you continue to see a decline in volatility here in crypto, which is what you're seeing. I've got Bitcoin realized vol back at like 40%. You probably go into the 30s again. That might be the lower bound, but I think that's likely. And then when you look ahead, right, you've got some events on the horizon. I think a new Fed chair that's more dovish, in line with whatever Trump's demands are for lower interest rates faster. The market will start to price that in. I think, again, the macro is pretty constructive. You've got liquidity coming on the margin, and you're seeing that response in some of the areas of the market that Bitcoin and crypto have typically been correlated with, and that's that profitless tech bid. We're seeing a little bit of a bounce back in some of the data center stocks, some of the crypto miners, some of the nuclear stuff, some of the quantum stuff I think you were talking about or mentioned earlier before the show, Jamal. So you're seeing a bid there. I think, again, that's positive for assets like Bitcoin, but I think short term, the attention has been on gold. It's been on platinum. It's been on silver versus Bitcoin that can, in some portfolios, can play a similar role. And you don't have that inflation dynamic that's really rip roaring. And, that's probably weighing on crypto as well, right? If we're in an environment where growth's up and inflation is going higher, that's the view, then I think there's more of a reason for capital to flow into Bitcoin versus one where you have growth. There's a lot of places then to invest when you have that growth and you don't have the inflation picture. And so it probably makes crypto assets a little bit less attractive. And then at the same time, gold is working, silver is working again. And so, stick with what's working.
Yeah, gold, silver, platinum. I actually haven't looked at platinum that closely, but this is insane. Platinum Fairy is on a rocket ship going straight to Mars. Insanity.
Yeah, it is, man. These things have been so big recently. Gold actually doesn't shock me. I kind of felt like that one was going to break out soon. Silver, I will say the air is getting a little thin up there. A little bit, probably.
Yeah, these charts are crazy.
Is there a point where you guys would step in and short this? I think, you are getting some overbought conditions. If you use RSI as a basic indicator, it's kind of getting to those levels where you typically will see some sort of a pullback, at least short term. How do you guys think about something like this where it's going straight up and you're kind of thinking, all right, maybe, you're going to see it stall out?
There is a point, and the point is like where it just feels like it's I know this is going to sound silly given that it is, we are probably at extremes, but like I want to see a real extreme. I want to see it jump like $5 right from here, and a lot of volume, and I would look to short then, because then I feel like I could get an actual real move, kind of like what we saw in October when we saw that big down move in both silver and gold. I feel like that's when you get that move. I don't want to short it and watch it just kind of sit and consolidate. I'd rather, and by shorted, I mean I'm talking directional, not like vol. I want to short it, and I want to short silver and see a quick 5% move like to the downside. That's how I want it to be done. I don't want to try and short it while it's still kind of consolidating. That's a little harder to do. So I just want to see some extreme. Like I'd like to see it come in tomorrow, and I'd like to see it up to 73. Like then I would be like, okay, I'm interested. This is kind of crazy.
Fair. Yeah, I think for me, I like to use gold GLD as my trading vehicle. You can use silver too, but when you look at these moves, when you look at this platinum chart, like this is insane. Implied volatility, realized volatility is exceeding implied volatility here. You don't even have to look at the numbers. It's clear that that's happening. GLD is interesting, and SLV is interesting too. Like SLV has gone from 45 to 60 in a month, but the difference between SLV and GLD, excluding price, is the fact that SLV actually has elevated implied volatility, 50%, 52%, Jan, Feb, March. But when you look at gold, we're still in the 20s. Like for me, this is a big disconnect in implied volatility relative to realized. And this is how this was during this move too. Like IV rank of 54 it means nothing when IV is 23%. Like this, from my perspective, if I'm trying to play a short, I'm going to go to GLD and I'm going to buy a diagonal spread, or I'm going to buy a zebra, just because 23% IV into a move and realized move that we're seeing, like this is a 1 day move of 9 points. Implied volatility isn't pricing in a 10-point move over the next 9 days. So I think these are where I want to take directional stances, and it's just a cheap way to do it. As long as you can afford trading this $400 price point, 23% IV is just too low for what we're seeing in precious metals right now.
If we get another day, like I said, we get another day like we have today with these big bars that they got, like we get an additional day like this, I'm probably going to look to get short.
Yeah.
For a quick trade.
I like it. Should we pop over to the slides, get a little granular with some crypto stuff, and then we can head over to the Tasty Live YouTube chat. If you want to join us there, just go to Tasty Live on YouTube. You'll see this video streaming live. You can throw in your trade ideas, questions along the right-hand side chat. I've got the Tasty Crypto newsletter linked near the bottom of the chat there, but let us know what you guys are thinking, and we'll get to that shortly.
Awesome. Let's do it, guys. We'll throw up our crypto market update. We've got our performance dashboard here for December 22nd. Looking a little bit better out there. If I recall correctly, last time we talked, it was red everywhere you could see. So getting a little bit of a bounce, though. Again, you continue to see a very choppy market here. It's kind of 95, 85, 90 has been pretty consistently sold over the last few kind of moves up into that range. But when you look at weekly and monthly performance, definitely getting a little bit better. Maybe we're seeing certainly some consolidation, possibly a bottoming process in play. I do think that will take some time. There's one camp that thinks, cycle is over. It's the 4-year cycle, and we're going to go down to that 69,000 level, or that 200-week moving average is about 56.5. 75 maybe first, of course, which is that April low. And then there's the camp that thinks that we haven't yet seen the all-time high or the peak in the cycle, and that it's extended by a year given how the U.S. debt term structure is right now. In terms of a 4-year cycle with rolling that debt, it's a 5-year cycle. So we'll see who's right at the end of the day, but it is holding up for now. So Bitcoin about 90,000, up a couple percent on the week. Monthly performance is looking a little bit better, but it is red on the year. Maybe that changes with the last few trading days that we have. I guess with crypto, it's 24/7. So you've got a week or so, but the trend remains bearish. Like I mentioned earlier, until we see price momentum, which I measure in terms of exponential moving average crossovers, till we see that change, I'm just not as excited to step into a dip. So bearish trend with the exception of Bitcoin Cash. We've called this out a couple times now over the last few weeks. I don't know what the explicit catalyst is or the driver is here, but if you've been buying dips in Bitcoin Cash, you've been trading in here, you just have stayed long, this has done really well. Obviously, over the last couple of months, it's in the green, but versus Bitcoin, specifically up 41% year to date, and price momentum structurally, this looks pretty good. So that's been the one outlier. Everything else has been bearish trend with varying degrees of volatility, as everybody knows. If we jump to the next slide, we'll see that we have now again another shift here in terms of, apologies, these are the expected moves. I'll talk about relative performance in just a second. But yeah, when we look at expected moves, a week over week, nothing has really changed. When I updated these, we're updating $20 one way or the other. Volatility has come in a little bit, so IB ranks are lower. There is a premium. So if you've been selling IBIT options against a position, or you've been selling ETH-A options, you can go out in time and roll those on a monthly basis. That trade has worked well to generate some yield, given we haven't ripped higher. And so you've been able to capture some of that premium that's been in there at times. But we are seeing realized and implied vols fall a little bit. You have smaller expected 1 week, 1 standard deviation moves. Of course, against a lower spot price, you're going to have a tightening range there too. But when you look at how Bitcoin is traded and how the market in vol terms has priced this in, or how the options market has priced this in on a forward basis, it's been pretty aligned. That range that we've been trading in has been, 80.5 was the November 22nd low, but we found buyers kind of mid 80s, and we've definitely seen selling as soon as we've peaked above 90. So that's the range for now. If volatility and price both change, then obviously we're going to get a different range, but the signal there is volatility that continues to decline. Same thing with ETH. We are not pricing in, a new level where if you were to get above that, the trend changes. You need to see 3,500. I mean, more specifically, like 34 and change. But above that 3,500 level, you're back to bullish trend with ETH. Until then, I think you still have that path of least resistance, which is lower. Solana seems to have been left for dead. Can't seem to get off of 126. You need 160 or so to get a trend change in there. Volatility continues to decline. Realized vol for Solana is in the 60s. So you got an $11 move. I think it was $12 last week, and it really hasn't been moving that much at all. Same thing with a lot of the alts, SUI, XRP, some of the smaller market cap stuff. It's down and remains down. I think you need to see a much more constructive ETH market before you see any sort of rally in alts. The exception, Uniswap, don't have it on the screen, but Uni had a nice little move over the last couple of days, back up above $6. They've got the fee switch vote. So if that does go through, then you will possibly see, better fundamentals for that token in time. But again, I think you need a more constructive kind of big picture crypto market before people get excited or get interested, frankly. So that said, if we jump to the next slide, we've got our relative performance. And this is the other thing that I want to call out. We're back to a market that at least short term has been dominated by Bitcoin. It looked like we were getting a breakdown in that trend of Bitcoin market cap dominance, which is BTC spot D, back at 60%, has some momentum behind it. ETH BTC, which did pop and had a nice move over the last couple of weeks, that's been again slammed lower, and that trend is gone, or that momentum has gone back to bearish. So I'm not really, again, excited about alts or anything outside of probably Bitcoin and ETH until we see better price action, and we're just not seeing that. It'll change at some point. Again, I think that there's some structural tailwinds, but short term, the trend is bearish, and you're seeing that kind of any which way that you slice this. We jump to the next slide. We've got a quick update on our correlations. We've seen a little bit of a weakening in terms of the short-term positive correlation that exists in equities and crypto, or between the two. Still a positive correlation, but I mean, these aren't super strong, to use that technical term. We're looking at 0.36, 0.45, and 0.55 for the Russell. If we do get into an environment which we continue to see a strengthening of the economy, business cycle, you can look at ISM as one indicator of that. If we get an expansion, then I think you're going to see the Russell do well. And quite often there's a pretty strong positive correlation between the Russell, small cap stocks, and altcoins. So that might be one signal to look for. It would be odd to me if we continue to see upside performance in equities, and I'm talking, let's say over the next 3 to 6 months, if things really start to expand, it would be odd to me that crypto didn't catch some of a bid. Doesn't mean that it will outperform on a relative basis, but it would be somewhat weird to see it not catch a bid. So that's something that I would keep an eye on. But no real short-term correlation between the dollar and crypto. We do have a kind of weakening dollar environment. If you look at the DXY, that's broken down over the last month or so. I think that's a structural tailwind for commodities, for crypto, for equities over, again, a little bit more of a 3 to 6 month period. Definitely has helped out gold and silver and platinum. But not much of a short-term correlation between crypto and gold either. As you can see, crypto's kind of been trading sideways as gold's been ripping higher. And then again, you do have that inverse correlation with vol, as you might expect, given that this is a long duration asset. But that's come in a bit as well, which is the result of obviously volatility getting slammed lower in equities. So that's an update on cross-asset correlations. I wish I had more exciting news to bring to you guys. There's probably going to be, positive regulatory developments into the next year. We got the Clarity Act, goes to the Senate. I believe it was passed by the House in July. So I think you do have, again, these structural tailwinds. But if we're looking at this day-to-day, week-to-week, trends bearish for now. We know that can change very quickly, but it is what it is.
Yeah, it's interesting to see the short-term correlation in Bitcoin and gold flip negative, which I think just speaks to the craziness in precious metals right now. They're basically decoupling from any kind of relationship because they're just moving on their own, really. But definitely interesting to see.
Yeah, you could also see possibly, maybe I'm just grasping at straws here, but could be a little bit of selling pressure or overhang in terms of just tax loss harvesting. So you look at some of these things that have just done really, really well. Let's just assume that investors, traders are in more than one asset class. Even though I'm a crypto person, I trade a lot of other assets. And so maybe you're seeing some selling pressure there to offset, gains where people clearly have gains in other areas of the market.
Yeah, someone in the YouTube chat, Brian, saying, still have my IBIT and ETH puts on. Yeah, they've been good vehicles. I mean, I have this ETH call diagonal spread, long Feb, short Jan. This is just a cheap way to get involved and buy the dip. But I have this perpetual position on an IBIT. And I think it's a good call out because if you're trying to buy the dip and you're doing it by selling premium, we just showed through Ryan's analysis that there is still implied volatility premium there. And when you consider like all of last year, IBIT opened right around the same price we're at now. Like it's right in the same region, 3 or 4 points lower than where we opened the year. But the implied volatility does not necessarily reflect that at all, really. Same with ETH. We've had the realized volatility where we've hit lows, got to highs, but from the 2025 start to now, we're pretty much flat. And if you've been selling premium on either side of that market, you're going to be just fine. So I think getting into long ETH positions or IBIT positions with short puts still certainly viable, all things considered. And really, if you just look at the raw implied volatility of 50%, as long as it stays there, 50, 60, 70% is plenty of premium to help you offset intrinsic value risk. So I like that strategy for an acquisition standpoint at the very least.
I like that it's just consistently high vol too.
Yeah.
Where I'm talking about volatility has come in quite a bit, but we're still looking at an asset that at times is 100,000 and has a 50, 60, 70% vol. So I think, again, a consistent strategy of selling puts far out of the money. Sometimes they're going to be a little bit juicier than others, but that's one that I'll go to. And, you do at times, if you get a pullback, you can take assignment of something, assuming you're kind of managing your risk going into this and not putting everything you have into the position. But you might end up taking assignment of a small position at very favorable levels if you look at this kind of on a long-term basis. And what's fascinating to me about 2025, this past year, it's just, you look at where we are today, sentiment's bombed out, and you would have thought it was the worst market environment it was the best of times, it was the worst of times sort of thing, where we were at an all-time high, 126,000. I mean, if you rode this higher, and hopefully everybody did, and stayed in it for the majority of the year, timing is the difficult thing, of course. But, you got to 126, and hopefully some people were able to take some profits before, you had a very sharp correction. But I think, again, that it is, in my opinion, a correction, and it's not the beginning of a new bear market. But we'll see.
Yeah, I agree. I think we'll still see plenty of upside moves there. And it could be as simple as, like you said earlier, like there's other things that are moving that might be pulling the liquidity and available cash into, like platinum, gold, silver, like you name it. Things are moving to a stronger degree than crypto, and the narrative around crypto isn't, it's not hitting the news headlines every day like it was a couple months ago.
True. Yeah, I think that's the one thing that is allowing it to. I feel like it's kind of starting to bottom a little bit right here, but it's just bottoming and consolidating, and it's probably going to take a little bit. Maybe that's part of the maturation process too with Bitcoin and Ether.
So what else are you guys looking at, Jamal? I know you've got something cooking. You mentioned quantum before the show, because I'm looking for other opportunities. I'm pretty concentrated in a lot of the crypto stuff, but what else do you guys have your eyes on?
Yeah, I noticed those guys moving today. I was talking about a sort of wrap of the year this past Friday with Bat and Nikki on This Week in Stocks, and just going through some stuff and talking about groups of things that have moved at points in time throughout this year. It's funny, we forget, but those rare earth metal names, I mean, they were, that group was really strong for a while there. It calmed down. The quantums, same deal. And I just was surprised to see them moving once again. I'm not even sure what the news is, not even sure at all. But these things are on the go once again. And I definitely had some battles with these throughout the year. I don't know if I'm going to pick a fight again, but it's just interesting to see them moving. I'm not trading anything in those, but as far as, what do I have my eye on? I mean, it's hard not to keep an eye on these metals. I did have an SLB position that I just closed earlier. It was a Super Bowl. And again, I just feel like silver's starting to get a little long in the tooth here. Gold, again, I know they move the same, but the charts aren't the same. And you look at gold, that chart looks more like it is just breaking out, and it might have a little bit more to go. We might see 4,600 before it calms down. I still have a GLD crab trade in there, and $15 wide. I'm long the 390 in Feb, and short 2 of the 405s in Jan, and long 1 of the 420s in Jan. And I'm holding on to that for a little bit for the exact reason. Like if it starts to chill out, maybe it will. That 405 that's starting to a little bit in the money in Jan might come back in. This thing might actually make me some more money. Outside of that, Ryan, for the end of the year, man, I mean, it looks like it's just going to be slowly up and to the right for the end of the year, I feel. Again, I don't feel like there's anything in the way of markets moving higher. And so I still got, some other long delta trades that I've been sitting on for a while that I haven't got quite paid on yet, that I'm waiting on, really.
You saw that 7,000 SPX butterfly?
I did do that. Yep. I got that. I got the 69 at the end of the year, 69.50, 7,000, 70.50 butterfly. It's a little bit of a long shot, but it's fun.
I disagree. I think it's a guarantee.
You think?
It's straight to 7. I mean, we have to go up there. SPX is not as close as the E-mini futures, but the H contract 69.28, like we're 70 points away with a handful of trading days left in volatility. The VIX is at 14 and change. Like, I wouldn't be surprised to see it happen.
Yeah. Hey, I only say it's a bit of a long shot just based on pop, right? I mean, an 18% pop on that one, but we talked about it on Friday when we were putting it on. I like the idea. So yeah, I got it.
The narrative aligns, that is for sure. But yeah, I'm kind of in the same boat. I am trading SPX. I have a handful of positions on in here. I have a Super Bowl 6,800, 6,790 short put to finance a 69.45, 69.50 long call spread. This will probably just expire worthless. I'll keep that 25 cents. but I've had this iron condor on to kind of capture this whole range between 6,500 and 7,100. I wanted to go above 7,000 just in case we reach that. And that is about a 50% profit right now. I think given the fact that we have very low implied volatility and this is right in the middle of the range, I'll probably just hold on to this one, see if I can get a little more premium out of it before closing it. And if we do end up flying around, I'll just adjust it. But I think I want to lean on the offensive here since we're right in the middle of that range with very low implied volatility going forward and a few less trading days over the next couple of weeks.
Yeah.
XLF, some people looking at some other products we haven't touched on yet.
I don't think I've traded XLF all year.
Yeah.
I traded a couple of the banks around their earnings maybe, and some maybe earning cycles. But again, I think this is something we touched on last week at 1.2. Like I'm curious to see if there's going to be some changes with some of the names that have just really been running or making moves. You talk about things as a group. We talked about some of these off color things, the quantum computing stocks, whatever else. But is there going to be a situation where we start to see financials move again? Is there going to be more of a movement or sort of a movement in the healthcare space? Like I'm curious to see if there's going to be some other stuff that's going to get our attention other than just tech once again.
Yeah, I mean, those are some spots that have done really well recently, right? You have a steepening yield curve, so that's a positive for banks. Financials up 7-8% or so in the last month, maybe. Healthcare up double digits in the last month, last few months on an absolute tear. And then again, I'll go back to the Russell. Like I just think you can really now get outside of those very concentrated areas, specifically in tech, and participate where there will be many other opportunities. And it's not going to last forever, but let's say over the next couple of months here into the new year, I think you're going to see a lot of opportunities in other sectors.
Yeah, it's been kind of the tech leading the way, everything else catching up. Where now when you look at a lot of these Mag 7 names, they're kind of stalling out, it feels like. So totally agree with you there. And there's always other opportunities outside of the big names if you're patient enough to see them come to fruition. We're seeing that in precious metals. You guys called out the financials, healthcare space. UNH is always an interesting one. I mean, this one, I think eventually we'll get back to highs. It's just a matter of when. But this is an interesting one because IV's super low now in here, and nobody's talking about it. But you're seeing all these other healthcare names rip, and UNH is not participating, likely due to everything that's happened and then the DOJ stuff. So we'll see. We'll see.
Yeah, wild year in there, man. I mean, it really has not recovered ever since that situation happened a year ago. And like you said, then you had some DOJ concerns start jumping in. But yeah, this is one I think to watch for next year for sure. I was just looking back. I can't believe, again, going back 2 years, I mean, JP Morgan has doubled. And you go back 2 years and Goldman is like 2.5 times. I mean, it's wild to see how much, even though they've been quiet, but they've done it. I mean, it's pretty wild to see. As much as we talk about all these other names, NVIDIAs and all those of the world, the multiples that they've gone, even gold and silver, it's amazing to watch some of these names that have been kind of quiet. We haven't traded much, but they're still there. They're still there.
Yeah, wow. Goldman Sachs almost at 1,000.
Yeah, I mean, wow. Like it's easy to forget. Is it going to split? Is that what's going to happen next year? Goldman Sachs splits?
That's when you know the end is near. If Goldman Sachs is doing a stock split. But yeah, I mean, this is a monthly 5-year chart, and I'm just pulling up like just gold, silver. I mean, what else hasn't moved? Even like when you look at IBIT, Ethereum, they had their heyday. They're still up there, but XLV, XLF, like all of these are near highs.
But that's what I think. That's why I think at some point people are going to be looking more at the IBITs and the ETHs of the world. When you look at where Goldman is, I mean, that's mostly untradeable for like most people, right? I mean, $900 stock.
Yeah.
You know, JP Morgan, $300 stock. I mean, yeah, Costco, even though that's struggling, $900 stock. I mean, it's kind of hard. Whereas you know, Bitcoin, it might be, you know, somewhat high for some people, but you can always go to IBIT, and at some point or another, that's another reason why to keep probably some of that in your back pocket.
Yeah, it's been a wild sell-off in Costco specifically. You would think that, given all the other products that are mooning, Costco would be near highs, but not the case. And this just goes another way to think about it is like if you're still bullish on the general market, I think it behooves you to find these products that you don't think are going anywhere, you think will recover over time, and have a lot of upside room to grow. And you could see a rotation out of other products into products like this when the dust settles. So
I used to do that once upon a time. I used to flip the S&P 500, however you want to look at it, and look at performance year to date and look at the stuff that was down and try to find a couple of things to get long. I don't automatically do it now. I'll just make a list and keep an eye on them. And if you start to see them go, then you kind of know, you have an idea. But I think it's always an interesting thing to look at, like what struggled this year, what areas struggled this year in the market, and sort of try to take advantage from that way. It's an easy way to find a trade. Some of them you just don't want to do, like TTD, no thanks, I'm out on that. Fiserv, those are just dogs this year, you know, like some of them are just really bad. Decker's down 50% on the year. You know, Lulu, maybe, I don't know. It looks like it's showing some signs like it wants to go. I don't really believe, but I don't know, man. It looks like it's trying to turn around. So, you know, things like that. Chipotle, it's over, bro. That's like, no. UNH obviously is one of them that's down there, and I think that's one to keep in mind. So, I mean, just from that alone, just from that quick look, UNH and Lulu are probably ones to maybe get long for next year, maybe.
Yeah, I mean, there's products that are trying to fill the gaps here. CMG did have that big collapse from 40 to 30, but back up at 38 now. Lulu, like you said, we had a hard time believing it was ever going to catch a bid again. It's gone from 160 back to over 200. Nike, though, this one's the thorn in a lot of people's sides if you're trying to buy the dip in here. But yeah, I mean, a lot of these names, when you consider where the rest of the market is, and if you dig into a lot of these single name stocks that, you know, if you don't believe they're going anywhere, there's opportunity there for sure.
I have to find a way to get long, like a diagonal in UNH. Plenty of strikes.
Yeah, it's still expensive, and the markets are a little wide, but definitely staying defined risk in there. Some people asking about the MES strangle. It does have short delta on. It does have short delta now, but like I don't look at this and be like, oh, this is a bearish position. Like, but the whole thesis behind this is if we get to 7,000 or 7,050 or 7,100, I'm just going to shift the whole thing up and replace my short call risk with short put risk. And I don't ever want to have an in the money short call in here, given the IV landscape. And I think we rally through next year. So that's how I'll position it, but still have plenty of space for this thing to work out. Plenty. How do you pick a short call in a diagonal spread? Well, usually if we go to like ETH or IBIT, the cookie cutter setup for me is just buying an at the money option in a longer term cycle and then selling the implied move, this orange bar here, somewhere around that range. It's going to put you at a 20 delta or 25 delta short option, and then your long option's right at the money, which helps you maintain that premium and, of course, appreciate in premium if it goes in the money. So that's kind of how I set these up. Regardless of implied volatility, regardless of structure, I'm usually buying at the money in a longer term cycle and then selling the orange bar expected move in the near term. Would you say you do the same?
Pretty much, yeah. Selling that, yeah, like you said, the upside of that, where the orange bar lands, pretty much the same way.
Yeah, and even in like GLD, so going back to my previous comment, 23% implied volatility, $400 product. Let's say you wanted to put on a bearish position. You go to Feb, you buy the 410. You go to Jan, you sell the 400 or even the 395, and you have a 15-point wide spread on for $10. Like, this is a pretty cheap defined risk position where you can make 50% on the debit paid if this thing goes in the money, which is within the expected move here. So if you were going to the expected move, 20-point wide diagonal for $12, it's pretty hard to get this strong of delta in a $400 stock for such a cheap price point. So this is what I'm talking about with low implied volatility. It's cheap to buy those longer term options. Let's see what else we got in this YouTube chat here. Yeah, some people looking at Nike.
Nike? We talking about Nike? Talking about Nike?
Everyone is saying they don't have a presence outside of sports. Yeah.
What does that mean?
That's what I was saying. I was like, there's no Michael Jordan of this era.
Yeah.
Like there's no superstar that's propping up the brand. And there's so many other competitors now.
Yeah. Yeah.
That it kills the allure of Nike.
I gotta say what's on my mind. When I hear that, it's funny. I don't know how much you got. I haven't seen the new Dave Chappelle, by the way, but one of the old Dave Chappelle's, he was talking about, he has this bit about MLK wearing Jordans, like wearing some shoes, and he had his own shoes, and it was kind of a funny thing. But to that end, yes, there are no major like influencers that are pushing Nike these days. You're right. Jordan was the main person. They really haven't had anybody. They have all these individual different people as opposed to like one. I don't know. I mean, they're stars. I mean, Giannis has, Nikes, but it's interesting. Yeah, it's just different nowadays, I think.
Yeah.
It really is. I don't know what changes with them. And again, their China sales have been down more recently. I don't know, man. It's a stock. It's hard to bet on that one. Again, it's pretty cheap price point. You could put some of that in your back pocket too, but I don't know, man. I really don't see a situation when Nike's trading like $100-something again. Just don't. Maybe I'm wrong.
I mean, especially with the tariff impact, lower demand, it's tough. Sure. Couple minutes left here. Someone's got a GDX call. Short call? Maybe. 86 strike, Feb 20, dividend of 63 cents is scheduled for today. If you still have the option, then you're fine. You would have been assigned already if you had an in the money short call and it was at assignment risk. But Feb 20, 86, there's $400 of extrinsic value here, so you're good. And it's the dividend day. So ex dividend would be the previous session. So Friday over the weekend is when you would have been at risk. Ryan, any Solana ETFs tradable for options yet, or have you not dabbled?
Personally, haven't dabbled. I know there have been a variety of altcoin ETFs from ETH, of course, to Solana, XRP, a handful of others that have launched recently. But I'm not in any of them, so I can't speak to whether there are options on there. Might have been something I've missed. If there are some options, that's interesting to me, because I think you will see a big move in Solana at some point, and I'd love to have that tail exposure, even if there's a negative cost to carry. I kind of want those positions in my portfolio just in case, right? I do carry some crazy upside strikes in MSTR, not because I think it can happen, but if it does happen, I want to have a little skin in the game. So yeah, it looks like if you've got Sol Z up there, I don't know how liquid these are. They'll probably get more liquid over time. But I'm not in anything to answer the question. I've got a Solana position. It's probably my third biggest position in crypto, but haven't traded any options in there yet.
Yeah, it's certainly early days for the Solana ETF. options, but there's not one that really like shines. So ETH A, 19 million share volume. You have plenty of options expirations. IBIT, 30 million share volume, plenty of options expirations, but nothing, there isn't one Solana ETF that's the same in terms of clear liquidity and a hefty options market. Like BSOL, SolZ, like they have options, but no weekly expirations, which is always a sign of lack of activity. Both of these products are less than 1 million shares traded. So I would personally like to see one of these take off in terms of the general activity of everyone trading it. And especially if you see weekly options get infused into these markets, that tells you that there's enough participants for them to open weeklies. So still early days. But yeah, there's absolutely products out there that you can dabble in.
Yeah, to that point too, I'm not in any of these either, but I know we've had a variety of treasury companies, DATs or digital asset treasury companies that have launched. Some of them have been SPAC, reverse mergers. There might be options on those. I know there was Forward Industries. We talked to the chairman or the CIO on the Tasty Crypto show a while back, and that's a Solana venture. That might have options, but that would be another area that I would point people towards if they're looking for Solana derivatives outside of like perps or the futures. If you're looking to trade options on those might be products to be at least to put on your watch list.
Sure. Well, just like that, the hour has gone by. Time flies when you're having fun talking crypto. Thanks for tuning in. Thank you, Ryan, for the analysis. If you want to follow us on Twitter, you can reach us all there. I'm at Trader Mikey B. Jamal is at Jamal Chandler. Ryan's at Ryan Fred Grace. Give Tasty Crypto a follow as well. Again, I've got the newsletter link in the YouTube chat. I'll pin it to the top of the YouTube chat so you can sign up for that for free. It comes out every Saturday morning with an update on Wednesdays as well. But yeah, we'll see what the rest of the week brings us. Again, super low implied volatility. 45-point move in SPX is nothing. We had a 45-point move from going into Friday on Thursday of last week. So just to give you some context around that, but just because implied volatility is low, it doesn't mean things won't move. So just make sure your risk is in check. Things are where you want them as we head into this first holiday leg here. But yeah, thanks for tuning in. If you have any further questions, you can find us on Twitter. Stay tuned though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow, and we'll see you then. Peace.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and Reward. Today's Monday. We got a shorter week on our hands. We got Christmas week. I hope everybody's doing well. I hope everybody's preparing for this week. And I mean, if you're taking the time to plug into the market on a Monday right before Christmas, you're looking to stay updated on a lot of your positions, especially headed into the end of the year. And you're probably curious if this Santa rally is going to come to fruition. So We got a gap up over the weekend, and Christmas is just a couple days away. So the Santa rally might be coming through. But before we get into everything for today, I hope everybody's doing well. Let us know what you're looking at. Let us know what positions you're managing. So far this week, the only positions we're really going to be managing is our SPY position, trying to manage some of the long delta into the Santa rally, into the year end. But other than that, we're going to take a look at Bitcoin today, take a look at some of these micro futures, not much going on in there today. And then also, how about them Bears? I'm not a big Bears fan, but if you didn't watch the game, you probably heard everybody yelling on the streets at night, but it was one of the best energies I think I've experienced in a long time. So shout out to the Bears. They deserve it. Josh, this one's for you too, brother. And I think after 10 years of being a Bears fan, they've been loyal. So Broncos and Bears in the Super Bowl, we're calling it right here. I don't know what the delta is on that one, but it was a good weekend. I think other than that, this weekend, I think, Gus was checking out some Texas A&M. I don't know how the football game went, but I think there were some other teams he was posting about too. So I hope that's doing well too, brother. And we'll just get updated on some of the things we got going on today. Let me pull up this platform. We'll start with the tastytrade platform. Check out some of the positions that we have. Not too much micro today, just because, again, we're not trying to force too many positions. Liquidity's lacking a little bit. Volatility's a lot slower. And just not as much volume as a whole. Maybe Josh, maybe Big Deal, and some other guys are taking it a little bit slower this week to get into some of those positions because we're lacking a little bit of liquidity. But let me get this pulled up. Let's get this Tasty platform pulled up. We're going to start on the Tasty platform. It's only right that we check out some of the delta that we got going on in the portfolio headed into the end of the year. And then we will get to chat here in a moment as well. Just give me two seconds. Get this plugged in over here. Get this plugged in over here. Did you watch Interstellar this weekend, Stan? Bless you, long the plug-in. Decay, that's the only bear I know. I like the dispatchers from elsewhere on the Netflix. Yeah, no, Interstellar is probably one of the best movies I think I've seen too. It's not an understatement. It is not an understatement. 2 more seconds, guys. Appreciate your patience. Let me get this platform. Get this platform right here. There we go. We don't have too much going on again today. It's not too exciting, but I am glad that Gus did nudge me. So shout out to the boy Gus. Gus did nudge me to get on this long delta a little bit earlier last week because we were talking about that Santa rally. So we got some long delta on in SPY, sold an out of the money put, $5 wide. We collected about $1.60 in credit. So it's not a massive position, but it's enough credit to where we can kind of justify that and feel comfortable enough in this position. So I know, especially trading very directionally, sometimes you're like, oh, is this credit going to be worth my time in this position? Or maybe that's my personal mindset whenever I look at some of this credit. And I think $1.60 is still going to make me feel comfortable enough to get a little bit out of the money. So we give ourselves a little bit of breathing room just in case we get a pull back before the all-time highs, because the Santa rally feels very speculative, but at the same time, we were able to put on that like OG kind of tasty trade right there with $5 wide, a third of the width on the credit, and then also near 45 days left till expiration. 39 days today, but the market gapped up, rallied a little bit, and we really haven't been anywhere since the market opened up. We rallied a little bit, sold off. Now we've kind of been going sideways. So Theta's kind of cooking in our position, or in our favor a little bit there. We were also looking at a little bit more at QQQ. So we'll take a look at QQQ, see how some of those premiums are looking as well. And anybody that's just joining, we didn't take any micro NASDAQ trades. So let's go into these. Let's go into my platform. Let's look at all the executions, all the activity that we're taking on this account. You guys know we sling some of these micros left and right. If you're missing out on some of these trades, we are posting them over here on the follow trader. So if you want to keep up with these, right, every single trade that is taken in here that you see in this activity, I'll go ahead and post them onto the follow trader page. So just getting our feet wet as we get into the new year. I know it looks a lot of crazy with a lot of these micro NASDAQ positions, but as you can see, I'm not one to hold a position very too long. So I'm not going to turn into too much of a long-term bag holder in some of these, if you will. But with that being said, Microsoft, I think we've seen in the chat. Errol, your thoughts on Microsoft? Looks like one of the Mag 7 that just cannot catch a break. Let's take a look. Microsoft. It's looking like Microsoft can catch a break for sure. I mean, I know Meta was struggling a little bit alongside this too. This one's moving sideways. IV is super low on this. I mean, what is the volume? I know the volume this week across the board was going to be very low. You know, if there's some options positions you can kind of wiggle in, you know, maybe that might be the move. But overall, a lot of low volume. 7 million shares traded on the day from Microsoft. That's pretty low. IV rank is pretty low. They've been struggling. But I don't think I have much of a directional view on something like Microsoft right here. If anything, I would look for a little bit more of a maybe a premium play. But then again, IV is a little low. Let's look at the IV rank just to see where it's been at least. Because I mean, over the course of the last few months, we've gotten to 40, gone to lows of 16, now kind of breaking those lows on Microsoft. So we're struggling a little bit. Selling the credit here is not looking too attractive, but I don't know. What has Bill Gates been up to? Are they still heavily trying to compete in that AI race? I haven't been keeping up too much with Microsoft and what they've been doing on a fundamental level. Kids loved it. 7 years old. Asked tons of questions. No, it's a great movie. I think I gotta watch it again too, because I think it's one of those you pick up on something else after you watch it. You know, once, twice, three times. And then at the same time, I love a good movie that has deep meanings behind it, or I love a good movie that like really makes you think in layers. You know, really makes you think outside the box. So that one was like very intellectually stimulating. I didn't realize it was such a goated movie. Can't believe I waited so long to watch it either. Doing well, approved for futures. So I'm checking out options, BPR, and the different symbol spreads and building my risk management. Stoked for 2026 trading. That sounds really fun. I'm glad you got approved for futures. Got to get that ready headed into 2026. The buying power is definitely going to be a little different. So look, I know with the futures, buying power might increase a little bit, but when you're directionally trading, it's going to be easier to control that risk when you're trading directionally using the futures products rather than the options products. You know, with the options products, you can still trade very directionally. Don't get me wrong. You can still get that directional shot that you're looking for, right? That's why futures can be attractive. You're not really dealing with a lot of the theta decay or, right? Everything has its place, but whenever you're looking to take a directional shot, maybe 10 minutes, 15 minutes, 20 minutes, whatever the case might be, the futures is going to increase a little bit on the buying power, but I think the payoff is the fact that you're able to control that risk a lot more than using the same amount of buying power with the options positions at the same time, right? So as Dr. Jim would say, every gimme's got a gotcha. There's pros and cons to everything. And I think it's just depending on the trade opportunity that you're looking for. One is going to be a little bit more conducive than the other, right? Because at the same time, when we're talking about swing trading, right, I know some will gravitate towards maybe selling the premium a little bit more rather than trading those futures products outright. And I kind of land in the same boat, right? Whenever we're swing trading, it can be very tedious and very difficult to try and choose direction over the course of a week, over the course of 2 months, over the course of whatever the time window is. I think the longer that you're holding a position, the more difficult it is to trade directionally. So again, whenever we're talking about a larger time frame, still utilizing these options as always is going to make me feel a little bit more comfortable, at least, right? I mean, kind of have expected we'd get the gap up over the weekend in the continued run, but just pairing these together, I think that's what's going to be fun about 2026, right? Like utilizing these futures products and then also selling the premium in the most efficient way. And then if we want to buy some of the options contracts at the same time too, for maybe shorter term directional trades we want to take, maybe we can utilize that too. But I'm excited about 2026. I think we can really combine all the things that we've learned over the years and just apply them to our portfolio. Try dispatchers from elsewhere. Dispatchers from elsewhere. There we go. There we go. Screenshot of that comment, big deal. So that one's on Netflix. We'll check it out. And with that being said, let's check out Netflix. I know we had the deal with Warner Bros. And Netflix that didn't end up, I'm sorry, Paramount tried to have a hostile takeover on this deal with Warner Bros. And Netflix, and that didn't pan out too well, but Netflix taking a hit. I mean, you fork out 100, what did they buy Warner Bros. For? Like 100, was it like somewhere around 80 billion, I think it was? I guess when you take off 80 billion off your books to purchase something else, I guess you get a little bit of a down move in your underlying asset because that's a chunk of change to fork out. But after the news, we still have some premium to play with in Netflix, a 34 IV rank. The volume, 20 million volume on the day. Again, nothing crazy, but the activity is there. Earnings is going to be January 20th after the bell. That'll be an interesting one. I won't be taking part in Netflix until that at least. But I'm not against Netflix. They always have some pretty decent premiums, and even then, heading up to the earnings, it's not looking too bad. What else do we got here? Jason Siegel. Netflix is going to lose this one. What do you mean? What do you mean in terms of lose this one? Is that the Paramount and Warner Bros. Kind of deal? Either way, it's looking like Netflix is going to be a big dog in the media space. Like, if you haven't had kids yet and you're looking to have kids in this lifetime, Netflix might be one of the biggest players for your kids' generation again. So Netflix might be here to stay for a very long time, just by the looks at it. I didn't know Netflix was that liquid on cash either. I didn't know that Netflix had $100 billion to fork out to capitalize on an opportunity like that, but they do. And that tells me Netflix is trying to put a little bit of a monopoly on the space, if you will. But we'll see what we get with that. Let's go ahead and switch gears and go over to our TradingView platform so we can look at some of the NASDAQ market, ES market, and also look at some of the crypto at the same time. So bear with me as I get this up. There we go. There we go. But what are you guys' plans for the holiday season? What's your favorite dish on Christmas? Let us know in the chat real quick as I pull this up. What is your favorite dish? I will say my least favorite dish, and I don't mean to offend anybody. I don't mean to offend anybody if this is one of your specialties or your favorites, but a green bean casserole. A green bean casserole is just something I have not been able to get around. I thought I would grow up and eventually my taste buds would mature a little bit, but that hasn't been the case. So that or like a meatloaf, I'll take a meatloaf over a green bean casserole, but those two, it's a little iffy. It's a little iffy on my end. Prime rib, great one. Prime rib, that hits 12 months out of the year. Prime rib is one of one. Nachos, can't go wrong with the nachos. Nachos is like the chicken tenders, right? You can't go wrong with chicken tenders. You can't go wrong with nachos. The OG. Cannot. $82 billion, $82.5 billion. Support those children that you bring to this world, 100%. So I was hanging out with, I had seen my younger siblings, and they're pretty young, right? 6 years old, 8 years old. And it's just like when you hang around younger kids and you recognize how innocent, kids are just based off of some of their questions, just the way they act when you're not around younger kids for a long time, you forget how young and naive and precious these little minds are. But after being around them again a little bit more, I'm like, you know what, Anthony, about a year in, bro, you're going to be trading with me. We're going to have to open up your trading account. No. But to the point that you were making, definitely support our younger children that we bring into this world. And then also they're just so nice. They're just so precious. And I can't wait for my kid to be trading alongside me. No, I'm not going to brutalize them like that. Buffalo chicken nachos, homemade tamales. That's my extended family makes. So anybody that doesn't know, before we get into some of the weeds here on the NASDAQ, so tamales, that always hits home. My mom's family is from Mexico, Monterrey. Forgive me if I pronounce it wrong, but they're from Monterrey. My dad and his family is from Jamaica. So completely different styles of dishes when it comes down to the holiday season, different style cultures. But definitely glad to kind of have a little bit of like a melting pot, right? Because grew up in Colorado. How does a Jamaican and a Mexican lady end up in Colorado? I don't know, but that's where I was born and raised. And that's where I grown up to not like meatloaf and green bean casserole. So that's where that comes from. As we look at NASDAQ, we got a little bit of time left. As we look at NASDAQ, we really haven't done too much on the day. We ripped out of the gate. We sold off a little bit in the morning. We tried to consolidate around this value area high a little bit, and you can kind of see we're getting rejected. But I personally took the decision to not force anything today. The price action was a little bit slower. Volatility was dying a little bit quicker, and just overall not as much volume over the board. So sometimes the plays just aren't as clean. And not that some of these trade opportunities, won't work out, right? Like if someone else wanted to take this short opportunity at this value area high, right? If we go down to a smaller time frame, you can clearly see this value area high would have been a great short opportunity. But then you got to ask yourself, okay, it's Monday. We got a couple of days left till Christmas. If this trade doesn't work in my favor, how am I going to sit with that emotionally, right? I know a few years ago, I think it was 2020, I think it was 2022, 2023. I had a pretty good year that year in my personal account. I remember coming up into November and coming up into December, I gave back so much of my profits because I was trying to push the needle a little bit more. I was trying to up the gains, especially to that last month of the year. So I have found, man, when we're kind of rounding the curve on the last of the year, in terms of opportunities, how convicted do we want to be in this opportunity so that we can preserve some of the performance at the same time? So that's just something that comes to mind when I think about that, because if I take, for example, an oversized loss, not that we have to take oversized losses, but in this scenario, if I take an oversized loss knowing we're 2 days before Christmas and also knowing I didn't have to force a trade, I don't want that to damage my confidence heading into the new year. So not that we're trying to shy away from any opportunities in the market at all, but that is a little bit of the psychology at play there too. I think we really got to protect our confidence and really protect our psychology so that we can remain with the consistency to our approach. I'm looking to start trading futures options next year, trading MES and M&Q. What would be a good beginner strategy for this? Obviously, 1 or 2 lots, risk defined. Yeah, 100%. 1 or 2 lots, risk defined. I have found, and Stefan, ask yourself this, I've found whenever I start swinging the contracts overnight, that can mess up my consistency, that can mess up with my psychology a little bit. So I would personally start with one or the other. Do whatever you're most comfortable with, of course. But in terms of finding that process in which you trade a specific product, I would trade the same time frames for an extended period of time until you get comfortable. I know something that it would just mess me up when I'm trying to swing, I'm trying to day trade at the same time. It's like 50 different kind of time frames you're trading in. So whenever picking up a new product, I would just say keep it to one time frame and then expand from there, just to learn that specific product. But we definitely got to utilize the options on futures a little bit more too into the new year. I know a lot of the times what we were doing was we were using SPY or QQQ, that ETF. If we were, let's say, feeling bullish on NASDAQ, we would trade QQQ, right, which is the ETF for NASDAQ. Or if you're feeling bullish on the S&P 500, we would trade SPY, the ETF for the S&P 500. So going into 2026, we can utilize these options on the futures a little bit more too, right? Kind of reap the benefits that the futures products intrinsically offer, like its own leverage component, and then at the same time, just taking advantage of that on the options too. I think we can do that together for 2026 as well. So I think it'll be fun. The micro NASDAQ is the high by volume, one of the highest contracts traded at the CME as well. So the activity is there, the interest is there, and I think we'll have a good time with it. Jamaica Mex food could be a nice restaurant. I had a name for one. It'll come back to me, but I think we get a little Jamaican Mexican vibe, right? Jamexican, obviously, like that's the go-to. That's the go-to verbiage. Jerk chicken tamales. Yo, you might be onto something there, BDH. Screenshotted that comment too. I'm at the same point here, primarily considering selling put ratio spreads or simple short puts on spikes and volatility. I was thinking about the tasty mechanics for the futures options. Oh yeah, absolutely. Absolutely. I tried MES options for a while, but they just weren't nearly as liquid as SPY. Yeah, that was kind of my experience at the same time, Theta. And because of how correlated both of those products are, obviously, because it's the ETF for that indice. I'm sorry, that futures product. The liquidity aspect, because it's so correlated, I just found it in my best interest to use a QQQ because slippage, fills, those kind of things. And I know if we're trading more directionally on a smaller time frame, I think liquidity is going to be one of the most important, volume and liquidity being the most important factors, the smaller of a time frame that you do trade on. So if it's a larger time frame, I don't think using the options on the futures is going to be that big of a deal because you'll still be able to get in and out, hopefully, potentially, for the price that you want But in a very small time frame, you're most likely, and it very likely could get slipped if the asset isn't very liquid. So QQQ options and SPY options are almost always a safe bet. I mean, the volume on those options are extremely liquid, pretty much on a daily basis. So again, with that being said, though, we'll see how we transition into the new era of the market, right? I don't think that all the new volume that we're seeing through these exchanges can really be understated, right? So, I mean, maybe we get another new generation of traders that begin to explore a little bit more with those options on futures, right? I mean, these futures products didn't have nearly the amount of volume traded on them even just 3 years ago, 2 years ago, let alone 5 years ago, 2020. So who knows? Maybe the options on the futures end up popping off at the same time. It'll be nice to know how to use all these products. So we'll dive into it all into 2026. It is pretty cool to sit here though, right? Like I think when we first started, I didn't even know how to trade most of these products. And I think kind of the mindset going in was like, okay, maybe into each new year, we can learn new tools to just add to our repertoire, right? Like if some of you guys watch the old Arrow trading vlogs videos, like that was kind of the goal, like just to kind of learn everything, kind of learn as much as possible from Jamal, Ilya, right? Mike, Nick, Tom, Tony, and then just kind of build your own repertoire. So I think that's going to be the same mindset, going into the new year at the same time. With that being said, though, we've been sitting on NASDAQ for a little while here, and we just have barely a minute left. Let's check out crypto before we leave. We will be back tomorrow. We'll give another update on what's going on in the market. Crypto taking a little bit of a hit. I mean, we're trading 89,000 crypto right now. We really haven't gone anywhere. So we'll keep an eye on that. But lastly, as I just said, Bitcoin was going to be last. It's only right we check out some of the metals. Is Kimberly riding gold to the moon? She might be, because I think she surpassed the moon. Good Lord. These metals are no joke. Value area low down here, respected very, very, very well. Not a trade that we took, but we'll keep eyeing this thing. This thing's a beast. I mean, last but not least, let's take a look at silver before we wrap for the day. Silver, pretty much same story over here. Silver showed that squeeze to the upside before gold did, but nonetheless, two absolute beast underlyings right now. Don't get ran over. Don't try to pick off the top on that one, but we'll see what happens. With that being said, guys, let's check up on some of these comments before we wrap. But do they allow ratio futures options? So that'd be a nice add. Screenshotting that comment as well. Get that added. Making Jamexico. We might be on there. We might be on to something there. Big deal. 60 DTE, 20 Delta. And BE. We'll check that out. We'll check that out next time, Mr. Bradley. LFG New Year. Watch them all. Yes, sir. Absolutely, guys. Thanks for taking the time to hang out with us today. Be sure to stay tuned for all of the host shows. Drop in nuggets, drop in dimes. If you hear too much about the Bears today, I apologize. I know whenever the Bears won over the weekend, I heard this insane yelling outside. I opened the window. Everybody was going crazy. I was like, you know what? I'm going to get excited with all the Bears fans too, because this is kind of cool. So anyways, I hope everybody has a great Christmas. Bears fans got theirs early. Be sure to stay tuned for more segments coming on next. I will be back tomorrow, and we'll catch you guys next time. Peace.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
Time we get lost, we get out of our minds. But let's focus our rosy eyes. Why don't you tell me the rest of the line? Hey, hey, hey. Hey, hey, hey. I'll be right beside you. All I ever want to can't get
We are back. It's still Monday, December 22nd, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, did you get all your Christmas shopping done this weekend?
Most of it. I still have one or two things to do, but as a parent, the holidays are really stressful. So it's just a lot of running around. Every year I say in October I'm going to start getting it all done. Never happens. It just comes up too quick. So That's where I'm at.
One or two things being code for I still need to get everything.
Yeah, probably a lot of stuff.
Yeah,
but
a lot of stuff. Still.
I got the kids stuff pretty much done.
Yeah, well, that's what matters most.
Yeah.
Hopefully Santa treats everyone well this year. Santa treating the market well here today, Thomas, because we're entering the Santa Claus rally window. Final 5 days of this year going into the first 2 of the next. Since 1950, the S&P's averaged a 1.3% gain during that time. We're starting off with a bit of a bang here, Thomas, up by 0.6% here in ES. NASDAQ up by just less than 0.5%. Same things for the Dow Jones. The Russell is the leader, up 1.35%. But that's not really the story of the day. The story of the day is the fact that it's, well, we could call this Futures Power Hour. It's been metals momentum hour as we kick off this trading week. Across the board, no matter where we look, Josh, we can go right into the spotlight slide. You're seeing metals push up into levels that they haven't seen in many months, many years, well, maybe ever. Josh, one more slide there, please. You'll see that across the various products. It could be gold, it could be silver, it could be London-based copper, platinum, palladium. These are highs that are coming in right at the year-to-date high today. In many cases, as you're seeing with gold, silver, London copper, those are all-time highs that have been established throughout today's session. Some of the other highs are what you haven't seen since the global financial crisis. So, Thomas, this seems to be one of the resilient themes of 2025 that I, for the life of me, can't seem to pick apart for why it would fall apart in 2026. Why are the metals still so strong? It doesn't matter if stocks are up or down, the dollar's up or down, rates are up or down. What is happening here that traders need to be aware of as they navigate this holiday window?
Yeah, so a lot of people are asking for gold for Christmas, so Santa is stockpiling it at the North Pole, and that, of course, increases demand.
Diversifying his FX reserves, of course.
Right, yeah. So, I mean, you're right. I don't see any difference either. And, you know, there's fiscal deficit concerns. Those are going to persist, probably even more so. In America, you know, it looks that way. In Europe, fiscal deficits are going to go up and up because there's increased defense spending. It looks like that's going to accelerate next year. You know, France announcing they're going to build a really expensive nuclear aircraft carrier that needs to be financed by debt because France is already in a lot of debt. You know, that's the big theme, I think. Fiscal deficits. There's also geopolitical uncertainty. Gold hedges against that as well. There's concerns that, you know, inflation from tariffs is going to show up at some point, even though it hasn't really materially shown up to a great degree yet. I don't know what could derail this. You know, there's not like something big is going to change, at least something that we can see right now. So, you know, my view of going into 2026 for the metals, I'm going to stay long. It's been working all year just because, you know, the number changes from 2025 to 2026. I don't really think it should change your outlook on the metals that much. Today, you know, I had my gold call spread. I am rolling those prices up. And, you know, that's what I've been doing. So I think it's going to continue to work. I feel pretty confident being in gold. I've wanted to get in silver. I just have not been able to get into it. You know, I like everything. I even like copper. So, I mean, it's looks like a green light for the new year for gold.
Gold looks good. We finally get that breakout materializing today. That very short dated call spread that we were holding on to, Thomas, we were able to unload it today at a fairly nice gain. We're going to go over to that in a little bit. It's nice having those high convexity trades. They help make your year end on a better note for sure. But the real story is what's happening with equities as we turn the corner. Josh, we can go into the next slide and then transition over into my charts here. The S&P 500 is 69.30. 69.30 is what I see on my screen right now. That is a nice little improvement from where we've been in recent sessions, having popped up by just over 0.63% today, rounding out to the 100th for our lovely producer there, Josh. Thomas, it's what's working on the 8th straight day of gains quietly here in the stock market as we've drawn up. You being a frequent guest here on Futures Power Hour with me multiple days a week, we've been looking at this potential inverse head and shoulders pattern. amidst a continued collapse in vol, which is obviously the telltale sign of anything and everything that we want to do in the short term. What do you make of it? Not just the VIX coming in around the holidays, and I see a sub 15 VIX now on our screen, 14.45. What do you make of the collapse of vol in general across the board for most products outside of the precious metals?
I think it's because there's not a lot of foreseeable event risk, so there's not the next week, 2 weeks, there's not a lot of economic data coming out. It gets slow even for the political headlines potentially. There's just, I don't think traders are seeing anything that could really derail Santa Claus rallies. So that's what we're kind of banking on, this seasonality effect that happens from, I think if you put it in a very technical sense, I think it's from December 26th to January 3rd or 4th or something like that. But typically around this time of the year, you just kind of expect the markets to drift higher. And, a lot of years, maybe that's because there's just not a lot of happening. There's not a lot of risk that's, expected to come out that could really turn the market upside down one way or the other. And I think it's just also, because of that, some complacency, but also the risk taking is there. You're complacent, but biased towards the upside. And it's looking like the market is going to end another year on a high note. And we have some headlines also like NVIDIA being able to ship chips to China beginning as soon as I think February.
Yeah, that's what I saw.
You got a headline coming out that Google is making a major acquisition in a AI infrastructure company. So that's showing that, these big companies are still willing to spend money on AI. So that's helping prop up sentiment in that sense. Really, I think it's just the lack of things that could potentially drive the market down. They're just not there.
There's a question that had come in here that I saw earlier. How do you contrast the VIX drop with the Bitcoin drop? Low vol, lack of risk appetite. I think it's really important for traders to understand that a low VIX can be absence of fear, not the presence of optimism. And we're making our way through a holiday period where in the short term, the next week or two, Congress is out of session, right? Maybe Trump does something with Venezuela. But outside of that, do we really see anything happening significantly until Monday, January 5th? And even so, the first big data release for us is January 9th, the Friday, that non-farm payrolls report. No significant earnings out until then. This seems like an absence of fear, not a presence of optimism that's making its way through the market, because you look at what's going on in the metals, and that doesn't seem to be indicating any sort of optimism whatsoever. It's still that fearful, let's get away from the dollar and get into assets that people may be starting to hoard in a new global order. Bitcoin is more sensitive to liquidity, leverage, and the marginal risk taker right now. And it's already had such a bad year that unless there's clear signs of upside momentum, what do you really do with this right now? It's just been chopping around for the past month, effectively, Thomas. And until we get through 95K, there's really not much to be done. But when momentum exists elsewhere, people strap in and they try to glob on. So I see an equity market set up right now continuing to pave the way higher, with vol coming in still, VIX below 15. And that is the place, historically speaking, that when you consider what produces the highest daily average returns, what produces the lowest standard deviation of those daily returns, do you want to be short vol in any form or fashion, or do you simply just want to be long the market? And long the market's the answer. And so this is a low volume, low volatility kind of float higher. I point to the low volume of 645,000 contracts traded here today. That is half of what we saw at this point in the day numerous times last week. I think every day, Monday through Thursday, Thomas, where the participation was just significantly through the roof. So low volume, positive technical drift, low volatility, that's melt up condition as we head into that Santa Claus rally window right now. So I see it's tough to fight the tape if I were taking on a bearish disposition 1% away from all-time highs.
Yeah, I had an RTY put spread, a long put spread that I kind of had on for protection in case the market just flips over. I took that off today. Still in a long call ES spread, long NVIDIA, long a couple other single stock names. So, I'm positioned bullish for this to happen, but I think you're right when you're saying, it doesn't necessarily have to be optimism. It can be a lack of fear. And I think that's probably what it is right now, is a lack of fear. Like you said, January 9th, we don't get an economic print, Congress out of session, so really I think the big geopolitical story for the markets right now is the only thing is really potential military action towards Venezuela. And really, I think that's mostly what we're looking at.
69.29 here. It's 42.5 points on the board today. The head and shoulders pattern here that we have on the bottoming effort, if it's a 68.80 down to 67.70, we'll call it 110 points. 110 points on top of that gets you to 69.90. That's putting you right at the high. The high from December 11th is 69.88. So positioned for a move to go to the upside. One trade that we've had on for a number of weeks here on Futures Power Hour has been looking for a near-term push up to 7K by the end of the year. And given the fact that we're now in the window with which a potential rally could transpire if seasonality does decide to kick in, and given that technical setup, Thomas, I'm still holding on to that 7,000, 7,050 call spread. And while it's improving today, it's still a little bit underwater, but holding on for 9 days to expiration gives something to play with over the next 2 weeks with that shorter term convexity that should make things a little spicier. And certainly when it works out in your favor, like it did with gold today at 1 DTE, it can make for a nice little windfall there. So this is not the typical tasty trade, right? Because we're not selling vol. This is more of a reach, but reaching back for a move into the high that we had prior to the Fed. It seems like the table is set for that in the S&P. And I would point to the Russell here, which, Thomas, you mentioned you got out today. That's probably a good move. We've been watching this level around 25.65 or so. On shorter term timeframes, it had constituted that head and shoulders pattern that we were looking at. You had this really interesting setup where it looked like Russell was topping out, and sure enough, you reached a point last week where that 100% extension was reached. And ever since then, we've been moving on up. We get back through the neckline. All of a sudden, hey, left shoulder head, right shoulder, neckline breakout. This is looking for a move back up towards 2620. So the small caps look good. The S&P looks good. The NASDAQ's even trying to fight back through an area where there was former support. I mean, you're checking the boxes here technically on so many things right now where sure, it's illiquid and it's thin markets and maybe the participation's not there. But the tape is the tape and the technical levels are the technical levels. And you're starting to clear those hurdles in a meaningful enough fashion where you might get all those short-term bears finally throwing in the towel and you get a squeeze here over the next week or so into the end of the year.
Yeah, if you're a bear, why not throw in the towel this time of year? It kind of looks like you're fighting an uphill battle when you look at the technicals, you look at the lack of event risks. So, I mean, it makes sense. But the technicals do look good. And I think, balancing the risk, it looks like it's advantageous to get some long exposure, even if you're not already going into the next 2-week period.
I like what I have on the board right now, Thomas. I'm pretty comfortable with what I have on the board right now, which was that ES call spread. There's also the MES position from the MES Z5 going into the H6 on the long side. That was moved on Friday, and we get through the neckline breakout level. So let's play for that. Let's get a little bit more juice here. Just in case the ES call spread, what if we don't get to 7K by December 31st? What if it happens on January 2nd? How many people lose money in the market because they're right, but they mistime it? If you don't make the timing right, then it's going to be a bad trade. It doesn't count, right? So having that kind of exposure, it does leave me double tap, so to speak, if the market does sell off over the next few days. But if it does run up, I can maybe, ring the bell twice. I'm very comfortable with that here, at least in ES. NQ, though, you mentioned NVIDIA. The semis on a sectoral basis, the semis have just put in a significantly higher low than they did previously. And this may not look like it, but that's another occurrence in which it's happened in recent months. September swing low is lower than the November swing low, which is lower than the December swing low. So you're starting to see this churn to the upside here. This looks like a bullish chart still. If semis are able to go up, if technology is able to reclaim the lead, if the banking sector, which we've seen in recent weeks, XLF, for example, has broken out, and today it's moving up into new all-time highs. KRE, it broke out recently and is consolidating still above breakout levels. There's a lot of signs that growthiness, that momentum is still very much in play here right now. And that year-end window dressing effect where folks want to have the winners in their portfolio so they can say to people, I owned Palantir in 2025. That's a real thing.
Yeah, I mean, there's been a lot of big names that have put in a lot of work this year. We were talking about rotation last week. It looks like we're back to like the typical more healthy risk on type of movement that we're seeing across sectors. And I take that as, kind of a green flag at this stage. And, really all we need to do now is retake these previous highs and, where we go from there. I mean, of course, I think that would be bullish, but if we could get there over the next 2 weeks, that's kind of a big ask for some of the names, but I think it's everything's encouraging right now. But it's also, the market's pretty sensitive to these changes in sentiment over the past month. When that happens, when you're down, you're more likely to get hesitant right away. So, I mean, this story, things could change pretty quickly. And I think you have to be, at least prepared for something like that to happen. But as of right now, I mean, it looks like, the bulls are prevailing and nothing really to change that.
No, and even last week, the AII survey, it does come in a little bit. People who were sitting on the fence, neutrals, shift a little bit more bearish. The bulls go down by 0.5%. The neutrals are down by 2.1%. Collectively, you then get the bears bouncing up by 2.6%. This is still near the yearly high in terms of sentiment, which the one-year high for sentiment in the AII survey is 45.9%. So from a certain view, it is crowded. Unfortunately, we still don't have good CFTC COT data because that's not going to be fully updated until the end of January. So we can't look to that. But I would still point out, Thomas, over the next few days, while we make our way through a holiday season here, where equity markets are going to be looking at a dwindle day on Wednesday, a closure on Thursday, crypto is probably going to be the best bellwether that we have for the foreseeable future. And I know that stocks pushing up towards highs today, right? S&P is within 1% of the high. The crypto markets are nowhere near that. Consider the fact that if Bitcoin is up above 90, it's getting closer to 95. When we get on the other side of Christmas, you're probably looking at a firmer open. If it's a market that's closer to 85 or even 80, it's probably going to be a red open. Now, how far you go, obviously you can't make that judgment because we've seen the stock market continue to push up over the last 3 or 4 months while Bitcoin has fallen into one of its winter phases, so to speak. I did see a headline come across earlier that not only was MicroStrategy, or Strategy, I guess we're calling it now, increasing its cash reserves. Sailors is going to be pausing his Bitcoin purchases. We're going to have to get confirmation on that. That seems like a fairly meaningful change in behavior. But Thomas, crypto, obviously an insight into what equity markets could be doing the next few sessions. Other than that, though, low volatility. I think we can move on here. Chips are on the table. Let the positions work.
Yep.
We can head over to the bond market now. Bond market treasuries have seen vol basically obliterated in recent sessions. Thomas, 3.1 IVR, I guess, is a little bit of an improvement here for ZB. Notes as well, they're at a 1.6 negative IVR, so it's not the most significant improvement. We did have a 2-year auction today. We have a few auctions on the calendar this week. Not that the auctions are the significant variety because we care more about the 10s and the 20s. But this particular week, we are looking at what are the 2-year notes, the 5-year notes, the 7-year notes today, tomorrow, and Wednesday. We did have the 2-year note auction at the top of the hour. It was weak overall. Demand metrics were lackluster. The foreign participation hit the lowest level since March 2023. The auction itself had offered $69 billion in 2-year notes with a stop-out yield of around 3.499%, which was slightly higher than last month's. The bid to cover, which is a measure of demand, fell to 2.543, which was weaker than the 6-month average. And indirect bidders took down only about 53% of the issue, the lowest share seen in over a year. We did see treasury yields move up a little bit after that 2-year auction. The 10-year yield, for example, is pushing up to the session highs right now at 4.172%. And it's still kind of sitting on the precipice of wanting to make a turn to the upside here, in my view. I see the notes, obviously the inverse of this, Thomas. We just ran back into our 1-month moving average, our 50-day moving average last week, and we got promptly rejected from there. So is it about the tariffs? Is it about the Fed policy, reinflation? Who knows? But the price action doesn't look great, and vol is starting to pick up off the ground. Hopefully that changes over the next 2 weeks because the MOVE index is at its lowest level in more than half a decade. Treasuries are an exceptionally tough trade for the Tasty crowd if you're approaching this in any sort of typical Tasty kind of fashion.
Yeah, for me, I'm looking at the 2-year yield. You know, it's come down quite a bit in the last 2 weeks, while at the same time, you know, the longer end yield, 30-year, it's stayed pretty elevated. So it's showing. I think that the market expects a Fed that is going to continue to cut, and we're kind of brushing off, you know, the implications of possibly, you know, higher inflation, but also maybe seeing higher growth too. You know, but ultimately, I think that 2-year yield coming down over the past 2 weeks has helped kind of keep some risk appetite in the market for equities. And, you know, if this divergence continues, I don't know what that means for the markets going forward or how it affects Fed policy. But right now, I think the markets are still seeing a Fed that is going to be pretty willing to cut rates in 2026.
You know, with the inflation report last week, let's just consider the fact, and I brought this up on First Call last night, but let's consider the fact that the market was comfortable with a Fed that just gave us 25 basis points of rate cuts under the assumption that Fed funds rate at 3.5 to 3.75 would be in hand with an inflation rate of about 3%. So the real Fed funds rate then, just as scratch math back of the envelope, is about 50 basis points, right? 3.5 less inflation, 3%, you get 50 basis points. In reality, the real Fed funds rate is more than that. It's like 80 basis points because inflation's not 3, it's 2.7. And so if the Federal Reserve was thinking that they want to be in a place where, you know, they're keeping their main funds rate 50 to 75 basis points above the inflation rate, they now have policy a little bit tighter than what they would have wanted. And so if they can get some confirmation over the next few weeks that the labor market, you know, hopefully it's not falling apart. I really don't think that's going to be good for anything here. And maybe that's what gets bonds moving again, is a labor market that's in trouble. But a world in which inflation is indeed a little bit softer than what the market had feared and presumed, and that the labor market is not falling apart, but it does need some help, you can get into a world where you're getting a rate cut priced in a little bit more aggressively than what the current timetable suggests. And the current timetable, Thomas, as I'm looking at it here, it's only a 20% chance of a cut for January. So you get those cut odds coming back in today, for whatever reason, Thomas, lower cut odds, weaker treasuries. Maybe treasuries really don't get a bid underneath them unless you see those cut odds go up for bad reasons again. But right now it's not angling in that direction. So, I mean, what do you do here then with notes? I'm getting kind of killed. So maybe people shouldn't take my advice or, even my insight into what's happening here, because I'm playing this two ways. I'm playing for something to just move in notes and something to go down in bonds. And in notes themselves, I need to get away from 112 because that reverse iron fly, while there's plenty of time left, 60 DTE, it's not exactly working out so far. We just got to get away from 112. I think this is still an interesting trade because it's north of a 60% probability of profit, and it's still better than a 2-to-1 risk to reward. With those kind of trades, I think you have to take them when you have those low vol environments, which we're in right now. So it hasn't worked out so far, but mechanically, it is the kind of trade that you should be taking in this kind of environment. So sticking with it, as it were, through the holidays, but not loving what's going on thus far at this juncture.
Yeah, I haven't been working out in bonds either. I was long ZN up until last week. I got that trade off for a loss. Still long ZB, and that's not doing well for me either. So, reading the bonds wrong in December. I don't know. Do you see the bigger threat here? Is it inflation coming back up, or is it a labor market that is if it falls apart? I mean, I guess they're both not ideal for the Fed, but I guess the best thing we can hope for is slightly soft labor numbers and inflation, staying suppressed.
I think the market would care more about, it's a really good question, right? If unemployment rate goes up to 5% over the next, say, 3 months, is that worse than inflation getting down to, say, 2% over the next 3 months? I think so. Recessions typically occur not because of the decline in consumption, but from a decline in business investment, right? And so if unemployment rates are spiking, it's signaling to the business community that they need to pull back CapEx, they need to pull back expansion, they need to stop hiring, if not fire workers and shed workers. And then you start to see the knock-on effects of a decline in aggregate demand throughout the rest of the economy. So I think the market, if the Fed is cutting, the market wants the Fed to cut for inflation maintenance reasons, not because of labor market issues. I would go so far as to say that labor market cuts, no matter the variety, are going to be taken as bearish for equities, bullish for bonds. Inflation cuts may not do anything for either because it's just more about tweaking the knobs, so to speak, and doesn't signal anything about the real state of the economy. Either way, though, Thomas, the Fed is going to have a really interesting path forward. Stephen Myron's out today saying, Myron, someone please tell me how to pronounce that. I've heard it so many different ways on Bloomberg, Fox Businesses, CNBC. He's still undecided if he's going to vote for a 50 or a 25 basis point rate cut in January. So we do have that as an anchor point in today's conversation.
Yeah, I don't know the pronunciation on that either. I've heard it both ways. Yeah, I mean, the Fed landscape is changing. It's going to be different next year. Voting for a 50 basis point cut in January, there is this divergence among members, right? There's usually members on the FOMC board are pretty in line with each other. That has kind of unraveled the past, I think, 6 months or something like that. But it looks like, the board's going to be leaning towards more of that dovish outlook. So, I mean, of course, a labor market that falls apart if you cut on that basis, I think bad news, right? Because then you got to cut rates more aggressively. And then, usually stocks don't rebound for something like 12 to 18 months. You get that bear market, and then those rate cuts take a while to come back into the economy. For bonds, I think, I have to get out of this CB position if it doesn't rebound the next couple days, which I don't think it will. I think after this, I have to wait, at least a few weeks to get back into a position here as we get closer to January and see how these cut odds develop. But what's more likely to happen is, inflation going to surprise or the labor market. I'd probably say it's inflation, because I think the labor market overall, you're seeing business confidence. It's rather steady, if not really great. It's at least steady. So, in unraveling in the labor market, I don't think it would happen quickly. I think there'd be a lot of warning signs for months before that did happen. But bonds, I'm starting to lean towards, I want to get long ZN when I get back into bonds instead of ZB. ZB is just not doing what I've expected it to do going all the way back to November. So reading it wrong there, I think I'm just going to stick out and stick to ZN when I get back in.
There is a difference in the two products, of course. They are, one is significantly bigger than the other. It's twice the size of the other. ZN 15.625 tick value, whereas ZB is at 31.25. And the overnight buying requirement for bonds, ZB is close to double that of notes, 4,070 versus 2,063. All things considered, if I'm looking for a vol expansion play, it's going to be cheaper, a little bit more buying power, effective for your typical retail trader to operate in notes rather than bond futures, in ZN rather than ZB. Only if there's a big difference do you find something, is it really worthwhile? And ultimately TLT, the ETF or the myriad of treasury ETF products could be the better fit here, depending upon what your needs are. I quite frankly like the futures because of that 23/5 aspect. The continuous round the clock trading for me is delightful. Thomas, we jokingly refer to today's episode not as a Futures Power Hour episode, but a Metals Momentum Hour episode because of what's happening here. It's absolute metals mania here today because we see gold pushing up to that new high, silver pushing up to that new high, gold up nearly 2%, 44,683 or 68.30, excuse me, here in the futures market. That bullish ascending triangle that we were watching last week decided to break out to the upside, which, having ridden our recent call spread effectively into the ground past the 21 DTE window because of the faith that we had in gold and its upside potential, we were able to take that trade off today at 1 DTE for $47.50 credit. It cost $10 in the debit on the way in. There is still a meaningful gold position here at 36 DTE, which is a long 4,400, 4,425 call spread, which I'm more than comfortable sticking long with, because who doesn't like a chart that goes bottom left to top right when you're long something? What is particularly encouraging about the gold breakout today that gives me the confidence to hold on to the longer-ish so position relative to the two is the fact that volatility is surging to the upside. That's a 55.6 IVR on the high end today. We're currently at 51.5. Metals volatility is once again expanding as prices move to the upside. And that has been one of the wonderful contemporaneous signals that if you're a bull, things are moving in your favor. So Thomas, how far this rally runs, who knows? But it's done everything that it should be doing on a short-term basis. You and I had the conversation in recent weeks about multi-time frame analysis vis-a-vis the Druckenmiller method, where if you're looking at a 4-hour chart and you apply that 18 to 20-hour multiplier, it gives you a 1 to 4 day window with which you would expect the market to make its move. And here on this 4-hour time frame, this triangle would be looking for a breakout in a 1 to 4 day trading window. And sure enough, first attempt is on the 18th. Today's the 22nd, 4 days later, we have our resolution. And so everything kind of worked out perfectly here, almost textbook to a certain extent. I'll be looking to buy on pullbacks so long as we hold 43.85 in the GC G6 contract.
Yeah, today what did I do in gold? I closed my long call spread. I had a 4,400, 4,410 call spread. I put that up to 45.40, 45.50. So, I'm staying long. I'm just not even waiting for a pullback. Just extending duration, giving myself more time. This trade was already at, I think, 85% max profit. So, I had no problem rolling it higher. And the way things are moving, for this position, it's plenty of duration to hold through a pullback and give myself time for it to become plenty profitable to where I'll probably just roll it up again. Like I said, I'll keep doing what I do in gold, waiting to get back into silver. I've said I'm going to get back into silver a couple times, and just the pullbacks, I haven't bought it because, well, I don't know why. Now I have to force myself on the next pullback, even if it's a small one, to get in the game here, because I'm sick of watching it for the past 3 weeks going up without me.
Silver, likewise, volatility sticking in there, 84 IVR in today's session. We had rolled out recently. Maybe we shouldn't have. We did, though. We rolled out into the 67, 68 call spread. And while that's working out swimmingly, because there's quite frankly a lot of time, I almost wish we had done it at 36 days, Thomas, because the position would be a little bit more sensitive right now.
Yeah.
Nevertheless, holding this as long as the uptrend remains. And that is the key thing here. Technically, silver has been on a tear, up more than 30% over the past month. The uptrend, the backbone of this starts on November 21st when we leave that bullish falling wedge. This is a prototypical cup and handle pattern that is seeing continued strength. As long as this channel remains to the upside, you really just have to grit and bear whatever occurs in that channel. And that may be a pullback down towards $66. And this uptrend is still very much intact. So for me, having the duration over the next week or so, letting this clock run off a little bit here, maintaining that uptrend, fine. If we do get a pullback to 66, I'll be looking at call spreads, thinking about something around $70 here. Why not add in? Why not pepper in a little bit more in a market that continues to give as long as the technical tenets are in place? It's an expensive trade, no doubt. But the way that we've been structuring these with gold, with silver, has been that we roll the winners into the next position. And so today, for example, with gold, the winner there will cover potentially 2 max losers in silver moving forward, which means at that rate, Thomas, as long as we hit 1 out of every 3 trades, we're going to break even by doing this. Of course, the trend has to remain in place for this to continue to work, but we're hitting more than 1 in 3 trades right now, which is why it's been working out so neatly. And I continue to want to put coins into that slot machine, so to speak. I will feed the beast as long as it keeps giving me what I want. And that is about the staying mechanical here. If the technicals are there, if the volatility profile is there, it doesn't matter if it seems like it's run too far. How much more can it go? Those are questions for other people to answer. We're worried about the next, 1 to 2 months. And 1 to 2 months right now, the uptrend's here. So silver pullbacks, we're gonna stick around for this metals mania as long as the party keeps going on.
Yeah. Do you think this is geopolitical risk is driving this all a little bit more now, or is it just kind of the same that it's been, driving higher on fiscal concerns, everything else?
A little bit of everything.
Yeah.
The fact that, one of the great things about gold, silver, even crypto at some points, is when it has narrative elasticity, where no matter what is going on, you can make a case for that being bullish for the asset. And so in this case, it feels like gold and silver still have a lot of that positive narrative elasticity. Fiscal deficits are going up, monetary policy is getting looser. There's perceived lack of independence among central banks. Europe needs to finance a war at deeper and deeper levels with greater and greater deficits. Is China trying to accomplish a new payment system away from the US dollar? Feed the narrative, choose an angle on any given day, and it all seems to be, well, this is why gold's going up. And in that kind of environment, it's very difficult to fade. So I'm not a fader. I am definitely a runner right now.
Yeah, and what you said about lack of confidence in independence among monetary authorities, I think that goes into not only monetary authorities, but government overall. And, if you lose faith in the government or parts of it, what better asset to own than gold, It's
a good question, Thomas. Copper maybe getting ready to take the next leg up. I don't know. It seems to be struggling as it attempts this breakout. We like the metals generally, but it's London copper that's been moving to the upside, not our American grade HG here as we trade in the futures market. There are a number of uptrends to watch in the short term to see if this thing sticks together. You could see if we start to get below 550, 540, right, basically here, some recent swing highs are giving way. You're starting to lose upside momentum. Copper is not looking the hottest. I maintain my bullish exposure because why choose one metal? We can have 3 favorite children, Thomas. We don't choose favorites around here. If we like one metal more than the other, we just buy a little bit more of it. But they've all been good long delta trades this year and going into next.
Yeah,
not really something to be too concerned with.
Yeah, I have to readjust my my copper position. It's come down to 36 days out now. The short put spread at 512, 515. We're about at 550 here, so I feel pretty good rolling these prices up, rolling the duration out. I think I'll actually do that today. So I don't know. Like you said, technically it's not looking the best, but I think it still has more room to run higher.
More room to run higher. Hopefully, still sitting along the 570, 580 call spread, Thomas. Oil up, nat gas down today. Are we getting more rumblings of a potential U.S. incursion into Venezuela? It certainly seems like it. How much more can this thing run, though? It's a question I'm asking myself because IVRs have collapsed up near 30 in recent days, now back down to 20. Maybe that's a function of the holidays or the near-term path. But across the curve, Thomas, I'm not really seeing maybe the market's pricing in. If we're going to get any action in Venezuela, it's going to come after the holiday. You could see IVRs bumping up on the other side of that first trading week of the year. Maybe President Trump and co., they're not going to send service members into the fray during Christmas and New Year's. Volatility is lower over the next few sessions. You get out into January, it starts to pick back up again, and it's almost evidence the market's saying, if we're going to get action, it's going to occur in January or February, but you get through March, all of a sudden volatility starts to crest out once more. How sustainable is a rally? I'm still trading the sideways, Thomas. We had that spike in vol last week. I put on the 62, 64, 49, 47, short iron condor. I'd like for this to stay within the current confines of recent trading ranges. I don't think we're going to post through any of the highs that we had in October and November there. We'll see how much more this runs, though. But certainly sensitivity to the Southern Caribbean headlines here. The U.S. seized another tanker over the weekend, this time a Chinese vessel transporting Venezuelan oil. So new layer of risk here, Mr. Westwater. Where's the high, though, if the U.S. does go into Venezuela?
I mean, the high, so, you're fighting a fundamentally bearish economy for oil going into 2026, but at the same time, geopolitical risk premium is going to be baked into the price. If a major conflict occurs, that would be, land-based attacks. And, that's kind of the sign that it's pointing to. If you remember earlier this year when we started positioning air assets around Iran, that was the prelude to us bombing the nuclear facilities. And now in Puerto Rico, there is, last thing I saw from yesterday, up to 20 F-35 Lightning fighter jets in eastern Puerto Rico. There are, strato tankers, the refueling aircraft being moved there. There are command and control aircraft being moved there. So definitely a buildup of not only a carrier striker route, but, for what it looks like is, assets that are going to be able or be used to, start striking targets on land. Venezuela, about 900,000 to 1 million barrels per day of oil. That's about 1% of global supplies. So overall, it's 1%, but still, when there's these geopolitical events, it doesn't necessarily, the math doesn't line up perfectly to where oil prices rise to where a million barrels a day are taken off. It rises because there's more fear, there's more disruptions in shipping lanes, there's knock-on effects. It's also shows an administration more willing to take military action. So, the geopolitical risk premium, maybe it pushes us up into the low mid 60s. That's kind of where I would see it at. I wouldn't see it much above there. The way I'm trading this, I'm still neutral, directionally neutral pretty much as well. I have an iron condor with my shorts at 57 and 62.5. So, I have more room on the upside for this trade. So I'm pretty comfortable where it's at right now. However, I have to roll this position probably this week, and I might give myself a little bit more room on the upside, maybe 64, 65, just taking into account if Venezuela does pop off, then you just got some more room to work with there. But like you said, it's the holidays. We're probably not going to see anything in the next couple weeks. It would probably be after that. And, if these guys start getting a bunch of lobster and ice cream for lunch and dinner over there, then that's when you got to start being concerned.
It's interesting because I had asked ChatGPT to review a whole bunch of research that was done to oil markets based on supply shocks and to give me some modeling on what would happen if there was a 1, 2, 3% shift in global supply overnight and how that would work out given what's happened historically. And they said basically for every 1% of energy that's taken offline in oil, you get a 7 to 10% increase in prices almost immediately in the oil market because demand is so inelastic in the short run. Consumers aren't going to change what they're doing, heating their home, driving to work, yada, 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 if oil prices jump $1 a barrel or $10 a barrel overnight. And it takes time for that price jump to make its way into the actual economy where the price at pumps goes up. So, thinking about the lows here, we'll just call it 55 to make this simple math. A 10%, a 7.5 to 10% move off the lows, because as you mentioned, Venezuela is a 1% contributor to global supply. A 7.5 to 10% move off the lows gets you into $61 at the high end.
Yeah, and also consider, a lot of Venezuelan oil is already offline. They're in all likelihood they're likely not at 1 million barrels per day right now, right? There's U.S. naval ships off their coast. They're interdicting ships. So the real number is probably much lower than that. But yeah, move up into the low 60s, definitely a possibility. I think I'm positioned for that trade right now if it were to happen. So, I'm not really making any adjustments here besides for, like I said, maybe rolling those prices up $1, maybe $2, and just giving myself more duration. So
when Venezuela was at its peak of about 3.7 million barrels per day, that was 30 years ago, like mid to late 90s, Thomas. So let's just say Maduro decides to step away, not a single shot is fired, and the Venezuelan oil industry is liberalized and it's opened up to the rest of the world. How much of that supply is meaningfully coming onto the markets tomorrow? Everyone likes to say Venezuela has 300 billion barrels underground, which they do.
Yeah.
But how much of that is realistically coming onto global oil markets this year, next year, over the next 10 years?
It would take a while.
Not as much as people think.
It would take a while. It's not exactly, you gotta develop rigs, infrastructure, the ports, they're not designed to handle out 3 times as much oil as we're pumping now. You can't just do that. So, it takes some time, but, I don't know if it's a conspiracy, but saying the U.S., invades countries for their oil, of course, that's a geopolitical concern. It's one part of the factor you take into account, but yeah, they're sitting on the largest oil reserves in the world, I think.
Yeah, they are. They are. Natural gas here continues to suck wind, down another 2.7%. Thomas, I keep looking for some reasonable holiday forecasts, but this weather that has given us a heat dome over the state of Texas looks like it will be continuing as we make our way into that first week of January now. So natural gas finding no reprieve whatsoever. We'll make our way over to the currency markets here to round things out, where US dollar is still struggling. Thomas, on Friday, we officially went on to Yentervention watch here on Futures Power Hour because Japanese officials were delightfully telling us how unhappy they were with the market's reaction to the BOJ's 25 basis point rate hike. And what a better time of the year to move currency markets when liquidity has died down and most traders are worried about getting sleep so Santa can come and drop off the presents. Okay. Yeah, we're on your intervention watch. The jawboning is obviously not going to do a lot. The market needs to see some real chips put on the table. So why not do something in this low volatility environment that keeps us protected if I'm stepping away or even not stepping away in these markets? I'm thinking a 66, 67 call spread here, because if you do get a bump in vol because of an intervention, you probably can get a 1-2 punch of a nice little bounce. At 18 DTE, it's only $43 with a max potential of near 1,200. It's an unlikely trade, 6% probability of profit. But if there is an intervention, it probably get a bounce of 1, 2, maybe 3%. Euro yen closed on Friday at an all-time high. Dollar yen is getting pretty close back to its yearly highs. I think it's worthwhile to trade around and have something like that. Just why not?
Yeah, and the more you see these big moves like yesterday, you know, the BOJ is a lot more comfortable if there's a very steady movement in the currency market, even if it's to the downside. But if you start getting more volatility, it increases their appetite to do things like sell their dollars to buy yen, which is directly intervening. Like you said, the jawboning isn't working. That's what they do first. You know, they say things to kind of ward off this kind of behavior. But if you keep getting volatile moves, especially to the downside, then the intervention risk goes higher. And, you know, if you're positioned in the trade and you can catch that, you know, it's overnight a very, very profitable potential winner. So, yeah, I'm definitely, I think I have to get positioned for a possible intervention. They've done it before, so it's not unprecedented. It wouldn't be like, oh, this is crazy. The BOJ Japan is, you know, intervening in the currency market. It's happened before. There's no reason to think it can't happen again.
No reason to think it can't happen again, which, you know, if you get an intervention, and Trump's a guy of the 1980s. He talked a lot about Japan and foreign exchange policy in interviews throughout the 1980s and early 1990s. So a Japanese intervention during the holidays, I'm curious to see how that would be received and what kind of reaction that gives us in thin liquidity. Hey, you know what? The yen intervention trade is working out so far. I think we're up a cool $12 since getting those 66, 67 calls. Listen, if they expire worthless, who cares? It's not the point of the trade. It's really more about just making sure that we have something in our pocket if something were to occur during these thinner periods, and Japan tends to do those kind of things. Elsewhere, though, I point out that the Canadian dollar, 43.7 IVR, that is starting to creep up and warrants more of a discussion. It's a discussion I'm going to get with Ilya later, or get to with Ilya later on overtime later today. One of the only 2 overtimes of the session, because we need to wrap this up. What's next on the calendar? Tomorrow is a relatively busy day, globally speaking, considering it is a holiday shortened week and there's not much data due out overall, particularly if you're trading in the British pound, if you're in the Canadian dollar. Talk about that high IVR. They have a GDP report due out tomorrow morning. Tomorrow we see durable goods in the US, BOJ minutes. It's an interesting session, particularly for the FX inclined. Either way, though, Thomas, we're done and dusted. It's one of our 2 futures power hour this week. We'll be back tomorrow for the final one prior to the holiday. So hopefully everyone's had a good day trading so far, particularly if you've been in gold and silver, because it's certainly making my day shine bright, Mr. Westwater. You got to get back on board, buddy.
Yep.
And that trend's hopefully going to continue into next year. So we're going to take a quick break. We'll be back in a few minutes' time. Dr. Jim Schultz up next with From Theory to Practice, perhaps. You're watching Tasty Live.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do. Welcome to the holiday edition of what it is that we are trying to do. It is Christmas week. I am only with you all today and then tomorrow, and then we all get set off into the sunset or maybe out to pasture. Or maybe left alone in the forest. I'm not exactly sure which of the three it is, but man, we are here. We made it to Christmas week. I hope you guys are doing well out there, and thank you guys, man. Thank you guys for being a part of what we do every single day, because it is only because of you all that we can do what we do, so thank you guys so much. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program. Man, you can celebrate if you are a metals bull. You can commiserate if you are a metals bear for the 67th day in a row. So Josh, go ahead and bring us into the market. And of course, if you have a question for me, drop it in the chat box. I'll try to get to as many as I can here in the next little bit. So okay, let's take a wee little look at what's going on in the overall market. I mean, once again, guys, the metals are stealing the show, just like my man Philip Rivers is about to steal this show tonight. But I digress. Silver up 98 cents. Gold up 81. The Hunt brothers celebrating. The Shifties celebrating. Yeah, the market's up a little bit, but man, nothing compared to the metals run. This is historic, man. Like, this is historic. Like, they're going to write about this guy in the history books. And by they, of course, I mean all the robots in the future who will be the gatekeepers of all history for decades and millennia to come. But even they're impressed by this. Even they're probably like, man, that's really something. This metals movement. So E-mini S&P is up 44 on the day. You got the risk-free instrument, also known as the NASDAQ futures, extremely high risk product, up 130. You got the boomers up 250, and you got the Russell 2000 futures index up 34 on the day, leading the pack. In terms of the equity indexes, it's up about 1.5%, almost 1.5%, whereas the other major indexes, S&P 500, NASDAQ, boomers, i.e. the Dow Jones, not even up 1%. So they're the laggards of the bunch. You got bonds down a little bit. You got notes down a little bit. You got oil up $1.50. You've got UB40 down a little bit. And then again, gold ripping to new all-time highs, right? Silver ripping to new all-time highs. I mean, I thought for sure it was going to hit 70 last night. I mean, I was watching it, and I was like, this thing's hitting 70. Like, I'm going to wake up tomorrow morning, and it's going to be 70, maybe 71, maybe 77. But alas, it is not quite at 70 just yet. But it should only be another couple more hours, and we'll get there. You got the British pound up. You got the euro up. And then, of course, on a day like today, you've got volatility is most likely going to be getting beaten up, I would imagine. Volatility futures down 50 cents on the day. And then spot volatility, the old VIX, man, this guy's got to be getting just smashed to pieces. Yeah, look at the VIX down to 1426. Guys, this is not good. This is not good at all. So apparently, is today the Santa Claus rally? Like, this isn't even the Santa Claus rally, though, is it? This is the warm-up set to the Santa Claus rally. Like, I don't even think we've had our pre-workout yet. Like, I don't even think the pre-workout comes until, like, Wednesday. right? And then obviously you take it Wednesday, it kind of sets in by Thursday, Friday, you're ready to go. But from a Santa Claus rally standpoint, this doesn't even count, right? This is all preliminary stuff. This is the prereq to get into the Santa Claus rally. Normally, it's the day after Christmas up until New Year's. And so that's going to be, let's think, Christmas is on Thursday. That's going to be Friday. I think Friday is a full market day, is it not? I know that we're dark on the network, but I think Friday is a full market day like normal. So you've got Friday, and then you're going to have Monday, Tuesday, Wednesday of next week. And so 4 days between Christmas and New Year's, obviously excluding the weekend. That is the Santa Claus rally, if I'm not mistaken. Somebody please correct me in the chat, if for no other reason than to pump the algo. Like, correct me. All of you guys correct me. Like, even if you're wrong, it doesn't matter. The algo loves it, and I love it too. And so Josh is even telling me I'm correct. And so there you go. Yeah, it's December 26th to New Year's Eve. And so yeah, this isn't anything. This is like not even anything. And Josh says he hates admitting that, but hey, I mean, it happens often, man. Like, it happens often. And so, all right, let's go ahead. Let's get in here. And man, I see you guys in the chat though. Man, look at you guys. Man, I appreciate you guys. Theta Trader's here. Flower Power is here. Stephen Bivens here. Sam L. Big Deal Donuts. Margin Walker. Man, I appreciate you guys so very much. I'm going to get to as many of you guys as I can here in just a couple of seconds. Let's go ahead, though. So we do have a holiday week, right? We've got a holiday week this weekend and also next week. And again, little housekeeping. I'm going to be out. So after New Year's, I'm going to be gone that whole week, I think, after New Year's. I have to check with the captain of the ship, which sadly is not myself. I have to check with the captain of the ship to make sure I've got the schedule correct. But I'm pretty confident that we're going to the Carolinas that week. So I'll be gone. That's going to be what, January 4th through the 9th or whatever. And so I'll be gone that week. But this week we have a holiday week. Next week we have a holiday week. So there's going to be lots of days off, lots of market closures. And it's like, all right, I think this is the time. And I alluded to this a couple of days ago. I think this is the time where, if you have some things, some loose ends kind of dangling out in your portfolio to where you're kind of like, all right, I've got some undefined risk here. I've got some economically significant profits over there. It's like maybe you start to tidy some things up going into the new year, going into 2026, so that you can just freshen up the book, even if it's just a little bit. Like, take some risk off, kind of, book some winners that maybe aren't at your profit target just yet, but they're close enough to where it makes sense to go ahead and close that guy now and not keep that risk up. So let's do that today. I think so. We've got three things that have drawn my attention. I think that's right. Yeah, we have three things that have drawn my attention. We have MES, we have MNQ, and we have GLD. And so MES is an undefined risk strategy. This is going to be a ratio spread, just a standard Betty Crocker 1x2. Like, this is basic stuff, man. It's flour, it's sugar, it's butter, it's chocolate chips. You put it in the oven, you're done. You're done and dusted in 13 minutes. Like, don't even worry about it. We're not doing coffee grounds in there. We're not doing like cayenne pepper. So everybody's like, ooh, what is that in there? Like, I don't really like that. Or maybe I love it. I'm not exactly sure. No, this is basic stuff. We're not reinventing the wheel here. So MES 1x2 ratio, it's looking pretty good. Like, we're up about 67 points on the trade. Now, remember, in futures options, you have to apply the multiplier to the points. The quotes are always in points. They're not in dollars and cents like they are with equity options. And so every futures product has a different multiplier. MES is $5. MNQ is $2. And so you have to apply the MCL is just $1 per point, or $1 per penny, I should say. And so the MCL options are nice because they look a lot and feel a lot like a typical equity option would. But you still have to kind of get in the same frame of mind in terms of applying multipliers and making sure that you're looking at the right numbers and you're understanding what the numbers mean that you are looking at. It's not dollars, it's not cents, it's points, and then you convert that to dollars and cents and what have you. So when I look at MES here, you can see the trade price is, 107.75. Let me grab a different color here. Let's grab we'll grab the Glacier Freeze just because we can. A little 107.75. That's 107.75. That's 107.75 of a point. It's currently marking for just under 41 points. And now it's marking for almost exactly 41 points. So that difference is going to give you this P&L open right over here. Now, the nice thing about this specific position is I haven't made any adjustments. I haven't done anything to the trade, so the P&L open will be accurate in terms of it showing me where I'm at on the position. Now, because I'm grouping by the order chains, and I've got my, my grouping by the Allison chains. I'm sorry, I misspoke there. I think the P&L open is still going to track to what it should track, but I know like in the past, if you group it by just straight up symbol, the P&L open does not do a good job of reconciling trades for all the adjustments and management techniques you may have applied to that trade. But I think if you do group by the Allison chains, and again, you can choose. It could be Rooster, it could be Rain When I Die, it could be Wood. It's going to 100% be your choice. You group it by any one of those or any one of your personal favorites, then you're going to be good. The P&L open is going to it's going to track accurately. Well, if you look at this, I mean that we've picked up about 67 points on the trade. And so 67 times 5 is about 335. And if you look at the P&L open, I'm no Jacob Perlman, but that looks like about 335. So it all checks out. Like everything is looking good. And so that's a nice trade. I mean, if we didn't have the holidays, I'd probably stay in this trade for just a little bit longer. Maybe try to get closer to like 70% of the credit collected. I don't do 50% of max profit. Or actually, let me start again. I don't take 50% of the credit here because the maximum profit on the strategy is not the credit collected because this is a ratio spread. So remember, the maximum profit is if you actually pin the short strike at expiration. Then you collect all the credit you collected and you get the width of the vertical spread that's baked into the middle. And so this is not like a short vertical spread. This is not like a short strangle where the credit you sell it for an entry does indeed, show you your maximum profit on the trade. That's not the case at all with the ratio spread. And so because of that difference, I'm typically going for a little bit more than just 50% of the credit collected because that's not my maximum profit potential. I'll typically be around 65 to 70%. Now, right now, I think I'm around 60, 65%. So I'm pretty close to where I would be anyway. And the holidays and the days off and what have you in the near term future kind of motivate me to just go ahead and close this guy down and be done with it. But this is the ratio spread. There's a couple of victory laps around that ratio spread, which nobody takes a victory lap on a very, very modest gain better than I do. And so there you go. So MES, let's go ahead and close that guy down and then we can be done with this. So let's do this guy first. We'll close down. Let's see here. Close down the ratio spread, and then we will turn our attention. There you go. It got filled at 41.25. All right, beautiful. So that guy is gone. Okay, so now let's turn our attention to MNQ. So this one, very, very similar situation from the standpoint of we have a nice profit on our hands. Right here, it's $2 per point for the multiplier. So we've actually made a little bit more than we made on the MES trade. And, right now we're getting very close to 21 days to go. We're not quite there yet. It's only 25. So if it wasn't for the holidays, I would stay in this trade. I would not I wouldn't take this guy off today. But right now it's so close to our, oh wait, hold on. It's actually past our profit objective. Man, when I looked at this at first glance, because again, guys, I'm no Julius Pina, so you should expect mistakes. You should expect inaccuracies on a very regular basis. Case in point, what's happening right now. So when I looked at this at first glance, let me grab my magenta. When I looked at that relationship right there, that looked like we were just short of 50% of max profit. That was my first thought. That was what I was like, yeah, we're not even there yet, but it is economically significant. So let's take it off. Let's go down the whole kit and caboodle of, economic significance, United 50%. We're going to go down that whole pathway forward through the forest. But look at it now. If you look more closely and you remember how to do very, very, very basic math, you will see that we are actually beyond 50% of max profit because we sold this put for 380 points. It's currently marking for 178. Again, I'm no Julius Spina, but that looks like it's just beyond 50% of max profit. 50% of max profit would be a marking of 190 points. We are marking for 178. So we have made a little bit more than 50% of max profit. So I will take it. And the victory lap, it actually probably would have lasted longer if we weren't at 50% of max profit, ironically enough, because I would have had more to say about, managing winners early and holidays and all the stuff I've already said before. But if you've seen the show for any length of time, I like to belabor a point 2, 3, maybe 7 times before we move on. So MNQ, we're there. I mean, that's it, man. Let's do it. Let's close out of MNQ. We'll close this guy down. The mid price is 178.75. I'll do like 179.50. We'll give a little something to Vinny. I mean, Tony's not getting his Christmas presents, right? So Vinny Batista's got to buy his own. Like, he's got to pay his own way here. So we got to help him out. All right, so we got MNQ over and done with. And then, all right, so GLD, I mean, it's can't stop, won't stop, man. I mean, look at gold up 80, silver up 99 cents, man. This is really, man, it's crazy stuff. I mean, what do you guys think about this metals run? So right now, right, given where we are right now, I want to know, and the algo really wants to know, where do you guys think we go next for both silver and gold? Where is the next 5% coming from both of these? So for silver, where's the next $3 and $3 or $3.50? Where is that coming from? Where is the next 200 points in gold? 220 points. Like, are we going to go to 4,700? You know, silver, are we going to 72? I guess it would be. I mean, that is bonkers crazy, man. Like, is it just me, or is this like, man, like, is this crypto now? Like, silver is like, are we trading Solana? I thought we were trading like silver bullion. I don't even know if you have silver bullion. You have gold bullion, right? You have bullion cubes in the grocery store aisle when you need to like salten up your soups and your jambalayas and stuff. But do you have silver bullion? I actually don't know. I would like to know that too. Put that in the chat as well. And man, let's smother this algorithm today. Like, let's absolutely just blast it. And so, but silver, let me know, where are the next 5% coming? Because I need to know, because I've been dead wrong on this thing for about 9.5 months straight. And so I need you guys to help me out here. So, all right, let's see here. Let's go to gold though. This one is actually easy. This one, I did know that we were over 50% of max profit, so I don't even need to belabor this point too much. It's a short put spread, you know, nothing super fancy. You know, when you trade vertical spreads, it's essentially a directional play. Like, yes, when you sell vertical spreads, you do have a little bit of theta. You do have higher probability. You do have time working for you. But yeah, generally speaking, it's still going to be a directional play. And so that was certainly the case here with GLD. And so gold went higher. You know, the bullion rallied. And so, of course, we were able to kind of take this guy off for a nice profit. So let's go ahead and do that now. We'll take off gold here. Yeah, we'll do like $1.76. That should be fine. All right, perfect. So we got Phil there, $1.76. That is GLD. And we are over and done with that guy. Okay, so now, we did MES, we did MNQ, we did GLD, so the victory laps are complete. So the victory lap portion of the show is complete. Now what I want to do, let's go to SLV, because I want to roll this guy out now, because 21 days is coming up on Friday. Again, the studio's dark on Friday. I could wait until Monday and do it then if I wanted to, but I'm like, let's just go ahead and do it now, just to kind of be a bit preemptive on the roll. And I think because the implied volatility of rank of silver is so high, I mean, look at that. The IV rank is 85. I mean, that's pretty high. I mean, that tells you right now that the implied volatility of silver is 85% higher. It's in the 85th percentile of the distribution of all implied volatilities over the last 12 months. So generally speaking, it's very close to its highest point over the last year. And so if you want to sell premium in SLV for a new position, then this is the time to do it. Also, if you have a current position, rolling into the back month is going to be most favorable when volatility is high as well. And so because volatility is so high right now, this is a good time to roll it. Now, you know, could we get bailed out with, you know, silver coming down in the next couple of days and maybe the IV rank also collapsing, and then we're in a better spot to sit tight? Yes, we could. But again, because we've got holiday time away, we've got, you know, dark days on the studio, I'm going to be gone in that second week of January. I'm kind of thinking, let's just go ahead and push this guy out to what, February? Yeah, we'll push out to February. We'll kind of reset the deck a little bit and bring in some more credit, maybe even widen out the strikes, maybe recenter this guy a little bit. And then we can breathe easy a little bit. You know, it's not going to be super long. It's not going to be super crazy, because SLV should be 75 to 78 probably by Friday. And so let's go ahead and buy ourselves a little bit of time here for the impending SLV rally. Or actually, this would be what, the 87th rally in a row for SLV just over the last 4 months. So let's go into SLV. Let's go ahead and let's roll this guy out. We'll roll it out to February. Yeah, look, so I can roll this guy out if I wanted to. I can keep the same strikes. I can keep the exact same strikes. And I can pick up $2.15. That's almost exactly what I collected on entry for the strangle to begin with. So essentially, I can double my credits collected. Like, I can go ahead and take my current pile of credits and I can expand that pile of credits by 100%. Like, man, that's really nice when you start thinking about, different things I could do later on with break-even points, different things I could do later on with managing it in terms of, what type of profit potential I might be looking for. Like now I have a bigger base to work from, and you generally speaking have more flexibility with that bigger base. And so this is one of the beneficial things to rolling a little bit preemptively, when you're not rolling when you've been tested or it's blown through your strikes. Then by definition, you get less favorable pricing. Like by definition, you're not in as good of a spot to go ahead and roll those strikes out and, pick up more premium or extend the duration of the trade. Like you can do all those things. You may do all those things all the time, waiting until the strike is tested, waiting until the break-even point is tested, and what have you. But if you do find yourself in a spot where, it's holidays or maybe you're on personal vacation, or you're just trying a different strategic, kind of set of strategies where you're being more proactive with your rolls. I know Tony likes to do this. Nick likes to do this. And so you can certainly do this and you get more favorable pricing on the rolls by doing this. It's been said before. I don't know who said it, but it's a catchy little jingle. For every gimme, there's a gotcha. So where is the gotcha with this gimme? Well, if you're rolling all the time and constantly neutralizing your directional bias or bringing in more credit, you are more subject to whipsaws. You are more subject to just the natural movement of the market, where you might find yourself thinking, man, if I had done nothing, I'd actually be in the best possible spot. That's happened to me a number of times. And so it's part of the reason why I'm a bit more patient with my own personal adjustments. But right now, it's more so of a holiday play. It's more so of a vacation play where I know that I'm not going to have as much time to adjust this guy later on. So I kind of want to do it now before we forget. And silver's 83 or whatever, SLV that is, of course. And then it's too far gone. So let's go ahead. I think what I'm going to do is I'm going to try to recenter this a little bit. So right now I could leave the strikes the same and I think that would be fine, but we have so much room on the downside. I'm thinking I'm not going to do anything crazy, but what if I bring the 50 up to like a 53, right? You can see that increases the credit that I collect. So now I'm collecting even more. I was collecting 210 or 215. Now I'm up to 266. So I'm going to use that additional premium that I just mustered on the downside. I'm going to use it to widen things out just a titch on the upside. So instead of a 63 strike, I'm going to go to I could go to 64. Yeah, I'll go to 65. Go to 64 and a half. I think that's what we're going to do. Let's move the call strike up from 63 to 64 and a half, just to give us a little bit more breathing room on the upside, just in case metals continue this historic run. Because, it doesn't look like it's going to stop, right? Which, of course, that's the time when it obviously stops. But it doesn't look like it's going to slow down anytime soon. And so, but let's see. Let's go 211. On the strangle roll in SLV. And then that'll be that. Try 208. All right, so we got 209. There you go. We got improved a little bit. All right, so there you go. So we adjusted SLV. We kicked it out to February. We recentered the strikes, and now we sit tight. And we hope, and we keep our fingers crossed. And man, that is gonna be that. Okay. Where are we at? Man, I see you guys in the chat. I appreciate you guys. Let me go ahead. Let me surprise and delight somebody in the middle. Man, where are you guys at? I see you guys. E-Media, 9843 in the middle says, Dr. J, are you a believer in the January effect too? You have to remind me, is that bullish or bearish? I can't remember. It's bullish, I think, right? Like most of the quote unquote effects are usually bullish. There aren't too many effects that are bearish. I can't remember, back in the day, like I had to read, there's a lot of research that's been done on this, like academic research, professors doing this, researchers doing this, and like January effects, Santa Claus effects, all those things. And Josh says it's based on how January goes, the year goes, I believe. I'm pretty sure that's wrong. It's either it's either a bullishness or bearishness. I can't remember which one it is though. So somebody help me out there in the chat. Is it bullish or is it bearish? Let me know. I think it's bullish. And I don't really put a ton of stock in too many of the effects. Except for obviously the Santa Claus rally. I mean, this is obvious. This is basic stuff. Obviously, like September, October being super bumpy, highly volatile, right? I mean, these are obvious things. These are basic things. I mean, I'm pretty sure they didn't happen the last couple of years, but generally speaking, right, these are very, very obvious and very, very straightforward. But the January effect, I don't really, because there's tax loss harvesting and all that stuff. And so I don't put a ton of stock in it. And I've heard of it, but as evidenced by my fumbling through the answer, I can't even remember if it's bullish or it's bearish. But thank you there, eMedia. I appreciate you very much. Let's see. Oh, here we go. I'm gonna surprise and delight somebody. A second person at the very end that was probably convinced that they were not going to be surprised nor delighted. And here we go. Info Nathan. What's going on there, Info Nathan? IVR on SPY is 1%. Is this the best time to buy naked calls? What would be an even better strategy? I have an IRA account and can't sell calls. Okay. So a couple of things. So number one, if you have an IRA at Tasty Trade, you actually can sell calls. So you can. Now you're fully margined on them, so I'm not saying it's a great strategy, but you do have that option. It's really no different than like a cash secured put. And so just keep that in mind. But when it comes to IVR being 1%, that's very, very low. Like that's extremely low. So if you're going to do something that is a lot more directional in nature, this would kind of be the time to do it, right? Like whether you're buying the stock, whether you're buying vertical spreads, whether you're buying calls or even buying puts, I mean, whatever. I mean, this would be the time to kind of take some shots directionally. If you were going to buy a call, like if you wanted to play, the market to the upside, SPY, yeah, I mean, the IV rank is 9. So you see 1%. I see 9, still very low, but maybe not as low as 1. If I was going to take a directional shot with a long call or a long put for that matter, this would be the environment to do it. Yes. And so are there some other things we might want to consider when it comes to structuring that long call and taking advantage of, volatility being low? I think so. So number one, you might want to consider choosing something where the decay is not going to be as extreme. Because remember, when you buy an option, what is the number one thing that is working against you? It's time. The number one thing that's working against you is the passage of time that's suppressing the extrinsic value that is working against your objective to lift the price of the option. Right? I mean, this is what we do as premium sellers. We take advantage of this. Like we want to put ourselves in a position to benefit from the passage of time, suppression of extrinsic value, and so on and so forth. But when you buy an option, it's obviously going to be the opposite of that. Like this is now going to be working against you. And so how can you mitigate that? Are there some things you could do to maybe slow that down? I think there's 2 things. So number one, I would probably consider a deeper in the money option. So as opposed to buying something at the money or opposed to buying something out of the money, buying something that's in the money, 70 or 80 delta at least, if not even more, that's not only going to replicate, closer to a one for one move with the stock. I mean, if you have a 70 delta, you get 70% of the move. If you have an 80 delta, you get 80% of the move and so on. But it's also going to give you a situation where, the extrinsic value dissipation on a deep in the money option is slower than at the money options or out of the money options, ceteris paribus, all other things being equal. But then the second thing I would do that could also work to slow that down is I would choose something that's further out in time. So keep in mind, right? Like when we sell premium, where do we typically sell premium? We typically sell premium around 45 days to go, right? Why do we do that? Because that's where the decay begins to pick up steam in our favor. Okay, well, if you're flipping that around, you don't want to buy an option around 45 days to go. And you certainly don't want to buy one with only, 10 or 20 or 30 days to go, in my opinion. And if this is a longer term play, you could do all this in a zero DT framework too, but that would be kind of a different discussion. But I probably don't want to buy something where the decay is going to be even more unfavorable and working against me harder day by day. So buying something that's maybe 60 days or 90 days or 120 days might make a lot more sense as a way to slow down the extrinsic value dissipation on the option. So those are a couple of things to think about. Hopefully that helps a little bit there, Info Nathan. And I appreciate you, my friend. So let's go to the beginning. Where are you guys at the very, very beginning? Let's see. Where's my comment at? That's my demarcation. My line in the sand. There we go. Flower Power in the house. What's going on there, Flower Power? Margie Walker in the house. Theta Trader in the house. What's going on, Theta Trader? The cattle are lowing. The baby wicks, but little Lord Jesus, no crying he makes. The baby wicks, crying he makes. The rhyming needs a little bit of work. It's right there in that B- lane, but that's what we expect, right? So now that I think about it, you're right on the money. That's the live cattle update. Oh yeah, you guys were talking about live cattle. I see that now. I see Bob King asking about some live cattle. It's been a minute since I've traded live cattle. I have to be honest. And by a minute, I mean I'm not sure I've ever traded live cattle, or even dead cattle for that matter. But Theta Trader says, Dr. Jim, I'm long XLE as a core portfolio investment. With the South American oil crisis, how can I apply kurtosis and heteroskedasticity to my trading vis-a-vis Drunken Miller 1820 analysis? Okay, I don't know what that is. I know what kurtosis is, and I know what heteroskedasticity is, but I don't know what Drunken Miller's 1820 analysis is. And I probably should. I mean, that's my own ignorance kind of, shining through bright as day here live on the show, only on the Tasty Network, by the way. So I don't know what that is. I can't comment on that specifically. But if you're looking to, okay, so let's make sure everybody understands what these terms mean. So kurtosis means, the tails of the distribution happen more often than a normal distribution would predict. So they essentially mean that there's a higher number of outlier moves. So there's a higher number of outlier moves on the upside, on the downside, and what have you. Heteroskedasticity is essentially just volatility changing. So there's nothing we can really do that's going to be out of the ordinary when it comes to trading or positioning ourselves to take advantage of heteroskedasticity. We do that every single day. And so that's not really going to be anything that's super special in terms of like, how do I, position myself to take advantage of this thing in a way that's different from what I'm already doing? So that's kind of already there. But now you've got a great term that you brought up to the forefront that a lot of people have probably just learned and heard for the very first time. So now you guys can impress your friends and your neighbors and your coworkers at your, coming up holiday parties this week. Say, hey man, have you ever traded heteroskedasticity before? Like, I scalp it every single day, and man, there's some opportunity there like you wouldn't believe. Man, that is an icebreaker like you could not imagine. Like, you've got 30, 40 minutes of conversation coming your way, no doubt. But how can you trade this based on XLE? Well, so when it comes to kurtosis, so it comes to a leptokurtic distribution. Personally, everybody thinks about a leptokurtic distribution and they focus almost exclusively on the fat tails. They focus almost exclusively on the outlier moves and the potential for outlier moves and what have you. And rightfully so, because I mean, that's, the fat tails, I mean, they mean something, obviously. I mean, right now we are actually living through potentially one of the craziest extreme right fat tail events in the metals in the history of the metals. Like, this could be the craziest move in silver. Like, this could actually be a bigger move than the Hunt brothers back in the late 70s and the early 80s. And the fact that they're doing it again in 2025 with a pizza establishment on the side, that makes it all the more impressive, in my opinion. But when it comes to a leptokurtic distribution, it's important to remember you have the fat tails, but there's actually a second piece to the leptokurtic distribution that I think is actually more helpful for us as premium sellers and for us who are trying to trade the fact that realized volatility is usually less than implied volatility on average. And it's a simple fact that, when you, in fact, here, let me grab my Final Jeopardy pen. That way we don't have to talk through this. So like if I look, oh man, look at all this black space. Man, look at this little blackboard we got here. This is amazing. Okay, so if I've got a distribution, and I've got a normal distribution that looks like this, right? Not perfectly drawn to scale, but you guys understand, right? So this is a normal distribution, right? And I'm not even going to label my axes right now. I know the econ professionals out there and the econ professors that are watching, you guys are, man, your blood is boiling right now. I understand that, but I'm not going to do it. This can be whatever you want it to be. This can be whatever you want it to be. I don't care. When you look at a normal distribution, this is what it looks like. But if you look at a leptokurtic distribution, which this is what you have with positive kurtosis, you have higher tails on both sides. So it looks like that. But you also have a higher peak in the middle. So it kind of looks like that. Right? So a leptokurtic distribution has two defining characteristics, not just one. Everybody focuses on the fat tails, and that's important. But there's a second defining characteristic that, in my opinion, is at least equally as valuable and equally as important, and it's that peaked distribution. So what that means is, yes, you have more outliers. Yes, you have a higher number of occurrences in the tails, but you also have more occurrences around the mean. you also have more of these very, very small moves. And so they're just kind of bouncing around, where the current price is of whatever that asset might be. So in your case, XLE. So what I would personally do is I would say, man, if there's a lepto curve distribution, maybe I shrink my size down a little bit, smaller than I might otherwise do, but I'm going to maybe trade a bit more actively in here, especially if the volatility is high and the IV rank is elevated, because I want to take advantage of all of these kind of non-events. And then, of course, I've got to be ready for the outlier move when it does make its way into one of those tails, if it ever does. But that's where the size on entry really comes into play. And then all the other adjustment protocols that we kind of have in place there. So hopefully that helps a little bit there, Theta Trader. But if nothing else, we all know a little bit more about kurtosis and, of course, heteroskedasticity. And so thank you, my friend. Edward Londa in the house. What's going on there, Edward Londa? Appreciate you, my friend. Big Deal Donuts, man. What's going on, my friend? Wolf, Dr. Jim, thanks for a great year. Last day before we begin to travel for the holidays. Merry Christmas to you and your family, man. Merry Christmas to you and yours as well. Happy holidays. And yes, thank you so much for being here and being a part of the show there, Wolf. I really appreciate you, my friend. I appreciate you very, very much. So safe travel. Stephen Bivens, happy holidays, my friend. To you too, my good man. I do appreciate you so very much. Flower Power, they have a new software acquisition, which people are betting on getting part of the massive Golden Dome spending. And DJT has mentioned the moon race again by 2028. The moon race again? So you're assuming we've been there before? I don't know, man. I'm pretty sure I'm on the other side of that guy. But anyway, that's what makes a market, right? That's what makes a market. And so there you go. Let's see. Margin Walker in the house. What's going on? Theta Trader. Those are nonsense statistic words I've heard you use, but look at XLE if you want. There you go. I appreciate you. They're not nonsense, by the way. I think we learned some things from kurtosis. Like, I think that lepto curve distribution can be a really, really valuable thing to understand in terms of thinking about selling premium, thinking about, just realized volatility and implied volatility, and of course, outlier moves and things like that too. But I think there's a lot of opportunity there when you kind of understand that distribution a bit more. And so let's see. Theta Trader said he was trolling me with that. It's funny. Maybe you were, but I still think we learned some things, right? I still think we learned a little bit. So that's what this is all about, right? Like, can we take the B- trolls, which was very B-, but can we take it and can we still learn? Like, can we still grow? Like, I think maybe we did there. Now, we didn't grow too much. Like, we grew ourselves around a B- level. But still, that's movement forward. Like, it's not great movement forward. It's not a lot of movement forward. It's about 82% movement forward, which is, it's better than nothing, I suppose. And so thank you there, my friend. Let's see. Flower Power says, Tasty ever going to bring dogs in the studio and on the show? I only see Tony's cat. Yeah, that's funny. I've seen that thing come across the laptop a couple of times, which is very, very funny when what is it? Snuggles? Is it Fluffy? Sparkles? It's one of those guys. Let's see. Oh, Flower Power says, what pet do you have? No, we have 3 cats too. I have 3 cats in there. I would prefer we had 0. Like, my perfect number is 0. The family's perfect number is somewhere around 3. And so we have 3. So there you go. Like, if you ever needed to understand family dynamics, successful marriages, and fill in the blank, there you go. My number is 3. My number is 0. Their number is 3. So we have 3. And so, Big Deal Donuts. Sam L's in the house. What's going on there, Sam L? Appreciate you. Sam L goes on to say, Santa rally looks strong, which means entry is perfect and exit is way too early. Fade the doc strategy never takes holidays. No, it does not. It absolutely does not. And what's funny? So this is very, very funny. So tonight, I was joking with Tony and Nick about the game tonight with the Colts and the Niners. With my Colts and the Niners and my guy Phillip Rivers. Like, I'm like, man, this is. You can take it to the bank, man. Like the Colts and the 5.5 points or whatever. I'm like, you can take it to the bank. So you know what I did? I texted the artist formerly known as Bam Nosnoff, and because he told me before. He's like, hey, anything you ever want, I'll take the other side of you from now until like we're dead and gone. He's like, you just text me, you let me know. So I've been doing it for years. And I think we ended up actually even in the end. But tonight I'm like, well, this is it. Like, this is a UST bill staring you right in the face. Right. And so I texted him. I'm like, hey man, I'll take my man Rivers and the Colts and the points. And he was like, nah, man, can't do it. He's like, I love the Colts. I'm like, what kind of bookmaker are you? Like, I'll take your bet, but you got to take the Niners? You got to lay the points on Monday night? Like, who is this guy? So anyway, I digress. But I don't really know why I brought that up. But talking about the cats and talking about the Santa rally. There you go, the fade doc strategy. That's what it was. Yes, so I'm all in on the Colts tonight. So you can do with that information what you will. I'm pretty sure the 49ers are going to win by at least 14. Let's see. Margin walk. Oh, HKM Beelamine. Speaking of metals, what is our position on iron? I say 3 times per week. Iron. Are you talking about the supplement? I don't. I think that's what you're talking about. I actually have too much iron, and so I am supposed to be donating blood like a couple times a year. It's been a minute since I've actually done that, but I probably should do that. Actually, now that I'm saying it out loud, I'm like, yeah, I should probably go ahead and do that. I actually have too much iron, and so I don't supplement with iron. If that's what you're asking, but I know a lot of people are very low on it. Like my wife, Autumn, has a supplement with it. Margin Walker, what's up, Dr. Jim? Let's celebrate the holidays by lighting some piles of cash on fire. Man, I'm trying, but I'm kind of in wind down mode. Like I'm not really in wind them up mode, and we don't have any. I think tomorrow morning is like, that Peruvian durable goods print, and that thing usually is good for a huge spike in volatility. So we probably should trade it, but I'm gonna pass right now because I haven't done my research. Like I haven't checked out the the Peruvian goods and services sector in a minute. So I'm gonna wait on that guy. But let's see. Flower Power says Scott Sheridan had to close his silver short a while back. Can't handle the vol. Man, there you go. Game over. Yeah, big boy Scotty S. Big boy Scotty S had to bail on the silver position. Yikes. Let's see. Samuel, algo check, doc check, market still confused. That's correct. And then there's immediate with the January effect. And I think immediate went on to say lower that it is bullish. And so, yes, but I like I said, I don't put a ton of stock in the all the effects thing, because I actually think like this, like the whole thing that's like 17 out of the last 20 whatever, it's just whatever, like all those kinds of things. I don't really put a ton of stock in those, just because I feel like it's pretty random. I really do. And so let's see here. Data trader, Dr. Jim, I'd like to correct you. You're correct now. Please make a note of it. Oh, thank you. I appreciate that. Sam L, this comment has no edge, no thesis, just pure algo farming. That's what I'm saying. Edward Lon, pumping the algo. Appreciate you. Away from the numbers, feeding the machine. Appreciate you. E-media, feeding the machine. Appreciate you. Scramble everything. What's going on there, my friend? I appreciate you so much. Thanks for being here. Sam L, Doc Jim still undefeated as a highlight of the short weekend. I appreciate you so much. I really, really do. I see Finn West is here. John Covington is here. Let's see. Where are we at? Let me try to find. Does anybody? Let me see here. I see Sam L's in the house, man. I appreciate you guys so much. Oh, here we go. Scramble everything says due to the holidays, if we get coal, should we coal roll into shorting Rivian? Isn't Rivian like the Amazon car thing? Yeah, it's Rivian Automotive. Is it a Chinese thing? I can't remember. Or are those two things different? I don't think so. But yeah, Rivian 22. Weren't they much higher than that? Hang on a second. Let me look at Rivian. Where's Rivian at? Let me do like a daily deal. It's Rivian's doing. Wow, look at Rivian. Look at that. Okay, so Rivian's doing pretty well for itself. All right, so obviously we would get short Rivian, right? I mean, you got to play the short-term contrarian, right? You got to take the other side of this Rivian move, I think. And so I would probably, we got to do something in here, right? Yeah, especially if you're going to get coal in the old stocking. I'm going to do a little short call spread in Rivian. Or maybe even do like, you could just sell. I mean, can you sell a naked call in here? Let's see here. You go to February with 60 days to go. Yeah, you could sell like a 25 delta call maybe. I mean, the buying power effect is only $600. Right now, obviously, you have tremendous upside risk if Rivian doubles or triples or what have you. You're gonna be like, I should not have listened to that random guy on the internet, which is just good life wisdom, by the way. You should maintain that feeling every single day. And so again, because I'm saying short calls on Rivian, I'd be loading up on some bullish plays right here and right now. But I got to go. Wow, I'm out of time. That's crazy. Okay, got to go. Got to run. I appreciate you guys. So much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
tastytrade's Money Match event, unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Hello and how are you? Welcome to the last few days of the year. We have a fairly green day on our hands, especially with my favorite market, precious metals. And those of you who read Slope, I shared this anecdote already, but I'll just share it again. Yesterday, Sunday morning, I strolled into the Menlo Park coffee bar and saw, as I always do, a gentleman sitting at the table where he always sits that day and that time, like clockwork, and he owns a local precious metals shop. Been around for decades. I mean, as long as I can remember. I think he was born with the Silicon Valley, and we're friends and done a lot of business with him. And I usually don't bother him, but I came up to him and just to congratulate him on what must have been a wonderful year for him and for his clients, and he appreciated that. But he said something almost identical to what another gentleman said, who also has a different gold shop a few weeks earlier, which is like, well, what's going to happen now? And it was, as pleased as he was that his business was thriving, he sort of recognizes that something's up, that maybe nobody fully comprehends. Like, what does this mean? That gold and silver have gone up triple digits in such a short amount of time, and platinum and palladium are blasting higher, and with a dollar that's not particularly weak either. If you look at USD/JPY, the dollar's doing fine. It's not like the dollar's in a free fall, and so it is worth noting, at least, that something's afoot, and the market knows it. But maybe the people trading the market, and I include myself with this, don't really know what it means. But that's where charts come in, because I saw the bull market, particularly by way of ratio charts, coming in precious metals last year with silver and gold, and then this January with palladium. And they've done way better than I ever expected. They've exceeded my fondest hopes, and at this point, I've given up trying to decide how far they're going to go, and we're seeing that again today. So, having said all that, let's look at a few charts together, including precious, and we're going to start off as we always do with the spider. It's a quiet day, obviously. It's going to be a quiet rest of the year, probably. There's nothing to drive this market particularly. As we sit here now, the equity indexes are all green. The spiders are up about 2/3%, and they're undoing that brief amount of damage we had there. Not at lifetime highs. They'd like to make them, but so far just kind of slowly lifting higher for no particular reason. Particularly strong is the small caps. IWM also not at lifetime highs. We'll just throw down a horizontal ray like so, just to kind of put a stick in the ground, just in case it does exceed that. But at this point, we had fallen nicely for a while, and we're undoing that now. on very, very light volume. The cubes is kind of in between those two. Well, actually, no, forgive me, the cubes are weaker than either of those two, up 0.45%. Trading basically opened at its high point of the day and have been slowly sinking since then. Still up, but only about a third as much as the small caps. And in this instance, not only did they not make new highs, but they haven't even mustered their way past this price gap. And I'm thinking they probably won't for the rest of this year. So we have been climbing on Thursday and Friday and today. And we've largely undone this dip that we had. But everything's just kind of adrift right now. This will all change a month from now when we're in the heat of earnings season. We've got scads of economic reports, but the holiday season is just that. It's quiet. The semiconductor sector, SMH, is stronger than the cubes in general. 1.32% positive on this. They had made a lifetime high here, but that was a failed breakout. It fell hard from there, and we're just kind of lingering beneath what had been the lifetime high. I have like almost no ETF positions at all, except for TLT and XLP. XLP is the consumer staples. And this has the benefit of being down today, in spite of all the green. So we're down 0.5% on this. And as you can see, it's performing nicely. And if you're shorted, not particularly sure why that sector is weak, maybe because the sexier stuff is so hot right now, but it has been weakening away from this enormous distribution zone, like so, which goes back literally to last year. So far, so good on that. I also mentioned on Friday, because of the 5 portfolios that I do, 3 of them are just all cash now. I'm just done for the year, satisfied, just keep it simple. And one of them, my last position was Rivian. And I mentioned, as good as it's been, dumping it all because of the price gap. And that doesn't seem to be too regrettable, a decision so far. There's the price gap itself, and we got quite close to it Friday and today. But as you can see, we're down almost 2% on the day, and there's opportunity, I think, there for some weakness. And if we do that, might be a good time to get back in. But as it is now, like I said, all cash for 3 of 5 portfolios, and would love to see that down to 18, something like that. Okay, a couple of interest ETFs, interest-sensitive ETFs. One that I had mentioned for months, but has kind of captured my attention again, is the corporate bonds, LQD. It's very heavily traded, and it has got roughly the same reversal pattern that bonds do, which isn't too surprising. It's also got a nice clean price gap right there. I've got good enough a position in TLT by way of a short and by way of puts to not want to kind of duplicate my efforts, so I don't have anything going in this, but I imagine they'll tend to move in the same direction. The one I am in, TLT, is down modestly, 0.29%. It's our third red bar, third red daily bar, and a pretty, well, I would say absolutely this line right here would be an important stop. And you could even go so far as to set a tighter stop right along there, which is essentially Thursday's low, which is a different price gap. So this would be quite a tight stop, and this would be a bit more liberal, permissive of a stop. And in doing so, with bond funds falling and interest rates rising, XHB, the home builders, continues to sink, not dramatically, but to defy this all-green market is pretty heroic. And we've got, what is this, like 7 red bars in a row, and have been sinking away nicely from that level. Okay, so let's go to really the only place where there's any real exciting activity today, which is precious. Last week, I talked about how gold, and sort of anthropomorphizing this thing here, but wanted to make a new high, was trying to make a new high, didn't quite do it yet, but it seemed poised to. Well, it's done. It finally happened. It happened quickly. I was watching on Sunday. They started strong and they just got stronger. Gold futures themselves up almost 2%, up to about 44.68. So the idea of $5,000 gold in the first half or even the first quarter of next year seems totally plausible. But yeah, it's just another good leap, and it's sort of like what happened roundabout here. So what you get is these periods measured in months in this case, where it's just kind of building the base, shaking out weaker hands, and it sometimes you get kind of a false breakout like right here, but ultimately it moved. So what we're seeing today is kind of the equivalent of what we were seeing back in early September, like round so. Kind of a base, and finally succeeds in pushing to a lifetime high. But it's been a very, very good year, very good several years for gold. And it seems hard to believe that not that long ago, this is like $1,000. So up it flies. GLD itself, this was the prior peak on that one. We have just hopscotched right over that. And so, obviously, that's a good thing. And then the miners, the gold miners, having another good day, 3.45% positive, cute little cup with handle pattern, lifetime high. It gets kind of redundant after a while. Prices across the board just doing very, very well. Percentage-wise, silver and gold almost identical today, which is a little out of the ordinary. Lifetime high on this, and getting close to 70 plus on silver. And just a fantastic time here. Back during the Liberation Day mayhem, this was down in the 20s, and now we're approaching the 70s on this. It's bound to sell off some at some point. It's done so time and again, and each time it just sort of consolidates and finds equilibrium and then begins a new rally. So it seems this is all in the context of a long-term bull market in precious. The debasement trade is doing just really well. Here's SLV, the ETF, a lifetime high on this one, and just almost a straight shot up. So we've gone up over 20% over the past month or so on SLV. And as I mentioned, there is a miners ETF for silver specifically. This SIL is also up almost 4%, also at a lifetime high. And our old favorite, the one that I've been obsessed with pretty much for the entirety of 2025, palladium, PALL, is the ETF for that. 2.61% gain on this. It has sold off some from, it was up triple digits on the futures with palladium, up about almost $110. That it's shaved off some of that, got a little ahead of itself. In the best circumstance, I would love to see this thing get pounded to say 140 or so. That'd be a wonderful new opportunity to get in. As it is now, I'm just sort of keeping my distance. It's been just a white hot item, and its compatriot platinum, and this is the ETF also, up very strong, almost 7%. And this was the same instance of just like, this could have, again, a cup with handle here, all this pent up energy, and it finally gets released and it just goes flying. Especially since not that long ago, I mean, everyone knows gold, everyone knows silver, platinum, palladium, hardly any interest at all. They were just, kind of back on the back shelf, and now they are the hottest thing in pants. Okay, enough precious. One other sector that's been very hot lately is basically anything to do with rockets, anything to do with space. SpaceX, which is purportedly worth about $800 billion now, is planning to go public next year and could be the biggest IPO of all time. And everything that has anything with a rocket engine on it has kind of taken some of that shine and sheen with it. And so UFO is an ETF that has glommed together a lot of these satellite rocket companies. It's having a very good day. about 5%. I looked at the components of it and just tried to tease out the charts within there that I thought were more interesting than the others. Here they are. It's very, very heavily traded ASTS. This is AST Space Mobile, and it's up today 13.5%. We've got Planet Labs, which is at a lifetime high, and this had a much cleaner pattern to it with respect to that, like so. So that's PL, again at a lifetime high. SATS, which is EchoStar, and this is looking like probably a lifetime high close on the sats. And RKLB, Rocket Lab, lifetime high, a much younger stock, almost a 10% move just on the day. And one last one, a much, much younger, Firefly Aerospace. And this is not near lifetime highs. It had a pretty bad time of it. Fell from about 80 to the teens, but now it's enjoying some of that love that everyone's sharing for these companies right now. So it's good to be in the right sector. Anyway, just to wrap things up with a couple of last items. This is, back to the whole bond thing, this is the ZB. And we're just down on this, and the pattern's still exceptionally clean. So long as we don't push back into that pattern, it seems to me that the direction on this will be lower. So we're going to stay, I would say, below the high we saw on Thursday. And one other item that merits constant attention is NVIDIA, which has been just a bore fest for months now. But as we go into the new year, it'll be a key item to watch as the biggest company on the planet and as the actual the linchpin to the entire AI tech mania. It's a very important chart to keep an eye on. So that's it for today. A couple more days this week, then it'll be Christmas time. So I'll see you here tomorrow. Bye-bye.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nicky Bat, University of Kansas. Number 20 because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trained 23 hours a day.
Dr. Data, Louisiana State University.
Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
What's up, everyone? Welcome back to the show. This is the last call. I'm Mike. We got Jamal here. we got a weird day. It's been a weird day. You know, it's like one of those Mondays where it's like, who's working in the office? Who's here? Who's out?
It is, man. I mean, this is what happens at that time of the year, though. You know, it's wrapping up. I mean, it's you know, the one thing that hasn't happened yet. I remember when I used to trade when I was young, in the young whippersnapper in the business. This time of year, jeez, about to choke. This time of year, there's some names that just run out of nowhere, just really like make big moves. And that didn't happen today, I feel, unless I'm missing it. Like, well, if it's First Solar's one of them, I guess that's a name that's making a pretty big move today. But outside of that, look, it's the volume is drying up. The milk is gone bad. I mean, ES futures, 774,000. That's pretty light. That's very light, as a matter of fact. On the day, what are the green shoots? Well, Micron is running once again. That stock, wow, that stock is really showing me who's boss. After her, I mean, again, not because I'm losing money in the position, but the little put calendar that we did, I thought for sure that thing was going to go down. It has done nothing but go up. The call butterfly that we talked about earlier on OTCL that I put on. For those who don't know, I have the 6950, 7,070.50 call butterfly in SPX for December 31st, the end of the year, which is not too far away. That's working well today. But other than that, man, it's kind of a quiet day here. The one thing I did do, one of the few things I did today, was I rolled that strangle. As you know, I'm in MNQ strangle. 25 days ago, I decided to roll it early-ish out to Feb. Same put strike, 250. But the upside strike now is 27K. So that's about the only thing I've done today. And I really didn't even have to do that. I probably shouldn't have done that, but whatever. Something to do. Otherwise, I don't know about you, man, but like there's not really any, there's vol to sell. There's a few things you could sell vol. And I did almost talk myself into selling an Oracle Strangle. I backed out of it. I was just like, I don't know. I mean, again, these names still move. You see Micron today. I just don't feel like selling a strangle. I don't think this is the good environment to really sell a strangle, honestly. I mean, with VIX below 15 now, we're due for a point where VIX bounces back. Truth be told, that probably won't be for another 2 weeks, but I might forget about it. And I decided I didn't want to put it on. But I mean, I wouldn't blame you if you put it on at all, because I think volatility is just going to melt here towards the end of the year.
Yeah, I think it's a tough environment, especially if we stay like this. Like we've had a 25-point range in SPX, E-minis up 46, NASDAQ up 123, the Dow and the Russell up as well. Bitcoin actually flat on the day now, interestingly enough. ETH ticked red. So having a hard time staying bid in the crypto space, but we've had plenty of products, futures products moving to the upside. The majority of them are green on the day. A handful of them are up on the day. Silver, gold, leading the charge here with crude oil. You've got corn, some of the ags, corn, soybeans moving to the upside. Natty gas to the downside, 2%. And that's really the only one that's down more than a percentage point. So kind of a broad-based rally today, but like Jamal had said, the range has been so narrow today. It's tough to throw on a ton of new positions. And I'm personally going to wait and see if we get an abnormal move that we're not projecting. Because right now, earlier today, we were looking at the 4-day expected move encompassing the rest of the week, and it was 45 points. Now it is 37 points. So the market is telling us, or implied volatility of SPX is telling us that we should expect to see a lot more chop over the next couple of days, which can work out for iron condors, strangles, what have you. But if you're getting low IV marks and then you get a big realized volatility move, that's where you can run into trouble. So yeah, there's going to be some products that are moving under the hood for sure. Micron, First Solar, to name a few. But yeah, I'm kind of in your boat too. I think right now I'm just leaning on a couple of these positions. Some of them are ticking from red to green. I've got some positions that are near a close, like this SPX Iron Condor. I've got 6,500, 7,100. That one's getting close to taking off here, just over 50% profit. But to that same point, if I think that we're going to chop around here for the next couple of days into next week, I want to have this thing on and just let it decay, because there's I don't have any risk in terms of being tested here, as 68.78 is right in between this range that I have for my short options, and this 9-day position is a bullish position as well that's flat. So just holding tight, seeing if the market gives us some new opportunities. But yeah, it's kind of crazy to see it's Monday and we're seeing a 30-point move for the rest of the week.
Yeah, I want to clarify that too, because you make a good point. I wouldn't initiate any new shorts. If you already have shorts on, just keep them on, man. Like, I don't think you have to worry about anything for now. But I wouldn't initiate any new shorts, especially strangles. I just, why? Why? Because I just looked. VIX, this is going to be the lowest VIX close for the year today, I think, here. 1406.
Wow.
The closest was, from just eyeballing it, the closest I think was August 22nd. I think that was like a 14.17 or something like that. But yeah, I mean, this is the lowest VIX close of the year. And it should be. I mean, honestly, it should be. We've had a wild year when you look back on it. And we talked about the average VIX this year being 19. That's pretty high. There's been other times where it was higher, 25 and 30. Very volatile years. This was somewhat of a volatile year. It was a great year for trading, honestly. I mean, things moved around a lot. You could get in and out, two-sided action on a lot of different things, a lot of different areas of the market. And then right now, we don't really have any catalysts. There's supposed to be GDP coming out this week. Who cares about GDP? We didn't care about GDP during the market being crazy. We definitely don't care about GDP now. And it's backdated, and it's probably inaccurate. So, I don't know. I think about the best thing you can do is maybe find a little. I think this is an easy time to do some biases, directional biases, if you will. Those are probably decent trades, I would say, but I am not initiating any new shorts here. That's for sure. How about oil? 58s.
Yeah,
directions.
Nice move there for sure. But yeah, GDP tomorrow, 7:30 Central, delayed data. So the market is certainly not telling us that we should worry too much about it, because if the market was telling us that there might be volatility around some of the numbers coming out, we would have a much higher expected range for the rest of the week than 37 points. So yeah, it's been a wild ride in some of these precious metals. We highlighted those this morning. Gold up 2%, silver up 2%, platinum though, what a chart. What a chart for the platinum fairy here. But yeah, what is that? 1, 2, 3, 4, 5, 6, 7, almost 10 days in a row. Moving to the upside. 400 points almost to the upside. Crazy. But yeah, lots of sector movement, especially with the precious metals. But yeah, I think right now with the VIX low and markets at highs, it's only natural that you would have a lot of cash on the side, not too much exposure in terms of positions until something changes. Or if you just have core positions in higher implied volatility products, like the year-long strangle for this year in IBIT, I'll stay in this for next year too, just because it was such a good trade this year because implied volatility overstated realized volatility. But still, I mean, this is a low vol environment, and we're still in the 50% handle for IBIT. So you get plenty of premium to take risk in there, and that makes things easier, especially near the end of the year.
I can't believe this platinum is up like 7-8 days in a row. I mean, if we do another day like this with platinum and gold and silver, I probably try to get short silver. Silver crosses like 71 or 72, like strongly. That's definitely a trade I'm interested in. Probably look at doing that maybe. But did you do any bets for the fight? You didn't bother, right?
I did not.
I mean, it seemed like
I'm glad about the outcome. Finally. Because I had placed bets on previous fights, and I'm like, why am I doing this? This is clearly rigged. But then he got his jaw broken. So
I totally got sucked in on the Mike Tyson one. I don't know what the hell I was thinking.
But then you go look back at the videos, and there's pictures of Mike Tyson like about to hit him, and then he pulls back.
Yeah.
So it's like,
Yeah, I don't know.
But yeah, I'm sure it was exciting. But no, I was laser focused on our Bears.
Yes.
What a world.
Yeah, it's
time
pretty
to be
awesome.
alive.
It's pretty awesome. I mean, what can you say? The Bears, they did their thing. They were favored in the game. I won, or 1.5, depending on where you look. Looking ahead at look-ahead lines, which is something I just discovered a few weeks back, we're not favored this coming weekend. San Francisco +3. San Francisco plays tonight, right?
Yep.
That's a good thing for us.
Yeah.
That's a really good thing for us. We got a lot of rest here. Will it be another Saturday game? I'm not even sure. It's that time.
Yeah, there's 2 Saturday games. There's 3 on Thursday. So I don't know what the Saturday games are, but there are 2 Saturday games coming up.
You know what's so funny? We're sitting here. It's a shortened week. I see volatility low, but when you said there's 3 games on Thursday, I was like, "Why? What's Thursday?" I immediately just forgot for a second about Christmas.
What?
In that manner? I mean, not in the manner of like work or anything else, just in that manner of gifts and all that.
Hey, I get it. I mean,
it's funny.
But yeah, Santa Claus. If Santa Claus does not bring us a market rally, although it's happening right now, I mean,
it's happening.
Yeah, it's undeniable. At the very least, he will bring us 3 Christmas Day football games and some basketball games too. Be a nice sports-filled day. But yeah, speaking of shorting platinum, gold, silver, I personally would like to lean into gold if we see this rally continue, just because objectively, silver implied volatility, if you're trying to like buy a diagonal spread or a calendar spread and stay the defined risk debit route, silver's implied volatility is significantly higher than gold. And you're seeing similar moves from each. So with that said, yes, GLD is a $400 price point. But if you can afford to do it and it's within your risk tolerance, GLD IV at 23% is absolutely not reflecting the moves that we're seeing in real time. So this is just a cheap way to get delta when you have big moves in a product that is still only representing a 20% implied volatility. And you can see it in these options. Like a lot of these options 60 days out are $1,000. You can get diagonal spreads on here, especially if you did longer term ones. Whether you're bullish or bearish, like long March, short Feb is a nice way to get a lot of leverage for very little premium. Like this, like a 400, 390 to the downside, or even like a 400, 380. Like you can get these on for less than $1,000. 20 points wide for less than $1,000 is great return if you're directionally right. So yeah, I think that's where I'm going to lean. If this week goes on and we continue to see the precious metals continue to rip, I think that's where I would lean into in terms of developing a short position. Same thing to the upside. If you think it's going to continue, like these are cheap ways to get delta. When a product is moving in a big way, and only representing a 23% implied volatility.
Totally agree. And again, like when you see that GLD chart, GLD, GC, whatever, again, it did exactly what it was supposed to do. It was consolidating. It was generally trending upward, and now it's got a big breakout move. Again, what I'm saying is if I see like a $10 move tomorrow, I get interested in getting a short. But if this thing continues to like do what it's done recently, which is break out and then start to consolidate sideways, watch out. I mean, it's just going higher for the most part. So GLD, when you look at a trending options volume, GLD is number 7 in the whole entire market today, 1 million. I don't think this thing has crossed 1 million too often. So that is really heavy in an environment where, again, not a whole lot of trading's happening. That's a lot right now to be number 7 on the list.
Yeah. And although it's hard to imagine, like you could see this continue when you consider the lack of volatility and activity in the rest of the market. And then you have precious metals just ripping higher. Like you could see a continuation of this big move into levels we haven't seen before. So that's why we're kind of leaning into, we're seeing these moves today, but if it continues tomorrow and into the end of this week and early next week, like that's where I think we're much more comfortable taking a shot at a reversal. But again, if you think this is going to keep going, you can get defined risk in a pretty cheap way, especially with GLD.
VIX 14 and change, bro. Like this is low.
Sad.
This is really low.
Yeah.
Considering the type of year that we've had. And there's nothing that seems to bother the market now. Like it doesn't, jobs report, CPI, they've been rendered useless. I was talking to Chris Vecchio and Ilya Spivak last night, and they're just not the same. They're just not the same right now. They don't know how to handle it. It's really been tough on them. I feel bad. I'm gonna send them some Christmas gifts. Send them like some I don't know.
Especially Ilya. He's our resident bear.
What do you send macro people for Christmas?
I mean, first, if you send him a card, it's got to be like gold dusted or like platinum dusted.
Yeah,
something like that.
True. Yeah, it's true.
Spill a little oil on there, That's a good question. It's a good question.
I don't know, man. I've been seeing a lot. I have been seeing some of those commercials, like silver commercials, though, like silver dealer commercials. No, I don't know. Those are when you start seeing those, trying to get people to cash in their silver and all that. It's getting close.
Yeah,
it's getting close.
Telltale sign.
Yeah. Unless this thing goes full Hunt Brothers style and we see 80 soon, like that'll be wild.
Yeah.
Maybe somebody's been cornering silver for a while. We just didn't know.
Yeah, I mean, we've also seen some pretty big moves in the U.S. dollar. I have a lot of things to say to Glenn next week. No.
Next week. Wait.
I don't know.
Next week.
Maybe.
Next week.
I forget when New Year's Day lands. I think it's
Wednesday.
Okay.
Wednesday. It's a Wednesday.
But yeah, either way, looking at some of these currency pairs, some big moves here. This is by far the biggest loss that I've had in an open position, just being long the dollar against the franc. 3 different tranches, all losing positions. So this was already at a pretty hefty extreme. So we are seeing some craziness here. And if you look at the net change just today, half of these are over 50 or 0.5% move. If you look at the USD pairs, so plenty of volatility here. And just looking at this chart, long the dollar, short the franc, big move to the downside, setting new lows from where we've been recently over the past couple of trading sessions. But you just can't seem to catch a bid here with this old dollar.
I'm glad I gave up on that trade. I was long the dollar. I mean, at different times throughout the year, but I was long more recently. And yeah, it just is doing nothing but going down. And the day after the Fed, I was like, all right, I'm out, because that certainly is not going to help once it cut the rates. But I'm glad I got out.
Yeah, it's been a tough one, but the name of the game for me has just been to have position size super small so I can layer into tranches if I need to, reduce basis that way. But we'll see. This could be another one where you just see this continue to slide in the same direction. Same reason why we were saying, we're waiting for a continuation to rally, a continuation of the rally in silver, gold, platinum to see if we can take a little short stance. But these are the times where weird things can happen when there's a lack of activity in the markets in general. And
that's clearly this part of the kindling on this fire with these metals today. I mean, the dollar getting smacked the way it is.
Yeah. Silver, gold, craziness.
I guess I got to say that is something. I mean, that's what's so complicated about the trade. As much as I want to get short them, that's why I want to see a big, huge spike. You know, like, because again, there's a lot of forces acting on this, and I know the dollar is one of them. The more the dollar continues to fall, that's just kindling for them. They're going to move higher.
Yeah.
Not even thinking about it. But I just, you know, it's probably the most interesting trade right now. Clearly, is the metals. It's been for several months. Still the most interesting trade. That's why we're sitting here talking about it. Netflix. I was just looking at that. I know they came out with a new. Did they come out with a new bid today or something like that? This thing is not a done deal. This Netflix and WBD. Why does Netflix continue to take it on the chin? Whether they're going to buy them or whether they're not going to buy them, they still continue to take it on the chin.
Yeah, it's one of the rare. I don't want to say rare circumstances, but we've seen this before where a stock splits and you think it's going to create a bullish catalyst, and it just has not been the case. Same thing happened with Chipotle. But yeah, I think when you look at the move prior to the split, it was kind of this euphoric move where they were putting deals in place. You thought they might take over, but now it's, you know, clearly the opposite move has happened. We've gone from 135-ish to 93. We're sitting around that same level. We bounced from it a couple of times. So maybe we find a little bottom here, but yeah, it's been another product that has moved in a really big way, but still not sporting a huge implied volatility.
Not really much interest. And I wonder too if some of this move today, not only obviously because of a new bid, but I would imagine the fight didn't grab as much as they would have liked, because there was a lot going on. There was college football on the other night, on the Saturday night as well. There was college basketball on too, actually. NFL game, obviously. I mean, there was a lot.
Yeah, the first time they did that with Mike Tyson, like the servers were shutting down. Like I remember watching and I was like, this is buffering like it's 1995. Like, this is crazy. So yeah, I totally agree with you. And yeah, I think at the end of the day, there needs to be some kind of seismic shift with Netflix to where they can pump this thing back up. But it's been a wild fall from grace here in Netflix. It is Christmas in just a couple of days. If you're celebrating with your families, if you're taking some time off, interacting with your immediate family, maybe some aunts and uncles, we do have the referral program. If you want to scan that QR code or just go to tastytrade.com/referral. I've got it pinned to the top of the YouTube chat as well. But a new structure where you both get $100 if your friend or family member opens an account with us, and you can do this for up to 24 people in a calendar year. So spread the word.
It's nice, yeah.
Get the tasty people on board. Grow your trading community. I know we hear that all the time when we do the live events. People want the community aspect.
Yeah.
What better way than to invite your neighbor? Both get $100. And you can have a trading feud with your neighbor for the next 20 years.
9 days left. Yep. 9 days left. Don't wait. Do it now.
Yeah. New year, new you. You know?
Yeah.
But yeah, I'm scanning through the YouTube chat, seeing if we have any last minute trade ideas, questions here. But yeah, it's been a kind of a quiet snooze fest of a day.
Yeah.
The trading range from the afternoon to now has been like nothing.
No.
It's been crazy.
Yeah, it really has. And honestly, this is what I would expect, but I'll take it. I mean, as long as we're drifting higher, I will definitely take it. I don't mind it at all. But this is not surprising in any way, shape, or form. Again, at least it's like 40-something points and we're moving higher. Oh gosh, I'm not even going to say what I would not like to see. If this is what happens, this is totally fine. And then when you look at just breadth too, like as far as the market, most stuff is green. What I'm looking at, obviously, a lot of tech, a lot of financials are green. Healthcare is green. Obviously, oil names, energy is green, except for nat gas related stuff, of course. But industrials are green. When you talk about the Boeings of the world and the GEs of the world, one thing is Walmart and Costco. Those things are not green. Neither is Starbucks or Nike. So
Target.
those type of names are down today. I also noticed WDC and STX, newer additions to the S&P 500, are down today as well. So there's a couple of things that are down. Apple's been down most of the day. Again, this is one of those stocks where we thought Apple was dead in the water, especially with all the tariff stuff, and then they just kind of went on a run in August and haven't looked back. But a little bit weak more recently. So, you know.
Yeah, there's always opportunities in some of these stocks. I mean, Costco really stands out to me. This thing was like all but guaranteed to have a stock split staying above 1,000, and now we're sitting at 850. So, you know, not much has materially changed here, and this could be one where if you do start to see more of the inflation concerns and slowdown in growth overall, like your Walmarts, your Costco's, your McDonald's of the world, like those typically catch a bid or can catch a bid in those sort of environments. So yeah, I'll be looking to dabble in here. I am in here right now with a shorter term calendar spread at 910. So I'm long January, short to December 26th this week. I need a rally in there, but still a decent amount of time. I mean, mid-January, a lot can change, and it's only 50 points out of the money, which is just outside of the implied move, given a 2 IV rank. So that implied move can change as well, especially if we start to see some bigger market movements.
Yeah, I feel like that whatever that lawsuit is kind of the overhang right now. At some point or another, if there's some clarity on that, I expect the stock to turn around.
Thoughts on an SLV calendar put spread? Yeah, so going back to SLV, we want to see a continuation of this move before we try and step in front of it. I think there's certainly reason to believe that you could get a reversal in the next day or two. But yeah, these are super cheap. I mean, if you go to like the expected move, which is typically what I do, is I'll go to the expected move in the near term cycle. So I think anywhere between 56 and 60 is fine. There's the bell. Wow, time flies. But yeah, if you just go to like the 60 for long Feb, short Jan, you can get into this for $1.50.
Like that.
But yeah, super cheap. Implied volatility isn't too bad in there. But yeah, hopefully you enjoyed this narrow trading range. Someone was looking at SPX iron condors. I think those are totally viable too.
Yeah.
You just got to be careful with the sizing on those, because if you get a 30, 40 point move tomorrow, that's not reflective of implied volatility. So yeah, either way, we'll be back. Same time, same place tomorrow. You can join us in the morning. Full trading session, full trading day tomorrow. But yeah, thanks for tuning in. My name is Mike. I'm here with Jamal. If you want to find us on Twitter, I'm at Trader Mikey B. Jamal's at Jamal Chandler. Stay tuned though for the rest of the content the rest of the day, and we'll see you tomorrow. Peace.
Overtime on the way.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
When the market moves, traders need to move faster. tastytrade Active Trader tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Stocks gap open higher and stay there on thin volume. It is Monday. It's December 22nd. It's still 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak's in San Francisco. We're here to take you through the remainder of these 30 minutes as we wind down the trading session. It was a Monday where we see stocks rally across the board, led higher by your Russell 2000. Ilya, small caps up 1.16%. The NASDAQ, the laggard, up only about 0.5% there. Russell leads NASDAQ and Dow Jones lag up by 0.45% for the latter. Your S&P is up about 0.65% here, 69.31 as we turn to the screens. It's a day where the market gaps open and runs and then kind of just sticks there in the second half of the U.S. trading day. But the news, of course, is that volatility continues to come in, a trend that began the last week on the other side of the CPI and NFP prints continues into this week with the VIX closing at a paltry 14.09, Ilya. Likewise, VIX futures in both the F and the G expiration cycles closing here at cycle lows. So volatility continues to come in. Is that increased optimism? Is that the absence of fear? I think you would say it's probably the latter in the short run. But what we see today is, of course, a not so great 2-year auction, and treasuries ultimately weaken over the course of the session at the long end of the curve as well. We'll see NZB a touch softer. That stands nothing to say about what happened in the metals market, where you have your gold pushing up to a new all-time high, your silver pushing up to a new all-time high, your copper in London pushing up to a new all-time high. Can't quite say the same thing here for our HG contract yet, question mark, hopefully. But that's kind of where we are. Metals mania is defining the session with all of the metals jumping up to multi-month, multi-year highs here, Ilya. The question is, what's next for gold? I can't say I'm surprised this happened in a thin session here, but that triangle breakout we've been watching for, waiting for, finally materialized. Where do we go now? 4,500, 5,000? Why not?
Why not? I think is the right attitude to have here, because we're in uncharted territory, and we've been in uncharted territory here in the run up into those highs from October. And then the question was, well, this is surely astronomical. And both you and I might have retorted at the time, why? Every time you have a record high, you have a record high, and then invariably you end up in a place where you haven't been before. This is the nature of trending markets. So I don't see a reason why we might look at this breakout as any other, only because we're breaking out to record highs. The fact of the matter is we had that top from mid-October. It was some sort of a sentiment exhaustion point, and now the markets have pointedly cleared it. Now, volume, to your point, is low, and what we see is as very paltry on even something like a benchmark ES future today. I mean, the March contract
is clear 1 million contracts.
I mean, this is laughable. There's nothing going on here. I mean, this is the least that we've had in the March contract in terms of turnover since December 11th.
Sure.
Which is barely when that contract came alive. So
Frank actually pointed this out. He said low volumes were everywhere today. SPOO's might not hit 1 million, and 918,000. I don't think we're going to get there by the end of the close. SPY only 8 million. Q's only 4.5 million. Tesla, which has been strong in recent sessions, it continues to be a point of interest for obviously many traders as another 1.59% gain, only 2.2 million today. NVIDIA, 1.5 million options traded today. That added a 1.47% gain as well. Apple, there was some action in there, but
overall very thin.
Really, overall very thin. You're not seeing anything substantial.
And you might presume that if this is the tenor of the overall market, gold is not different. And so can you put all the weight behind a breakout like this that you would were conditions fully liquid? No. This is maybe something that runs ahead of itself, maybe something that is vulnerable to a backfill. Okay, but does that mean the move is invalid? Not if the trend has been doing what it's been doing for months now. So I wouldn't necessarily say that this is the breakout of all breakouts, but I also don't think that this is any reason to get off the long side. And if anything, to look at maybe some sort of a snapback reaction lower, maybe in early January when volumes come back, just as a mulligan to buy some more.
I would not mind buying some more. Ilya, we closed out a position that we've been trading in gold today in the follow account, which worked out oh so beautifully. Put it on for a $10 debit back on November 10th, took it off today for a $47.50 credit. That's obviously more than the typical 21-day cycle, but we were playing for that because I think a good portion of our focus last week was centering this conversation that really began on Futures Power Hour on Monday about multi-time frame analysis and the Druckenmiller methodology, which for those that weren't here last week, didn't hear this, maybe this is brand new to you or you forgot. Either way, look up the conversation that he had with Citi's FX team in 2009. And in particular, he talks about how he looks through certain charts. And really, you don't need to trade everything. You need to trade a handful of things that look really, really good and trade them consistently in order to make a good deal of money. He says that, there's thousands of companies out there. He focuses on 25 to 30. But the multi-time frame analysis is such that when you're looking at his worldview, he basically applies an 8 to 20 multiplier for any time frame he's operating on. So if you're looking at the daily chart, this is really going to influence price action over the next 8 to 20 days. Weekly chart, next 8 to 20 weeks. Monthly chart, 8 to 20 months. Okay, so consistent with that, we have been looking at this 4-hour chart where we had seen this consolidation, a triangle. Ilya, after a breakout, bottom left to top right of your screen is typically a continuation pattern. If you were to spend your time on one of these chart training sites or look into the data, triangles like this break out to the upside like 2 out of 3 times, maybe 70% of the time. And so, we were playing for that and looking at the 4-hour, we had a 1 to 4 day window for this to come together. We make our first breakout attempt on the 18th. And 4 days later, we finally achieved that breakout. So it was a very textbook setup. It was a strong market all year long, right? You want to bet on the winners continuing to be your winners. And when you see continuation patterns in a market that's been at the top of the leaderboard, you have to stick with it and kind of trust the process. For 76ers fans out there, you know what I'm talking about? Not that it actually worked out for them, but you got to, stay mechanical. And if the system calls for it, you got to stick with it. So in terms of gold staying up here, right? I only took off half the position for what was at 1 DTE. I'm absolutely sticking with the remainder of it that's sitting at 36 right now as it moves into the money. The uptick in volatility today in both gold and in silver, you have to like it if you're a bull. It's been the defining feature of the market when it moves up to new highs. And what else is there to say that until this trade breaks down, there's no reason not to continue to treat this like a momentum trade moving to the upside, as long as it's structured properly and you're timing it well within the various breakout channels.
Yeah, I mean, if you look at this now, you have a very clear stair step with a very clear invalidation point. So it's pointing up until it's not. And the invalidation point on that gives you a framework for risk reward. So if you look at the prior swing high, so essentially a little bit below where we're currently consolidating, the swing high from earlier this month, you're somewhere in the mid 67s. And so right there is your invalidation point and your level against which you might measure risk reward and say, okay, if I'm relatively close to this, then that's decision time. And if I'm in a move higher, then the closer I am to it, now, of course, after a couple of days of consolidation, we also have a high. We can say the closer I am to that underside, the better my risk reward to enter a long position here. And then if the level cracks, well, then I'm wrong. And that's okay. And I have a very clear signal to go the other way. And not only to get out of a long position, but to flip it over. So it's very clear cut in markets like this. You have a very clean set of parameters. You just have to wait, in my mind, to get the risk reward set up correctly. And if you can do that from a price perspective, with an IV rank of 86, you could even do this by selling puts as long exposure. Because as we know, in metals, vol seems to go up on the way higher. So in some ways, if you were to look for some sort of a lower impact way of saying, you know what, okay, maybe I think this move is a little extended, whatever. I don't think there's any particular sign that it is. But let's say you look at how far it's gone and you go, you know what, this is crazy. This has done a lot in a very short amount of time. Why don't I sell a put vertical here if it gets to a good risk reward spot nearby that support? What that does is it basically gives me a little extra cushion, because if it does break down, vol probably comes down also, and so I lose less.
That's a really important point here. It's like when you think about selling puts in the S&P 500 in a low vol environment and the market's moving up, if this thing turns lower and vol increases, you get double tapped both ways. The vol expansion, right? The options cost more because of the volatility component. They're increasing in value. And then directionally, you're getting closer to being in the money. You're less out of the money. Maybe you're going deeper in the money. And it's problematic, right? Yeah. So metals, on the other hand, we've seen the pullbacks, even the consolidation here in early December, right? When the market moves sideways for a period, vol comes off the board. IVR's 80s down into the high 40s there. And then once we start breaking out again, vol starts moving on up. So if you were to sell puts, I mean, right now on the screen here, I had just sized up at 64 DTE, a short 67.5, 67 put spread. It's basically a 1-to-1 risk to reward. Given the buying power that's required right now, it may be a little bit rich for the typical retail trader. Maybe SLV is the better way to express this view, which can be a little more fine-tuned for one's risk parameters. But
I've generally been inclined to use ETFs a little bit more with how choppy these markets have been, just to get my size a little bit lower and a little bit more comfortable.
Oh no, I'm now we're now shooting for year-end, percentage targets on this account, Elliot. I need to trade bigger products to achieve those goals.
That's music to my ears, because we all know how chasing ends, and I'm on the other side of risk sentiment. So this is going to be a flush into the year end.
I'm not chasing anything here. I'm just riding the wave, my friend. Speaking of riding the wave, I couldn't help but notice today the silver S&P ratio increased to 0.09. Wow, that's really high, right? In fact, it's not really high. It was higher in August of 2014.
Yeah.
And it was higher from August in 2014 and every month that preceded that, from October 2008 until August 2014.
Oh, by the way, what do we know about August 2014?
That was a great time. Gold.
That was the beginning of the Fed's rate hike cycle. Coming out of the crisis.
gold S&P ratio hasn't cleared its October highs. In fact, it hasn't cleared its 2025 highs yet. If it were to do so, that would put its level at the highest since March 2020. But even so, March 2020 was only the highest that we had since February 16. The gold S&P ratio right now is 0.5961. Okay. At its highs historically, it was 1.64, excuse me, right after the global financial crisis, summer of 2011, Ilya. What a fun time that was after. But the point is, why is gold going up? You could make an argument that it's undervalued still. And if you're a central bank, China obviously has to modernize, and they're doing the whole thing of laying the groundwork for an alternative payment system, settlement system outside of the confines of the US dollar. And they've learned that no one wants to use the renminbi, so they have to do something like gold. Fine, so be it. But thinking about 2026, I see some of these uptrends in a market that, Ilya, could I argue here that gold hasn't done anything in 2 months, and it finally did something for the first time in 2 months? Yeah. It did just clear new highs that were established on the 20th of October. So maybe this is
that was a long digestion.
Maybe that was the digestion like we had over the summer, where we had this big leg up and then several months
talked
of
about this
sideways.
By the way. We talked about this. This was the same idea then as now it seems we're seeing here, which is you look for the places to be long where you can get it, and you look for vol extraction because it tends to come down on the way down in metals.
Only a $5,000 Fibonacci extension from our last swing low in the consolidation in August, highs in October, final low that we have at the end of October here.
I'm not mad at it. I'm looking at this not as a story about the dollar. I'm looking at this not as a story about yields, because we very clearly diverged from those things in the past year. I'm looking at this as a speculative narrative. So when you say it's undervalued, it's worthwhile to make clear, I think, there is no fair value for gold as such. It's not like a company where you go, oh, dude, let's discount these cash pull-ups. Like, that's not what we're talking about here. So as long as there's speculative appetite that thinks it can be more valuable, then it can be more valuable.
Ilya, I am looking out to the April 27th expiry, 126 days from now, because in part that is the deepest that we can go on the options chain at present time. But if we were talking about a market that could potentially move up to 5,000 or so, it's a 20% chance, risking 1 to make 4-ish. 126 days? It could be better, could be worse. Could be what we need to do to add into the gold position here.
You won't be held back, ladies and gentlemen.
We stick with our winners here, and if this triangle is breaking out, whatever form or fashion it may be breaking out in, that's something that I want exposure for. And if we're going to be a little bit more aggressive, right, we just follow the trend that we've been in since August. That puts us at 5,000 by the middle of March. $500 from where we are right now, we'll call it 45 to be just even. That's a 9% rally, or excuse me, 11% rally. Mm-hmm. Okay. 11% over the next 2.5 months, call it 10 weeks, 1% a week. Could we see gold pacing at $40 a week for the next 10 weeks? Yeah, because that's what we've been doing for the past 2 months.
Mm-hmm.
Why not? Why not live a little, Ilya? Treat yourself to some gold this holiday season.
It's not as though I am not long. I am. At this point, I'm holding the 1 ounce G6 future outright.
Mm-hmm.
It's doing great. And I'm going to be adding possibly today. The great thing about futures markets, they work overnight. So I'm in no kind of hurry. but I might be adding to the position today because I think clearly there is some kind of a breakout situation that could be happening. And even if it takes a significant haircut when liquidity comes back, that in my mind is just going to be an opportunity to maybe add a little bit more. I don't think there's any reason to overthink this.
I'm not certainly doing much thinking at all these days when it comes to the metals, and it's serving me well. In terms of thinking, though, let's think about the sector performance in the last few minutes here. We see of the 25 sectors that we like to track here on overtime, 21 of the 25 are in the green, led higher by your gold miners, GDX and GDXJ. But in terms of the actual companies that aren't riding the commodity boom, you have telecoms, which have been a really strong performer in recent sessions, Ilya, particularly the past 3 days. This is the third straight day for the S&P, in fact. They said buoyed by the AI trade, according to CNBC here.
Sure.
But telecom, metals and mining, oil, services, crude oil had another big session today. Futures Power Hour, I'd encourage people to go back and listen to the section on energy. I did a little modeling exercise with ChatGPT, Ilya, to see like what a supply disruption could look like coming out of Venezuela. And, the answer may surprise people. So head over to today's recording and go check that out. But you'd have the oil services companies trading higher. You have the banks trading higher. Ilya, it was a day where rates weren't down. Rates were up across the curve. The banks just closed at a new all-time high. And volatility is closing here below 15. Is this just the state of the market now? We're in the Santa Claus rally window. We have this 1.3% gain, as our friend of the show, Ryan Detrick over at Carson Research points out. December has been kind of like a typical seasonal year. This is where we were entering today. This is where the market typically is. Like we were up 0.3%. The market's typically up 0.5. We did a little bit of that catch up. We're now in the window where the market tends to rally a little bit more. Should we just learn to stop worrying and love the bomb here as 2025 comes to a close?
That could be. I think we forget that we still have a little bit of macro data on this calendar because we have third quarter GDP numbers coming out as the only kind of pitfall this week. And we know how jumpy the markets are on anything Fed related, and we can see how thin these volumes are. Give me some thin volumes tomorrow and a GDP number that people don't like. This will be the first look at the third quarter. We haven't seen anything before because everything else was derailed by the shutdown. So give me a number that's untoward and thin volume. Who knows what can happen? But maybe you can explode higher. Maybe you can explode lower. It's a bit of a powder keg here in the last 24 hours of real action for the week.
What's the most surprising thing about the market right now? Mag 7, by the way, starting to get a little bit of a breakout type of condition there, Mr. Spivak.
That's not a breakout for those of us that look at horizontal levels. That's just a retest of the former high.
Ye of little faith. What's the most surprising thing about the market right now? Because for me, I think it's the way that volatility is behaving.
I think it's that. I think it's also that if you look at what's going on in bonds, the term premium is blowing out again, which is not what you want to see. You're seeing yields do what they're doing for reasons that you generally don't want for them to be doing it. So if you look at what's going on here in sort of the most recent view on the composition of the 10-year yield, I think that the thing that really kind of makes one scratch your head as you look at stocks looking as buoyant as they are, you're up to the highest level on term premium since September as a share of the 10-year yield. Meanwhile, break-evens are anemic. The real rate has been stable for at least a few weeks. So it's looking like the market may be sniffing out something, or is certainly somewhat confused as to how we're going to go through these next several weeks and months here, because I mean, this is not exactly the shortest term duration. This is the term premium rising at the 10-year tenor. Now, granted, that's also the benchmark, but also it's not exactly the 2-year or the 5-year.
So I'm looking forward to next week, Ilya, when we can say earnestly that it's not just, oh, Powell's going to be out of a job next year.
Yeah.
Right. It's that next week you're going to start to the psychological framework, the mindset of being in Powell's this is Powell's last full quarter as Fed chair. Powell's no longer going to be Fed chair at some point next quarter. That's a different world than where we are right now. It may not seem meaningful. I think it's meaningful for the market because then again, everything Powell does or does not do, he doesn't cut rates. We can explain. I am more than happy to make excuses. And I think a lot of other people would be too, saying like, we're going to get one come May anyway. Don't worry about it.
I mean, this will be the interesting thing, right? What happens when the chairman is the dissenting vote?
If he leaves. There's talk that he may stick around as a governor.
But no. I mean, what happens if the board votes against the new chair?
Oh, yeah.
If the new chair is super dovish, whichever Kevin, the president, decides to pick.
I personally don't think like a Warsh or a Hassett's going to come out and be like, guys, we got to do 100 basis points of cuts. That's the only option on the table.
No, but
nothing or 100.
But if they want to do 25 on a given month and the board goes no, we might have to start getting used to that.
Fun. And then maybe the longstanding rule of like the 55% threshold for the Fed funds pricing.
Mm-hmm.
Maybe that breaks. That would be just terribly,
man.
just
fun and excitement. Fun and excitement.
Just would not enjoy that.
Maybe that's why the term premium is up.
We have one more day here on overtime before we take off for the holidays, at least for the first section of the holidays, because Christmas, but Hanukkah's already going on. I don't know where I'm going with this.
Last day of Hanukkah was yesterday. Last night.
There you go. So then phase 2 of holidays, I suppose. We don't really count that around here, but we're just going to stop talking. So overtime's out of time. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, always after last call. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. Stick around, though, because Ilya's sticking around. He's here for Macro Money up next.
You there, everybody.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
show. Watch me go, 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 go. Watch me go, watch me go. Start the show. Start the show, start the show. Watch me go, 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 go. Watch me go, watch me go. Start the show. Start the show, start the One foot in front of the other, put your best one forward. You've got everything that you have ever wanted. It's already the best day. It's only the rest of your life. You've got the hair, you've got the style. Don't even care, you'd walk a mile in those high-heeled shoes and your velvet suit.
Well, the markets do find their way higher, but does it mean anything? And is the year already effectively over? That's what we're going to try to figure out here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And what we'll do first, as ever, is take a look at what the price action was looking like last week, what it ultimately produced in terms of signaling, and then from there, see if we can't make sense of just where are we here, and consider if, in fact, with a very shortened international market week this week, of course, most major markets are going to close for the Christmas holiday, and then a brief interlude followed by the same sort of abridged week next week for the New Year holiday, and frankly, a broader closure there, because that's going to capture even those markets that don't close for Christmas, the few like Japan or China. So when you look at sort of the sweep here, it begs to ask the question, is the year already over? Have we already gone where we're going to go? And are we just basically listless at this point until January? So here's what we did with these markets last week. We can see here there's a relatively soggy showing. S&P 500 down 0.1% ultimately. It was certainly something that looked meaningfully worse, but it ended up being relatively flat after we rallied back in the second half of the week. But we end up with essentially a goose egg. A little bit better on the NASDAQ, up 0.4%. Yields came in 0.9% down on the 10-year, 1.1% down for a second week in a row there for the 2-year. Crude oil came in a bit, and that continues to basically march to the beat of its own drum. There's a bunch of geopolitical crosswinds that nevertheless have left it somewhat stable, where on the one hand, it seems like the markets are looking at those geopolitical headwinds and saying, okay, we're not prepared to take this below the levels that made for a bottom in early April, which is where we're hovering, give or take, at this point. But we're also not prepared to be buyers, because it seems like we might be looking at a supply glut going into next year against the backdrop of softer demand overall. And that seems to be a broad view across many different forecasters, including sort of big international organizations like the IEA and even OPEC. So when we look at sort of the sweep of this, crude oil is basically pinned in place. Gold, though, continues to power higher. That's a speculative narrative that still seems to be alive, up for yet another week, 1.4% last week. And at the start of this week, again, powering to a record high, taking out those highs that we had in October. The dollar steady against the euro last week. The yen comes down. That's after the Bank of Japan gives a kind of lukewarm rate hike. That seems to be mainly a localized story. They do the hike, but they seem to suggest in the language that maybe there's not much scope to really keep going at a pace beyond what was already baked in. The markets had one more rate hike on the menu for all of next year, and BOJ didn't really seem to suggest that they have appetite for anything else and are generally sort of going to cool their heels here. It's not surprising, of course. The new prime minister of Japan is highly allergic to rate hikes. She's a protege of former Prime Minister Shinzo Abe. So as we look at this, this is Prime Minister Takaichi Sanae. She's not at all keen on the Bank of Japan raising rates, it seems. They got this one rate hike out almost in defiance, but how much more they have of that seems limited even in their own telling. So the yen got a little bit of a whack last week. Bitcoin continues to sink, which sort of undermines the overall risk appetite vibe. Bitcoin sort of the outer edge of the speculative appetite spectrum, and that appetite seems to be continuing to cool. Meaningful 2.7% decline last week. So that's the breakdown. And of course, this happens against the backdrop of a sort of catch up in U.S. economic data where we get the jobs report. It ends up looking weaker than expected, which seems to give the impression that the Fed has the ammunition that they need to continue to cut rates. But it's the kind of report that gives the markets on both sides of this argument everything that they might want to make their argument. And so if you heard Powell speak the prior week, he said, we think the labor market, once you adjust for overcounting in NFP figures, is losing on average about 20,000 jobs a month. That's against the headline figure of 40K in gains on average and a 60K haircut for overcounting, netting out a 20K loss a month. This is why we're cutting rates. We think the economy is in sort of real kind of adjusted for overcounting terms, is shedding jobs and inflation isn't getting worse. So we need to recalibrate what our trade-off is between the focus on keeping inflation in check and maximizing employment away from a more singular focus on inflation and toward more focus on employment. So far, so good. And when you look at the 4 months that were updated in this jobs report last week, you end up with, for those 4 months, the run rate of job losses is more like 50K once you do the Fed adjustment for overcounting. That seems to think the Fed should go harder and should have no barriers to cutting rates, because if they thought the economy was shedding jobs at about 20K and it's actually shedding them at about 50K, well, then maybe the labor market is deteriorating faster than they thought and it's time to go. But at the same time, you've got a situation where if you take the whole year in the average with these 4 months that got updated, then you're actually losing jobs at only about 5K a month, which is only about a quarter of what the Fed is worried about in 20K estimate. So the question then becomes, okay, well, is it worse or is it better? Is there more impetus to cut or less? When the answer is we don't know, and neither does the Fed, and this is why they're so cagey about details and why they're attempting to walk this slowly, with Powell telling us, hold on, we don't need to rush. We're in a good level for the Fed funds rate to take our time and see what happens for a while. And this, of course, the markets don't want to see, which is why we get this kind of soggy response. Note here, that's the aftermath of the jobs report. This is, of course, the S&P 500, which we're using here as a sort of general barometer on risk sentiment. Then the second half of the week is a focus on inflation data, which also gets backfilled. And there, we get a rebound to kind of come back into the underside of this range. And this is how we end up with a goose egg for the week. Because all of this selling then gets erased, and we essentially end up exactly where we left off the prior week when the markets reacted to the Fed policy announcement right here, which, of course, the markets didn't like for the same reason they didn't like the jobs data, because it didn't make future rate hikes, or future rate cuts, rather, look like something that was more immediate and more in line with market expectations than what was on the menu beforehand. And we can see that here. The market still wants at least 2 cuts next year. That's 56 basis points. So at least 50 basis points in cuts would be 2 standardized to 25 basis point reductions and a slight chance for a third. At this point, that likelihood is relatively small. 6 basis points out of 25 is, needless to say, a minority opinion. Only about a 24% chance there that we're going to get a third cut implied. But that's still quite a ways away from what the Fed forecast is. A step down of just 25 basis points. And to add insult to injury, this is unchanged from the September forecast. And so the markets are saying, well, you know, we didn't like it in September. Maybe change this. But the Fed says, no, we don't have enough confidence to know where we're steering. Here's the obligatory nod to we intend to cut by some amount, but the most we'll put on the board here is a single cut. And so this is where things get interesting. Because if we look then at the response, this is how this dynamic seems to work its way through the rest of the week. Once we get CPI out, we end up with perhaps at least nominally a reason to diffuse these concerns around the jobs report, but only just. Because if we look at what comes out then, CPI is weaker than anticipated on both headline and on core. A 3% reading was expected all around. Instead, we got 2.7% headline, 2.6% core. So ostensibly helpful for Fed rate cut expectations. If we look at the makeup of these numbers, all the right things seem to be occurring. Of course, we can see most of inflation still lives in the service sector, and that part seems to be going down. That's consistent with what the Fed was telling us, which is that at this point, most inflation is a function of the tariffs and what's been going on in goods. But that's a small contribution to the overall total. And if the Fed is right, then come the first quarter of next year going into April, that should rebase out of year-on-year calculations in CPI, and so should fall away. Now, if we look at what the contribution is here from the goods side, that seems to be, give or take, a quarter to about 0.3%. So if we shave that off here, then we're looking at something like inflation at the sort of lower end of the mid twos. And if that's where we are, actually, and this rebasing works at the same time that disinflation on the service side continues, well, then the Fed is indeed within striking distance of their target, which is exactly what they're looking for. And the trajectory here does seem relatively favorable. Service sector inflation is, in fact, on a slow but steady decline. Goods inflation does seem to be flattening out here. At least it's not getting worse. Not surprisingly, it has been building from essentially nothing into positive territory with the tariffs. We can see that here. Goods inflation was negative into the end of last year. But starting now at the beginning of this year, and thanks to the tariffs, clearly there's been an upshift, but it does seem to be finding some sort of a leveling off. And of course, housing has been going down for quite a while. So all of the things that we might expect to see here ostensibly are here. Now, why then don't we get further last week? Well, and this is really the question that puzzles us this week. Because as we look at what is going on here, we can clearly see the sensitivity. So the markets get the jobs data. It's a little fuzzy. They get inflation data. It looks like all the right things. We end up, broadly speaking, unsure of where sentiment is going. What are we going to solve here on this front this week? Well, the one bit that seems particularly standout on this very abridged week, not surprisingly, we can see here, very little on this calendar. And of course, it all tapers off considerably from Wednesday onward, because most global markets are going to be closed. But we are going to get a look at third quarter GDP data. And of course, that's likely to subsume a lot of everything else that we're looking at and give us a clear sense of where this story goes. The expectation is that we're going to come down from 3.8% annualized growth to 3.2%. Why is this important? Well, straightforward enough. We know that consumption is the single largest component of GDP. And we know that the Fed is primarily concerned with the labor market and with inflation. And if we're starting to finally get some sort of synchronized momentum there where the labor market is weakening and inflation is weakening at the same time, well, then the Fed's hands are untied. It should be cutting to boost this, which is by far the largest component of GDP at north of 60 and closer to 70%, with everything else almost an afterthought. Now, if we look at this breakdown as it's looked recently, we can see that in the first half of this year, this contribution from consumption, that big component to overall GDP, never mind all these shenanigans with front-running the tariffs where inventories surge, imports surge, then inventories come down, imports grind to a standstill. As we calibrate around the unveiling of these tariffs in the first half of the year, as all of that noise goes up and down, consumption is the weakest that it's been since back here. This is essentially the second half of 2022. Now, what do we know about 2022? That was the year that the Fed went on its epic rate hike cycle to fight inflation and really clamped down hard on the economy. So, as we look at this here, then, the worry is that whatever we saw in the third quarter, on the one hand, could be very soggy. And then we would see, well, do we get this kind of a rebound in consumption once it seems like the Fed's rate hike cycle goes over, which was here? Or don't we? In this case, it would be perhaps a story of rebounding sentiment, perhaps a story of those rate cuts starting to get absorbed, but we don't know, and we won't see. And we'll see to what extent, but by the way, the weaker dollar either flatters or hurts this situation. Of course, the dollar had an epic sell-off in the first 6 months of the year, and that does not help U.S. Purchasing power of imports at a time that those imports are also getting hit with tariffs. So we'll see what that looks like in terms of hurting consumption, because that, of course, on the one hand, can be something that in its resilience tells us that maybe the Fed is not in a position to cut as fast as the markets want, or is so weak that the markets get upset with maybe recession risk. So there's a very narrow kind of Goldilocks thing here where you don't want consumption to be so strong that the Fed is led away from cutting, and you don't want it to be so weak that the rate cuts are coming for the wrong reasons from a sentiment perspective. Which is what makes this particularly interesting, because as we saw with the CPI data, there is some question about its veracity. As we discussed last week, you tend to see a pretty close relationship between the Fed's nowcast of CPI and the official numbers. They tend to come very, very close. In this last set of data, no doubt thanks to the government shutdown, we had the biggest deviation from this nowcast for the realized numbers since COVID, which of course was a nightmare for data collecting around the shutdowns. And the biggest deviation for the headline since back here in early 2023. So the quality of this data may not be all that great. In fact, Powell warned about that when he spoke after the December FOMC. So we're in a situation here, seemingly, where we're going to get this data. It's going to tell us something relevant, but it'll be a question of whether the markets buy it. And so there seems to be a lot of risk tied up in this one number, and all that around already significant decline in volumes. We get a pop higher here into this familiar congestion area where we've gotten stuck since really the middle of November. And what we find is we get here on some of the lowest volume we've seen for this benchmark March contract for ES. So very dramatic decline in participation already. this is the kind of market where moves can be easy come, easy go, because it's not that difficult or not as difficult as normal to push the price around. So with so much baked into this GDP number in terms of its relevance for the narrative, the worrying bit might well be that you get some sort of number that the markets don't like, but what constitutes the markets on a day like tomorrow might be a very small subset of participants, relatively speaking. And against that backdrop, you could get a very violent response in price, not necessarily because of great conviction, but because there's a headline and there's lots of gaps in liquidity. So the year is perhaps not quite over yet. We could very well see some erratic behavior here as the week winds down. Now, very briefly here in terms of exposure, I've not changed much of anything. I am staying long gold. I'm on both sides of the US dollar here, though I'm inclined to take this Aussie off here because it's looking like maybe momentum isn't there, and stay short the dollar here against the pound and the euro. I'm still a little bit short risk via a put vertical in IBIT, that's Bitcoin, and spread over the major indexes, the NASDAQ, the S&P, and of course, the latest addition as of last week, the put vertical in the Russell. And that is macro money for today. As ever, we are here Monday through Thursday, except of course this week where we are here Monday and Tuesday only because of the holiday. We follow Overtime, a show I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Likewise, writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money will return tomorrow. Happy trading.